Hi students, I am Prakash, Chartered Accountant and acting as academic advisor in Masterminds from the past 20 years. Here is a short video introducing matchless Masterminds briefly for the convenience of the students who came to this channel for the first time. Masterminds was established in the year 2002 and has been acting as a reliable platform to offer coaching for CA and CMA courses. Masterminds is undeniably the pioneer and the leader in MEC, CEC, CA and CMA courses with nearly 20,000 admissions per annum. This is an incredible initiative by three edupreneurs, namely Mohan, Radha and Prakash, that is me. All three qualified CA at a very young age of 21 years and started this organization under the mentorship of my father, Mr. M. Siv Prasad Garu. So Mr. Mohan is my brother and Radha is my sister-in-law. And by the way, it's me, Prakash, Chartered Accountant. So here are the courses for which we offer the coaching. We offer coaching for MEC, CEC groups exclusively at intermediate level. And we also offer integrated coaching for MEC along with CA-CMA Foundation. And we also take exclusive admissions for CA-CMA Foundation or CA-CMA Inter. And we also offer coaching for CA-CMA final level as well. Recently, we have started a unique academic program at intermediate level, that is MEC Pro, aiming for the students who want to pursue BBA or MBA or CLAT courses in future rather than CA or CMA, and we have received a huge applause for the same. So 20 years of experience, and we have finished more than 155 batches of CA or CMA Inter in Guntur alone and similar number of batches in all our branches together. So till now completed 17 batches of CMA Inter and 18th batch is going on. Successfully completed 25 batches of CA final till now and 26th batch is running now, and we have also successfully completed 4 CA or CMA final batches in Hyderabad. So till now our students are able to achieve 990 All India ranks at various levels of CA-CMA courses, and our students are able to achieve first rank for 48 times in various courses for which we offer coaching. So in a single year our students are able to achieve 3 All India first ranks in the year 2020, and till now our students are able to achieve state first rank at MEC intermediate level for 18 times, that too 8 times in a row. In a single attempt, our students are able to grab 98 All India ranks at CMA Inter and final results of January 2021 and our All India ranks in February 2022 CA results. And here are the 10 All India ranks in CA final results of 2021 alone. And till now our students are able to secure 93 All India ranks at IPCCR CA Inter level in the last 9 years. And here is our physical presence: Guntur, Vijayawada, Hyderabad, Amirpet, Dilshuk Nagar, Vizag, Tirupati, Kurnool and Rajahmundry. And here are the locations where we have branches, and here are the contact numbers. Here is the list of our physical presence and here is the list of our online presence. And for your kind information, we don't have branches in any other locations other than stated here. So please do install our Android app Masterminds Online Classes from Google Play Store, and if you belong to iOS platform, then install an app called Class Plus from Apple Store and enter the organization code as MZGUN. In this app, you can find a large number of useful content like regular batch videos, crash batch videos, rapid revision batches, guidance classes, motivational videos, amendment videos, Masterminds test series, whatnot. Large amount of useful content is already available in the app. In our app, you can find a section called study material where large amount of free content is also available, and till now more than 24,000 students have already downloaded our app and we are nearing to 25,000. Sir, is it possible to interact with the directors directly? Yes. If it is an administrative issue, you need to contact Mr. Mohan sir on this mail ID. If it is academic issue, you need to contact me on this mail ID. So thanks to all our students who are our true brand ambassadors and who helped us to reach this position. All the best. My dear students, there is a popular demand from all our students to upload our Economics for Finance marathon videos, also known as rapid revision batch videos, and we are here to honor the request of our students. So for us, the request made by our students is top priority and we have decided to honor the same. My dear students, we have already recorded rapid revision batch videos or marathon videos for the subject of Economics for Finance, in which our senior most faculty, Professor Vasudha Madam, having 23 years of experience, has given a detailed explanation to each and every concept in detailed videos of 19 hours. Yes, what you heard is right. We are uploading 19 hours of Economics for Finance marathon videos in YouTube itself. So I am confident that you will definitely enjoy these videos, and these videos will definitely help you in revising the entire subject of Economics for Finance in a very short span of 19 hours. All the best, my dear students.
Hi guys, welcome to Masterminds, and this is the rapid revision batch for CA Inter Paper 8B Economics for Finance, which carries 40 marks, right? And initially I want to say only one thing for you, which can give more assurance regarding to these videos. That is, when exam fear knocks the door, you just send the courage what you get or obtain with this videos to open the door, and you will get success, and success will be with you forever and ever, children. Right. I am going to start with the topics according to our board material. Right. The first one is determination of national income. This chapter has been classified into 2 units. The first one is national income accounting. Right. The first one is determination of national income or national income accounting. In this national income accounting, you have to know what is the definition of first national income, right? National income means, right, it has to be taken in monetary values but not in fiscal values. Right? It is the money value. Money of value of what? Money value means economic value. Money value of economic. What will be the value of? It must be either the value of good or service. Economic goods and service, either one good or 2 goods or multi goods, all the goods and services, all. So it is the money value of all the economic goods and services, right? We have to take produced or consumed, produced. In an economy during a year, which is a flow concept, okay? Actually we calculate for every year. If necessary, we can go with a quarterly or a half yearly, whatever it may be, right? What is the national income definition in economics? National income is the money value of all the final economic goods and services that are produced in an economy during a given period of time, that is usually 1 year. You have to get the basics of this. I'm dealing with economics for finance, not with economics. So the definition for economics for finance will changes, okay? Right now I am going to give only the basics of this topic, basic definition of this in economics. So we have to consider, just by watching the definition itself, we should get the clarity. National income means it's a monetary value but not the physical value. So what values will be included while calculating the national income? We have to take is monetary value. What value should not be included? Only fiscal value is What values are to be included? Economic values. Which should not be included? Non-economic activities or non-economic goods. The next one. Either final goods or raw materials or intermediary goods. In the definition, we discussed about the final goods, right? National income includes, what it includes? Monetary values of national income. What it includes? Economic goods and services. What it includes? Final goods and services, okay, during a given period of time. That means current year information. Clear? Right. It includes production, right? And what it does not include, we have to get knowledge by reading this sentence only. National income does not include only the physical values of goods and services, okay. It does not include non-economic goods and services, right. It does not include previous year's production or further expecting production, okay. We have to take only current year production but not previous or future expected production, right. Hope you might have got this topic regarding to this, right. It is the money value of all the final economic goods and services produced in an economy during a given period of time. Why we should not use consumed? Why we should not use the sales? This will be the basic question to many of the students, right. I'll give the answer, right. Consumption or sales? From the producer point of view, it will be the sales. From the consumer point of view, the same value will be the consumption, right. In any trading account, okay, or in final accounts, in the trading account, after sales, we used to write closing stock on the credit side. Yes or no? If we don't value the closing stock, what happens? The national income will be undervalued. Yes or no? To overcome this problem, better to have, okay, better to have which concept, ma? Right. Better to have produced. So we will get even the closing stock. Okay. At the same time, I told you, you should not include previous year's production. Okay. Next, further expected production. Further expected production, however, we can't take. You should not take previous year production. In which terms we can express previous year's production? Previous year's production, actually in your accounts you maintain it as a closing stock. Previous year's closing stock to this current year will be brought as opening stock. Yes or no? So, you should not include opening stock. You have to value only closing stock. You have to reduce opening stock. So, what is the national income definition in economics? It's not in economics for finance, in economics. It is the money value of all the final goods and services produced in an economy during a given period of time, usually 1 year. That is the economics definition of national income. Hope, right. Now, let's go with the topic. I don't want to waste your time in any sense because it's a last minute batch, revision batch. So, please, I don't want to waste. I will give the whole topic based on formulas so that it will be very easy for you to frame definitions or whatever it may be. First, let us know who introduced this concept of national income to the world. In the world, this concept was introduced by System of National Accounts. So, who introduced this System of National Accounts? United Nations. What is United Nations? It is an intergovernmental organization which includes 193 countries of the world. United Nations, which is a intergovernmental organization which includes 193 countries of the world, okay, introduced or developed System of National Accounts, SNA. We call it as SNA, System of National Accounts, okay. What is the purpose of this? So that there will be with what purpose it has introduced means international standards, System of National Accounts. How you follow your accounting standards to maintain any book like that. In the same manner, even in our economics, to calculate the national income, right, we follow international standard system of national accounts. Clear? Who introduced the concept of national income in the world? Yes, it was developed by United Nations. With which sector division? Yes, it is a System of National Accounts. What is the purpose of this? It framed the System of National Accounts. It framed what it framed? Right. International Standard System of National Accounting. Clear? International Standard System of National Accounting. These 193 countries who are the members of United Nations follow this system of national accounts as a guide, okay, to calculate the national account, to calculate their national accounts and to evaluate, what to evaluate? Their economic performance. At the same time, not only their economic performance, they can compare their economic performance with other countries of the world. Okay, with the world. Can you get this topic? Right. Who introduced this concept in the world for the first time according to the national income? United Nations. Right. What is the division of this? System of national accounts. This system of national accounts has developed and brought international standards system for national accounting. Clear? Right. Each country of this United Nations, that is 193 countries, each and every country follows this system of national accounts as a guide. Okay, to frame or to calculate or to assess their national accounts of their economic performance, not only to assess their country's position, but also they can compare with the rest of the world or with the other 193, 192 countries. Clear? So that they can know the economic performance of each and every country. And this is the introduction to this. Ma'am, in the world it has been introduced by the United Nations, and the system is a system of national accounts. So we can understand, right? In our country, who will follow this? In India, who will follow this? As it should be known to all, right? In India, it will be assigned by Central Statistical Organization. Once upon a time it was organization, right? It is known as CSO, Central Statistical Office. This Central Statistical Office is having 5 divisions. Among them, the first division is National Accounts Division. Okay. And the next one is, and one ministry will be allotted for this purpose, and this ministry is known as Ministry of Statistics and Program Implementation. These two will assign, calculate, evaluate and declare the national income in our country. Clear? In the world, United Nations system of national accounts. In India, who will organize or who will take care of these functions means it will be taken by the National Accounts Division of Central Statistical Office, and the next one is Ministry of Statistics and Program Implementation. These two will calculate or assign or evaluate the performance of economic activities through different concepts of national income, and if necessary they will make certain amendments. Okay, and this is the history of system of national accounts which was brought into India with these guidelines and all. Right. The chapter right now what we are going to discuss is only 4 topics. The first one in this chapter I am going to discuss with the concepts of national income. The second point for you is only definition of national income. Right. The third one is methods to calculate national income. And the last one is what are the challenges or what are the limitations or what are the problems or difficulties in calculating the national income accounts. And the last one in this we can even include the significance or importance or usefulness of national income. So only 4 topics we are going to discuss with. The first one is concepts of national income. Then only we can go for what is the definition of national income, so that we can go with the definition of economics for finance, okay, with the national income. The next one is methods of calculating the national income, and the last one is what are the challenges in computing national income, what are the limitations for it, at the same time what are the problems or difficulties while we are calculating the national income, and the last one is what is the importance or significance of national income in very small words. Okay, right. Concepts of national income. We are having only total 7 concepts of national income. The first one is gross domestic product. The second one is net domestic product. The third one is gross national product. The fourth one is net national product. The next one is personal income. The next one is disposable personal income, and the last one is per capita income. We are in this syllabus in the system of national accounts who given for us and what our economy is following, and that has been provided in our ICAI material are only here we are having 7. Okay, right. What are the 7? GDP, GNP, NDP, NNP, personal income, disposable personal income, and the last one is per capita income. And each concept has been further divided into 4 concepts, subdivided. Yes, may I know what are those concepts, right? I am revealing here. And each concept furtherly has been divided into 4. The first one is GDP at current prices, existing prices or prevailing prices. We'll call that GDP as nominal GDP. Right. And the GDP at constant prices are some base year, and we call it as real GDP. And the last but one is GDP at market prices, and the last one is GDP at factor cost. So NDP in the same manner, GNP at the same manner, NNP at the same manner. Like this, every topic will be classified into 4 subtopics. Clear? Every concept will be divided into sub-concepts. So each and every concept will be expressed in 4 sub-concepts. Right? That is GDP at current prices, GDP at constant prices, GDP at market prices, and GDP at factor cost. Ma'am, can we have the same NNP in the same manner? Yes. NNP at current prices, NNP at constant prices, NNP at factor cost, NNP at market prices. Like this, you can have the classification. How to write the definition of each and everything is very simple if we know the basics of this. Even while solving the problem also without any confusion or doubt, we can clarify very easily. Right, let's move with the formulas regarding to this. Hope you might be understanding. We are having 7 concepts: GDP, NDP, GNP, NNP, personal income, personal disposable income, and per capita income is the last one. And again, each of this concept has been divided into 4 sub-concepts. What are the 4 sub-concepts? Right, what are the 4 sub-concepts? First one is at current prices. The next one is at constant prices. The next one is factor cost. And the last one is market price. Can you get those points? Hope you might have got these points. It's very easy for you. Write them. In the place of GDP at current prices, I wrote a nominal GDP. You can use GDP at current prices. Okay. Or at current prices can be represented as a prefix with nominal. We can call it as nominal GDP. Okay. At the same time, when we express the current year information into base year, if we convert the current year information into base year, we call it as at constant prices. When we express any topic in its base year prices, we call it as GDP at constant prices, and at constant prices can be used as a prefix with real. Okay. No fluctuations in the prices, neither inflation nor deflation. That's it. Hope I will go with one by one. Only 8 formulas are there. These 8 formulas will give you the much information regarding writing of definitions or whatever it may be. Right. First one, I'll go with the real GDP and nominal GDP. Okay. What is real GDP? What is real GDP? Real GDP is equals to GDP at constant prices. That's it, no? At constant prices of some base year. What is the base year? Where there are no fluctuations in the prices, or there are minimum fluctuations in the prices. Our prices will be considered as stable prices. Okay. Okay. And what is nominal GDP? Current prices. I'll give one small example for this, right? You get the clarity, right? I purchased 2 dairy milks, okay? The quantity of dairy milk is 10 and the price of each dairy milk is, say, 100. It's 140 like that, but I'm taking 100, right? And what is the value of dairy milk? What is the value of dairy milk? Price into quantity. It is 1000. Yes or no? Yes or no? What is the value of dairy milk right now? I purchased 10 dairy milks at the price of 100 each and the value of these dairy milks is 1000 rupees, right? This 1000 rupees can become this 1000 rupees can become 2000 rupees. Values can become 2000. How it can become 2000? Just imagine how it can become 2000. If change in price or change in quantity or both, it may lead to this. Yes or no? Right. I'll take 20. Okay. Right. Right. And to get 2000, 100. You just watch it out there. The price remained constant. Price of dairy milk is 100 rupees. But the value changed from 1000 to 2000 because of change in quantity. Yes or no? Because of change in quantity. Right? Yes. At the same time, let us assume price has been changed to 200. Okay. The value is 2000 as usual. Right. Watch it out. How many dairy milk quantity? Quantity remained constant 1010. Yes or no? Quantity remained 1010. But the price has been increased to 200. So the value became 2000. So the value of dairy milk has been increased from 1000 to 2000, maybe because of change in price or maybe because of change in quantity, isn't it? The value of dairy milk or the value of national income has been changed. There is a possibility to change because of either change in prices or change in quantity or change in both. Yes or no? Yes or no? Change in prices or change in quantity or change in both. Where there is no chance for change in prices, where there is no chance for change in prices, that is in real. Yes or no? In the real national income or real GDP at constant prices. So here you assume that prices should remain constant. Yes or no? No change in price. We can expect changes in quantity. That's it, no? Changes in quantity. Yes or no? In the nominal at current prices, okay, there is a chance of change in prices. Yes or no? There is a chance of change in prices. Okay. So we used to say that our income has been increased, even personal income, whatever it may be, it's going on increasing. At the same time, you have to know whether it has been increased because of change in price or change in quantity is very essential, right? In the year 2005, once upon a time, it was base year, right? In the year 2005, 10 grams of gold was approximately 4,986. I am taking it as a 5,000. But right now, as of 2020, is the market rate of 10 grams of gold of 24 carats is about 53,000. Okay. Okay. The 10 grams of gold remain constant. Quantity is same. The 10 grams of gold. But the price has been increased from 5,000 to 53,000. More than 10 times the price has been increased. We used to feel that national income has been increased. But here, the national income value has not been increased really. It increased only in terms of prices. It's not the real growth. Yes or no? So, to know whether the economy, the change in national income has been because of prices or quantity, we use this term, right? And this is the base year 2005, consider it as real, and this is the 2020 is the current year, so it consider the current year as nominal, okay? Right, this is the real and this is the nominal. What is the relation between these two? 50,000, how it became 53,000? Change in price. What is the change in price? What is the change in price? 48,000. And this change in price has increased or decreased? Increased. Change in price in all the goods and services are general price level is considered as inflation. So can you get this? Real, okay, plus inflation is equals to nominal. Real price of gold, 10 grams of gold is 5,000 and the inflation is 48,000. As the current price is, nominal current price is 53,000. Can you get it? What is the necessary of classifying real GDP and nominal GDP? Right. We have to know whether it has been changed because of change in prices or because of change in quantity. To know these values, we have to go with the real and nominal. What is the formula for the real and nominal? Real plus inflation is equals to nominal. Now, if you face deflation means same in your accounts, how you carry your net profit to the capital account, you add the net profit to the capital account. If you incur losses, you just minus the loss for the capital. In the same manner, if you get inflation, you just add it. If you get deflation, you just subtract it. That's it. What is the formula right now? Real plus inflation is equals to nominal. Nominal includes inflation. Real does not include inflation. What is the real? So I'll give the information. What is the real? At constant prices. What changes we can expect from this? Change in quantity can be calculated. Okay, Nama? Real value always will be expressed in base year prices and we can calculate change in quantity. Okay, nominal always be expressed in current year prices and we can calculate the rate of change in prices, either inflation or deflation. Clear? And the difference between these two, real and nominal, is either inflation or deflation. That's it. I'll give the tip for you to remember. Right. And this is an important tip for you. Right, I am writing you. Please watch it out. RBQ. What is real? R means real. Right. What is B? Base year. So at constant prices are base year prices. Right. And what is Q? We are going to know or calculate about the change in quantity. Okay. By means of converting the GDP into base year, we are going to know what sort of change in quantity has been taken place in the economy. Clear? So what is RBQ? Whenever you get the word of real, you have to assume that it must be expressed in the form of base year prices or in the form of quantity. This must be necessary for you wherever you come across the word of real. Okay, the same topic will be, we can calculate in the monetary policy, money market, exchange rate. In many topics we come across this type of words. Wherever you get, you have to keep it in mind, that is RBQ, real, base year, quantity. Clear? That means real, any information that has been provided in the real means it comes from the base year prices. Otherwise, it should be expressed in terms of quantity. Clear? That's it. The next tip is for you. NCP. What is NCP? N means nominal. Okay. What is C? Nominal, current year prices. So whenever you get the nominal, you have to say that you have to assume that it is expressed in current year prices. Okay, and the last one, we are going to calculate the change in prices. That's it now. We are going to calculate the change in prices. Clear? What is RBQ? Real, base year, quantity. What is NCP? Nominal, current year prices. In many chapters we come across this. This tip will be useful for you. Right. And the last one is RIN. Detergent or soap or powder, whatever it may be, or liquid. No, it's not that RIN. It is real plus inflation is equals to nominal. Clear? Real plus inflation is equals to nominal, right? We want to know real GDP plus inflation. You just concentrate on plus or minus. After plus we wrote inflation. Inflation shows its effect on real. Okay. Real plus inflation leads to nominal. So as cut copy paste GDP. Okay. Right. Real GNP plus inflation is equals to real plus inflation nominal. Nominal GNP. Here we are having GNP. Real NNP plus inflation is equals to nominal NNP. Real NDP plus inflation is equals to nominal NDP. Can you get this? And it will be same for any concept. Hope you might have understood. That is real plus inflation is equals to nominal. Clear? Nominal means real plus inflation. While we are discussing or questioning any concept, you have to know that, right? I am asking about nominal. Consider that topic as LHS. In the RHS, you write the formula. What is the formula for the nominal? Real plus inflation. Before inflation, you are having plus. So, you have to assume that nominal includes inflation. Clear? Whatever the topic I am asking or in the question that has been provided in your exams, you write in the LHS and the remaining whole formula you write on the RHS. In the RHS, before that particular concept, if you find plus formula, you consider it as include. If you find minus, you consider it as exclude. Okay now? Right. Nominal includes inflation. Write the formula for the real. What is the formula for the real? Nominal minus inflation. That's it now? Right. Right now, real. I am asking about real. So, write it on RHS. And what is the formula for this? Nominal minus inflation. So, what we have to say? Real does not include inflation. That's it now? Real does not include inflation. Clear? 10 grams of gold in the base year of 2005 was 5,000. Clear? Right. And whereas the current year price of 2020, the 10 grams of gold is 53,000. Clear? Yes. 48,000 of inflation has been included in the current year prices. That means nominal GDP, but not in real GDP. Yes. What's the tip? RBQ, real base year quantity. What is NCP? Nominal current year change in prices, change in quantity. What is RIN? Real plus inflation is equals to nominal. Real excludes inflation, nominal includes inflation. That you can write by just a mathematical formula. That's it. Clear? That's it. We are moving to the next formula. So, I told you that each and every concept has been divided into 4 sub-concepts. GDP at current prices are nominal GDP, GDP at constant prices as are real GDP. These 2 topics have been completed and we are having only 2. What are they? Factor cost and market prices. So, this will give nearly 20% of the information of this chapter. Only this factor cost and market prices. Right. So far we have completed 2 topics only, real and inflation. Right now I am going to give the formula related that with factor cost and market prices. Okay, right. What is the market price in our terminology? What is the market price? The market price of a share, the market price of a good. We used to calculate. We used to write. That's what is the market price? Market price means nothing but in our terminology it is selling price. Yes or no? What is the factor cost? What is the factor cost? Cost incurred on factors of production. What are the 4 factors of production? Land, labor, capital and organization. That's it now? Okay, right. What is the relation between these 2? Let's have a look on this topic. Right. Factor cost, that is the cost incurred on factors of production. What are the 4 factors of production? Land, labor, capital, organization. Clear? Right. Now, in economics, we are having 2 4 factors of production. What are they? Land, labor, capital. It's very important because in the income method, at the same time, in many topics we used to say only 2 factors of production. What are they? Means it's very basic important, right? Organization. In economics, we are having 4 factors of production: land, labor, capital and organization. The cost incurred on these factors of production is termed as factor cost, isn't it? The cost incurred on factors of production is known as factor cost. Clear? Factors of production, we can use to call it as just factors, ma. Okay, so factors. Clear? Factors. Right. For a firm, it is a factor cost. Is it a payment or income? For a firm, while producing goods and services, it has to incur cost of production or factor cost. Yes or no? While incurring this factor cost, is it a payment from a firm point of view or income to a firm point of view? Payment. So we can write it as factor payment. Okay, right. So right now I am working in a Masterminds, right? What the salary they are paying for me or what the remuneration they are providing for me, for them it is a factor cost or for them it is a factor payment. But for me, it is a factor income, isn't it? So this factor cost may also be known as factor payment or factor income. Hope you might have got this point. Okay. Factor cost or factor payment or factor income, because in some sentences we use the word of factor income, in some sentences we use the factor of payment, like that. So there should be no confusion for you. So wherever we come across with this type of words, I am providing at the same time. Okay. So online we have to bear the rent. On labor we have to incur wages. On capital we have to incur interest. And on organization, we have to incur profit. Clear? What is the factor cost or factor payment or factor income? Rent plus wages plus interest plus profit. Clear? This is treated as factor income or factor cost or factor payment in economics, not in economics for finance. Okay. Rent plus wages plus interest plus profit. That's it. Right. Right now I am going to discuss with economics for finance. In this economics for finance, we are having only 2 factors of production. Madam, 2. What happened to them? Yes, they didn't went anywhere else. Let's have a look on this. Right. We are having land, labor, capital, organization. But in your accounts, are finance, right? How you treat the land? Land either as a raw material in the working capital, either as a land and building as a fixed capital in the asset side. Yes or no? So you, the account students or financial managers or finance students, whatever it may be, you treat the land as either working capital or fixed capital. That means as a part of capital. But you don't treat the land as a separate factor of production in your accounts. So you can say that capital, land will be included in capital. Clear? Okay. In your accounts, capital, land is included in capital or capital includes capital. Then what about organization, ma'am? Organization, whatever the capital that has been brought by the sole proprietor, or you take the example of partnership or whomever they may be, right? Joint stock companies or whatever it may be, right? It will be treated as a capital. Yes or no? The capital fund that can be raised is by the equity shareholders or whomever they may be, owners of the capital. It will be represented as a capital nature in your accounts. Yes or no? That means even the organization what he brings, you treat it as or capital part. Yes or no? So in your accounts you are having only 2 factors of production. What are they? Labor, a separate factor, right? Next, capital. Only 2 are there, labor plus capital. Capital includes, what are the topics that will be included in the capital according to economics for finance? Right. Capital includes land, Capital include itself capital and also organization. These three together is termed as capital in economics for finance or accounts or finance. Okay, right? How many factors of production based on economics? 4. Land, labor, capital, organization. How many factors of production are there according to accounts or finance? We have to say that only 2. What are they? Labor and capital. Capital includes land, capital and organization. Can you get this? Right. Let's go with the factor cost. Factor cost is also treated as factor payments, also known as factor income from the receiver point of view. Yes. For the labor, what we have to give? In economics, we just treat it as wages. But in your accounts, you can treat it as wages, salaries, bonus, commission. What the employer provides to employee, each and every concept you have to treat it as that, as factor cost, as wages. Okay. What the employer can provide to employee. Yes, you are having income under the head of salaries. Yes or no? You can write wages, you can write salaries, you can write bonus, you can write commission. At the same time, you can write any allowance that can be provided by the employer to the employee. Yes or no? Or any perquisite, contribution to provident fund. All these topics you can write. Clear? Okay. Clear? Yes, sir. What you have to think? It is not just as wages in economics. In economics, we treat it as wages. But in economics for finance, we should not treat it as only wages. Wages, salaries, bonus, commission or contribution by the employer, provident fund. Still we can have yes, any allowances, what you write, educational allowance, tiffin allowance, what the employer provide to employee, is conveyance allowance. Next, at the same time, perquisites, what the employer provide to employee, whether it is a state government or whether it is a central government or a private organization. Clear? Hope you might get it. So, what you have to write? Any amount that will be provided by the employer to the employee is treated as labor factor cost. Clear? In economics, we treat it only as wages. But here, we can write it as compensation to employees. Okay, it's not either in cash or in kind. Cash means allowances like that. In kind means perquisites you can consider. Okay, right. So compensation to employees. Can you get the difference of formula between the economics and economics for finance? Clear? Right. Compensation for employees or to employees by the employer. Okay, plus capital. Capital even includes profit because organization get profit as an income. So you write it surplus. Capital should be in which process? It should not be in finance. It should be used for the operating purpose. So we write it as operating surplus. So what you have to write, children? Operating surplus. Clear? Okay, yes, sir. What is the factor cost? Compensation to employees. Okay, right. Wages, salaries, bonus, commission, provident fund, any allowance or perquisites, that is cash or in kind, whatever it may be, you know very well because you might be income under the head of salaries, what the employer provide to employee. You can consider all the topics there. But in the capital, we should not represent the word as capital here. Interest, we should not use the word interest. We have to use the word technical term, that is operating surplus. Operating surplus includes what it can include. This operating surplus, for the rent, it has to pay rent. For the capital, it has to pay interest. For the organization, it will receive profit. Rent plus interest plus profit. RIP. It is not rest in peace. It is rent, interest and profit. Clear? Okay. Yes, sir. So, first let me say, how many factors of production are there in economics? Right. So, economics. How many factors of production are there? 4 factors of production. Land, labor, capital, organization. Right. Factor cost or factor payment or factor income is rent plus wages plus interest plus profit. That's it, no? But in economics for finance, profits are loss. Okay, right. Economics for finance, we are having only 2 factors of production. What are they? Labor and capital. What will be the factor cost? or factor payment or factor income, right? We can call it as labor income. We can write labor cost or labor payments, whatever it may be. But in our material, we are using income, so I am taking income. That's it. Labor income plus capital income. Clear? Labor income plus capital income. Plus which income we have to write additionally here? Mixed income. What is mixed income? Socialist capitalist, not like that here. Right. In any self-employment businesses, you just watch it out. The owner itself acts as a labor. There will be no additional labor in many segments, even in the farmlands where the size of land is very small. Yes, in marginal lands, especially marginal farmers, they themselves become as a labor in their crops. Yes or no? Right. Then we can't identify separately as this is the labor income and this is the capital income or owner income. Yes or no? That's why we write as mixed income. In our developing countries like India, many sectors were unorganized and they run their business, they themselves behave as labor and also capital. When there is no possibility for us to segregate these, whether this is a labor income or capital income, we have to treat it as mixed income. So what is the formula for the factor cost or factor payment or factor income in economics for finance? We have to write it as labor income, capital income and mixed income, right? And this labor income, I told you, it may be wages, salaries, bonus, commission or whatever it may be. So we have to write it as compensation to employees. Plus capital income has to be treated as operating surplus. Operating surplus include land, capital, organization. So rent, interest, profit. It's not rent, rest in peace, ma. It is rent, interest and profit. Plus we have to write mixed income. And no other formula wherever you come across with this type of words. Clear? Factor cost or factor payment from the provider point of view or the business firm point of view, from the employee point of view or consumer point of view, we have to treat it as a factor income. If no income is mentioned, we have to treat it as factor income. That's it. Ma'am, do any other incomes are there? Yes, two types of incomes are there. When we participate in the production process, we call it as factor of production, and the income that has been obtained for us is factor income, right? I'm taking classes right now. I'm participating in the production of services, right? I'm receiving certain income. This should be treated as factor income. But if government provides any pension for me, take old age pension for me, if government provides for me, and it is not an earned income, it is an unearned income. This will be treated as transfer income but not factor income. So here we are discussing about the factor cost but not the transfer income. Productive purpose. That's it. Okay? Right. And we have to bring the relation between the market price and factor cost. With this we can conclude this topic. Right. What is the market price and factor cost? Market price in our terms we call it as just selling price of a product. And what is the factor cost, ma? Cost price. In your general point of view, and how you present means simply in low standards, in while we are doing our low education level, right? You might be writing one formula: selling price is equals to cost price plus profit, isn't it, ma? You used to write like this. Even right now in the balance sheet also, cost of sales plus profit is equals to sales. That's what you used to write. In our 6th or 7th standard of mathematics, we used to study that selling price is equals to cost price plus profit. Clear? Right. This selling price right now will be treated as market price. Okay. You just watch it out. Factor cost includes even profits also. Yes or no? Factor cost includes even profit also. Profit is not a separate from the factor cost. Actually, cost of production does not include, but factor cost include. Yes or no? Because organizer is also one of the factor of production. He will receive profit. So it becomes the factor cost. Yes or no? Or factor income. Yes or no? Right. So we can write this cost price plus profit in your books, cost of sales plus profit together as factor cost. Can we write, children? Because profit is also a part of factor cost. Yes or no? Yes or no? Right. So, market price is equals to factor cost when there is no government intervention. Okay. Factor cost is equals to market price when there is no government intervention. If government interferes maybe for the encouragement or for the discouragement. If for encouragement purpose, it will provide subsidies. If it for discouragement purpose, it will levy taxes. What kind of taxes? In normal sense, there is no need to explain. But here we have to explain because we are the CA students. Taxes are of two types, DT and IDT, not GST, because GST is a part of still IDT. The overall IDTs have not been converted into GST. Still custom duty, excise duty are in IDT. So we can say that there are two types of taxes. Which type of taxes has to be levied here? Either direct taxes or indirect taxes. What is the national income? National income is the money value of all the final goods and services produced. Yes or no? On the production, we have to levy what kind of taxes? Indirect taxes. On the goods and services, we have to levy indirect taxes. So, here the government intervention can be reflected in two ways. What are the two ways? Either indirect taxes, because we are discussing about the goods and services, yes or no? Either in the form of indirect taxes or in the form of subsidies. For what purpose it levy indirect taxes? Taxes on any purpose to discourage or to control, whatever it may be. Subsidies to encourage. Yes or no? Right now, how this formula will change? We have to know. In general, when there is no government intervention, we have to say that market price is equals to factor cost. Nothing but you can assume that, government interference is of two types. What are they? Either IDT or indirect taxes, IT. Not information technology, it is IDT, means indirect taxes. I wrote here just IT. Right. The next one is subsidies. Right. Now, in general, market prices is equals to factor cost, isn't it? In general, market prices is equals to factor cost. When there is a government intervention, these two cannot become equal. How this problem varies, you have to know. Market prices is equals to factor cost, okay, right, on the cost of production, or factor cost means here in your mind you have to take cost of sales plus profit. That's together is known as factor cost, because profit is a part of, profit is an income to the organization. Organization is a part of factor of production. So factor cost includes profit. Clear? Right. Market price is equal to factor cost when there is no government intervention. If there is a government intervention through either indirect taxes or subsidies, how the formula can be set? Yes, we can have this market prices is equals to factor cost. Either we have to add indirect taxes or we have to subtract. We have to add. Yes or no? MRP or selling price inclusive of all taxes. Include means we have to add. Yes or no? So, we have to add taxes to the factor cost, and if government provides subsidies, we have to reduce it minus subsidies. Clear? What's the formula right now to the market price? Factor cost plus indirect taxes minus subsidies. Hope you can remember. Right. How we have to read right now? The last formula. Right. You can have the look. Market price. Okay, I am discussing about the market price. So, you have to write it on the LHS and the remaining formula, whole formula on the RHS. Right. Before indirect taxes, you are having plus or minus. Plus. What you have to write? Factor cost includes indirect taxes. Okay. Right. Minus subsidies is there. So, how you have to treat it? It excludes subsidies. So, whatever you write on the LHS, you have to take it as a active term, right? Then you can discuss. What is this here? The market prices includes indirect taxes and excludes subsidies. That's it, no? Right. How can we write this factor cost? Mathematical rule. LHS, RHS. Right. Market prices minus indirect taxes plus subsidies. How we have to read? Market price, factor cost, LHS. Factor cost excludes indirect taxes and includes subsidies. That will be better for us now. Right. Ma'am, do any tip is there to remember? Yes, children. Whenever you get M for market price on the RHS, you just use minus. M for minus, market price minus indirect taxes. Opposite symbol becomes the subsidies. Okay. Right. You just imagine that as a fit. Fit, F-I-T, IT means indirect taxes, F means factor cost. If no symbol means assume it as a plus, not into, okay? Right, assume it as a plus symbol, right? I'm going this. Just you, I'm writing children. If you want to know about the market prices. Market price is equals to, what is the formula? Factor cost, okay? Fit I told you. Beside F, you have to write IT plus IT minus subsidies. For factor cost, you want the formula. Factor cost is equals to market prices MP, M for minus I told you to assume. To remember for the examination sake, okay, minus indirect taxes plus subsidies. Here, right. In economics, what is the factor cost? Rent plus wages plus interest plus profit. In economics for finance, what is the formula for the factor cost or factor income or factor payment? Right. In economics for finance, we have to say that labor income plus capital income plus mixed income. That's it, no? In the previous topic, I told you. Right. Labor income can also be termed as compensation to employees. This capital income can be termed as operating surplus, that is rent, interest, profit plus mixed income. Yes or no? Right now, one more formula we got for the factor cost, that is market prices minus indirect taxes plus subsidies. M means minus indirect taxes plus subsidies. So, as the information that has been provided there, we can use the formula. So, in our board material, we'll be having one formula at somewhere else. We don't know at which point we have to use this formula, whether which is correct or wrong. We can't get the clarity. To overcome this problem, I made all the formulas at each. Hope you might have understood, right? Yes, sir. What is the first one? First tip, I'm going with the first tip. RBQ, real base year quantity. NCP, nominal current year prices, change in prices. Next one, what is the last one here? RIN, real plus inflation is equals to nominal, or real minus deflation is equals to nominal. If inflation, you just add it. If it deflation, you just subtract it. Under mathematical rule, LHS, RHS, you can do it and you can say whether it is included or excluded. That's it, no? Right. The next one, what is the second formula? Market price is equal to factor cost, fit I told you, plus indirect taxes minus subsidies. Okay, right. And what is the other formula for the factor cost? Right. Market prices, M for minus indirect taxes plus subsidies. In economics for finance, first we can write them labor income plus capital income plus mixed income, or we can write it as compensation to employees plus operating surplus. Operating surplus means capital only, no? Rent, interest and profit, it's not rest in peace, plus mixed income. Okay, the last one, and we can write it in economics. Factor cost, rent plus wages plus interest plus profit. That's it, no? Income from the house property, you write it as rent. Wages, income under the head of salaries. Interest, capital gains and all, you can do it. PBGP, yes. You can write profits, you can represent like that. Other sources, overall, mixed income. Clear? That's what we have discussed here, and we are having only 2 more formulas. With this, we can conclude the chapter regarding to this, and I'll solve some problems. We have to go with the methods and definition, then it will be concluded. Right. Yes, sir. Right now, I'm going to with 2 more formulas. That's it. We can conclude. I told you already. Now, what is that? We are going to differentiate gross and net. We are going to differentiate gross and net. Right. What is this two? In your trading account, you come across with a gross profit. In your profit and loss account, you get net profit. You used to say that the difference between the gross profit and net profit is that indirect expenses. That's it now. Here, what will be the basics here in economics for finance or whatever it may be. Right. The basic difference between the gross investment and net investment, gross GDP, net GDP, gross GNP, net GNP, wherever you come across with these 2 terms, the difference between these 2 is depreciation. What you have to say? Depreciation. But in our material, in many aspects, our problematic point of view, we come across with the term of CFC. It's not KFC, it is CFC. What is CFC? Consumption of fixed capital. Depreciation, why so called as consumption of fixed capital? We are having separate accounting standard also where we come across with this one is what is consumption of fixed capital. So depreciation you apply on fixed assets only, no? Assets are of capital nature only, no? Right. Because of regular usage of asset, its quality will be deteriorated. SA, obsolescence, whatever it may be, what are the method you calculate the depreciation? Right. You will apply this depreciation on fixed assets because you are using or consuming fixed assets. So we call the depreciation also as CFC, consumption of fixed assets or consumption of fixed capital. Whatever you present in the balance sheet, it becomes a capital nature. So we call it as consumption of fixed capital rather than fixed assets. Clear? Right. So in many problems you come across with the CFC. Okay. What is CFC? Consumption of fixed capital, also known as depreciation. Right. What is the difference between the gross and net means depreciation? Right. What is the formula? Gross minus depreciation is equals to net. That's it, no? Gross profit we used to get in the trading account. Yes, on the debit side we will get the depreciation, the P&L account. Yes, and the balance will be the net profit. Other things remaining constant. Yes or no? Right. What is the formula right now for the gross and net means? Gross minus depreciation is equals to net. That's it, no? Right. I'll show you what are the concepts of national income are there with the gross. Okay. Right. These are the concepts of national income. Is with the gross we are having first one and second one. That's it, no? Gross domestic product and gross national product, and we are not having any more further gross. Yes or no? That's it over. What's the formula for the gross and net? Gross minus depreciation is equals to net. Let's calculate. Right. We are having with by using the gross, what concepts we are having? Right. GDP and GNP minus depreciation. Depreciation shows its effect on gross or domestic or product. You have to give importance to the plus or minus topics. Here we had it, we subtracted minus depreciation. Depreciation has its effects on gross. It leads to net, isn't it? So gross minus depreciation leads to net. And you have to know that we have neither added or subtracted or multiplied or divided. Nothing we have did for the domestic. So you just copy paste for the topic. Okay. Net domestic product. Can you get this? What's the formula for the NDP? GDP minus depreciation. And next GNP minus depreciation. Depreciation has its impact on gross. Gross minus depreciation leads to net. For the national product, we have neither added nor subtracted nor multiplied nor divided for anything. Yes or no? So you just copy paste the national product, it becomes the net national product. So what's the formula for the NNP? GNP minus depreciation is equals to NNP. That's it, no? Right. What is the formula right now we found out? It is gross minus depreciation is equals to net. So that's the formula. Right. That's the third formula is gross minus depreciation is equals to net. How it can be written? Net is equals to gross minus depreciation. You have to say net excludes depreciation. Yes or no? Right. How we can write for gross? Gross is equals to net plus depreciation. So how we have to calculate? Gross includes depreciation, and we call this as gross of depreciation. Wherever you get in the material, you have to assume that gross of depreciation means gross includes depreciation. What is net of depreciation? Net excludes depreciation. I have given the proof also here. What is gross of depreciation? Gross includes depreciation. What is net of depreciation? Net excludes depreciation. That's what we have written here. Yes or no? What's the basic formula for us? Gross minus depreciation is equals to net. That's it, no? Gross minus depreciation is equals to net. That's it, no? Clear? Yes? Right. So for the gross and net, we assume one formula, that is depreciation is the difference between these two, and how we have to present. Ma'am, can we write the definition of NNP, very easily you can do it. What is the NNP formula? GNP minus depreciation. When depreciation is subtracted from the gross national product, we obtain NNP. What is NDP? When depreciation is subtracted from gross domestic product, we get NDP. Clear? Right. The last but one, we are having one more formula for the net. Right now we assume that for the net the formula is right. For the net the formula, so far what we have discussed, net is equals to gross minus depreciation. That's it, no? Right. We are going to do with one more formula here with the net, that is, this is the first formula for the net, and one more formula for the net is receipts minus payments. Can we have any proof for this? Yes, certainly. What the income I receive under different heads, house salary, house property, capital gains, PGBP and other sources, all what I will do, I will total and I will get it gross total income. Yes, after gross total income, I will go for the TDS, tax deduction at source, or any other payments what I have to do, I have to pay, and the remaining balance will be termed as net income or net total income. That's it, no? That means receipts, what I receive will be treated as receipts, and what the payments I have to pay is payment, and the balance will be termed as net. Right. I will show one proof. Right. Net exports in terms of money, not in terms of any other aspect, not in terms of goods, not in terms of services. You just expect everything in terms of money, right? Net exports, by means of exports, we will receive money or we will send money. When we export certain goods and services to any country, will we receive money or we have to pay money? We have to receive money. Yes, receipts of money, receipt of cash, receipts of proceedings from exports. Exports I am representing with X minus S. When we have to pay in the international trade while we are importing, yes or no? Right. Payments towards imports. That's it, no? We have to pay when we are importing certain goods and services from other countries in the international trade. Right. Payments towards imports. And now, okay, this becomes receipts minus payments. Certainly we have to use the word of net because receipts minus payments formula is net. Okay, right. What's the word we have to keep before, with adjacent to net means whatever the word that will be in the receipt place, you have to use the word. What is net exports means? Blindly we can write. What is net exports? Adjacent to net we are having exports. You write exports. Exports receipts means automatically what becomes the payment in this aspect? Imports. It becomes net exports is equals to exports minus imports. That's it. Clear? Next. Net indirect taxes. Adjacent to net, what the term will be? It will be receipt. For whom the indirect taxes will be the receipt? For the government. Right. For the government, indirect taxes are receipt. At the same time, what will be the payments to the government? Taxes. So, net indirect taxes for the government, the receipt is indirect taxes. For the government, what will be the payment? Subsidies. So, what is the formula for the net indirect taxes? Indirect taxes minus subsidies. Okay, right. Net factor income from abroad. What is the factor income? Rent, wages, interest, profit. Right. From abroad means citizens of our country earning in abroad. Your residential status you can consider, ma. You can have resident but ordinary resident but not ordinary resident, non-resident of India, remitted to India, remitted outside of India, all those concepts you can get it. Right. If our citizen earns in abroad and remit to India, we call it as factor income from abroad. That's it, no? If our citizens earning in abroad and remitting to India and we feel it and we assume it as factor income from abroad. At the same time, many foreigners, they are earning in our country and they are remitting outside of India and we have to call it as factor income to abroad. That is a payment. Yes or no? Right. What will be the formula? Yes, factor income from abroad. It is a receipt. Okay. Minus factor income to abroad, it is a payment. Yes or no? It's a receipt. It is a payment. Receipt minus payment should be expressed in terms of net. So I wrote net. Adjacent to net, you have to use the word of receipt place. So net factor income from abroad is equals to factor income from abroad minus factor income to abroad. So you might get the formula relating to this. Wherever you get net, you have to assume only two formulas. It must be either in gross minus depreciation or it must be in the terms of receipts minus payments. For the net, NDP is equals to GDP minus depreciation because it is gross minus depreciation. Domestic product as usual, right? GNP minus depreciation. That's it, no? For this formula. For the receipts and payments, we are having net exports. Adjacent to net, we are having a receipt word. So, exports. Opposite to this payment, import. Net indirect taxes. Indirect taxes minus subsidies. Okay. Net factor income from abroad. NFIA we call it. So, we have to write factor income from abroad minus factor income to abroad. That's it. Okay. Right. So, that's it. What is the first formula? RBQ, real base year quantity. NCP, nominal current year prices. Real plus inflation is equals to nominal. Real minus deflation is equals to nominal. And what is the second one? Right. It is market price is equals to fit, I told you. Factor cost. Whenever you get factor cost, you adjacent to it, you write it as indirect taxes minus subsidies. Please, can you have the point indirect taxes minus subsidies together is known as net indirect taxes, isn't it? Factor cost plus net indirect taxes. Okay. What is the formula for the factor cost? Market price, M for minus indirect taxes plus subsidies. If you make minus as common, is equals to indirect taxes minus subsidies is nothing but net indirect taxes from the government point of view. That's it. And the next one, factor cost, we are having one more formula, that is labor income plus capital income plus mixed income. And it can be also written as, how we can write? Yes, it is compensation to employees plus operating surplus, nothing but rest in peace kadu. It is rent, interest and profit plus mixed income. Clear? Right. We can also write it in economics as rent plus wages plus interest plus profit in economics. And these three are economics for finance. Clear? That's it. Second one is over. Third one, we are having net is equals to gross minus depreciation. And we are having one more formula for the net, that is net is equals to receipts minus payments. In this sense, we are having net exports is equals to exports minus imports. Net factor income from abroad is equals to factor income from abroad minus factor income to abroad. Right? Net indirect taxes is equals to indirect taxes minus subsidies. In this sense, we can write GDP minus depreciation is equals to NDP. GNP minus depreciation is equals to GNNP. That's it. So, almost we have concluded what is current year prices, what is base year prices, that also has been completed. Factor cost and market prices also has been completed. The gross and depreciation and net also has been completed. And the last topic of this is that is domestic and national. We have to compare the last topic. With this we can conclude the formulas. That is, what is the last formula here? Domestic and national. Do any differences there? Yes, in your taxation there is a lot of difference. In economics we just explain a normal thing here. Right. What is domestic? We will give importance to place. Right. Many MNCs are existing in India. Right. Their production should be considered as domestic production or foreign production. You have to consider it as a domestic production while we are giving importance to domestic. If production in our country takes place either by the private sector or by the public sector or government sector, okay, or from the MNCs or foreign sectors or from the aliens also, if production occurs in our country, you have to consider that as a domestic territory, or that means we are giving importance to place. While we are giving importance to place, there is no need to give importance to the nationals or persons or their citizenship or their residential status. Clear? While we are discussing with the domestic, you have to use only the place. It doesn't mean of their citizenship or residential status. Clear? The next one. While we are discussing with the national, we discuss with their citizenship. In your words, you can consider it as a residential status. Okay. We are giving importance to persons. Our citizenship, our residential status, we have to use the word of national. Do any difference between these two? Yes, I'll tell you right now. Domestic, we are giving importance to place. And national, we are giving importance to person or citizenship. If we want to know about our country's citizens, we have to calculate national. If we want to know our country's place information, we have to calculate domestic. Do any relation exist between these two? Yes, children. What is it? Right? Domestic in our country, production occurs, right? And many people of our country's citizens work abroad and they remit their factor incomes to India. And I told you that factor income from abroad. Yes or no? And many MNCs or foreign companies or whatever it may be, even foreign portfolio investments, whatever it may be, many foreigners invest in our country, right? And they earn certain factor income in our country. And that what we have to do? We have to remit to outside of the country minus factor income to abroad. If we do this, we get the information of the citizens. Yes or no? National. So what is the formula? Domestic. Factor income from abroad is a receipt. Factor income to abroad is a payment. So it becomes NFIA. That's it, no? Domestic plus NFIA is equals to national. I already told you in the previous example. Receipt minus payment becomes the net. NFIA. Receipt place word becomes the adjacent word to net. Clear? Domestic plus NFIA is equals to national. What is NFIA? Net factor income from abroad. What is the formula for the net factor income from abroad? Factor income from abroad minus factor income to abroad. What is domestic? Place. What is national? Person. What is NFIA? Right. Hope you might have understood, ma. Let's go. Among the concepts, do we have any concepts regarding to domestic and national? Then you can get why we are doing this. Right, just you watch out on the screen. You are having, yes, with the concepts we are having domestic GDP and NDP, right, and with the national we are having GNP and NNP, isn't it? Right, with this the topic is almost over. Right, we are having GDP, okay, and also NDP regarding domestic. If we add NFIA, NFIA has to be added to gross or domestic or product. NFIA is to be added to domestic. So domestic plus NFIA is equals to national, no? Domestic plus NFIA becomes national. So for gross we have not added any depreciation or appreciation, whatever it may be. So gross as usual product. Give importance to the topic which you are adding or subtracting. That shows its impact on which factor you have to identify. First you make the changes in them and remaining you just cut copy paste. That's it. Clear? Right. NDP plus NFIA. So we are adding NFIA. So on which term NFIA effect will be shown? On domestic. So domestic becomes domestic plus NFIA becomes national. That's it, no? Right. For net we have neither a receipt or payment, we have not shown nothing. NNP. Clear? That's it. These are the whole formulas. RBQ, NCP, RIN. Market price is equal to factor cost plus indirect taxes minus subsidies. That can be written also factor cost plus net indirect taxes. Factor cost is equal to market prices minus indirect taxes plus subsidies, M for minus. Right. are market prices minus net indirect taxes. Next, factor cost, labor income plus capital income plus mixed income, also written as compensation to employees plus operating surplus, rent, interest and profit plus mixed income, also can be written as in the economics rent plus wages plus interest plus profit over. And for the net, gross minus depreciation as one formula, and one more formula for the net, receipts minus payments. Based on receipts and payments, we are having net exports, exports minus imports, net indirect taxes minus subsidies, net factor income from abroad is equals to factor income from abroad minus factor income to abroad. Net foreign investment, it's depreciation will not apply on investments. So how we can calculate net foreign investments? So income from foreign investments minus income paid towards the foreign investment, right? Return on investment, received return on investments, okay, minus payments towards the return on investments, not return on investments. Clear? Now one more formula, fifth formula is there, that is domestic plus NFIA is equals to national. Domestic give importance to the domestic give importance to the place, NFIA, net factor income from abroad, and we can know the information of national, that is the citizenships. That's it, right? You can construct any formula from the starting to NDP. Okay, I will show you the proof. Okay, that's it. I am having the information of GDP at market prices. Okay, I need information of NNP at factor cost. I am having the information of GDP at market prices. Okay, I want to know the information of NNP at factor cost. Is it possible or not? Yes, it is possible. We are having in the first place, we are having gross. On the RHS, we are having net. The relation between gross and net is depreciation. Yes or no? Gross minus depreciation is equals to net. Yes or no? So you have to write minus depreciation. When we subtract depreciation, gross minus depreciation is equals to net, balanced. Okay, right? We are having the information of domestic, but we want to know national information. Yes or no? Right. We are having domestic and we have to know national, right? What is the relation between domestic and national? NFIA. Domestic plus NFIA is equals to national. That's it now. Plus NFIA. Domestic plus NFIA is equals to national. Over no? Right. Next, we are having PP. Product. No need to change. Right. We are having base. Market prices. We need to find factor cost. What is the formula between the market prices and factor cost? M for minus, I told you. You have to remember. Market price minus indirect taxes plus subsidies is equals to factor cost. It's clear now? It is also balanced. Okay. So whatever the topic they give, whatever the topic we want to find in the examinations, you just know this basics, whatever you want to. We are having the information of NDP at factor cost. You want to make it as GDP at market prices. What is the difference? Net, gross. First you balance these two. How can we balance them? Gross minus depreciation is equals to net, or net plus depreciation is equals to gross. Balanced, yes or no? Net plus depreciation, balanced, gross. We are having domestic second place. Here also domestic, same. No need to do anything, right? Product. We are having here basic as factor cost. We are having here as market prices. Yes or no? Right. Both are equal? No, because government is there. So what you have to do? Fit, I told you. Factor cost plus indirect taxes minus subsidies, or plus net indirect taxes. Okay. I am having NNP at market prices. I want to know GDP at factor cost. Net, gross. What is the difference? Depreciation. Net plus depreciation gives rise to gross. Clear. Over. National, domestic. Difference is there. Difference between national and domestic is NFIA. Domestic plus NFIA is equals to national, or national minus NFIA is equals to domestic. Okay, right. Product. Here I am having market prices, but I want to know factor cost. Market prices minus indirect taxes plus subsidies, or minus net indirect taxes, because net indirect taxes is equal to indirect taxes minus subsidies. In the question they may ask about directly they may give or provide net indirect taxes rather than separately. Sometimes they will give only indirect taxes, sometimes they will give only subsidies. Based on their additions or subtractions, you can go ahead. That's it. Okay. And no other pending concepts right from. I told you that each and every concept has been classified into 4 sub-concepts, that is real, nominal, factor cost, market prices. I told you GDP, GNP, NDP, NNP. Each and every concept will be expressed in 4 sub-concepts. Ma'am, they have provided only GDP. They have not mentioned anything at the base, either that is market price or factor cost, which we have to consider, either market price or factor cost. You have to consider it as a market price. As what is the price of this? What is the value of this? Will you tell it in its market price or factor cost? Market price, the selling price of a product you can know. You don't know what will be the factor cost. You don't know how much the government has levied indirect taxes, how much subsidies it has been provided. Right now we are in GST, so we can know what amount of GST has been levied. Otherwise it cannot be known. So subsidies, we don't know how much subsidies the government has granted for this production. Yes or no? Whenever they have not mentioned anything GDP at base, nothing has been mentioned. NDP, they have not mentioned anything. NNP are disposable. Whatever it may be, they have not mentioned anything at market prices at the base. Then what you have to consider? Market prices. You should not consider it as a factor cost. Next, madam, they have not been mentioned, at least whether it is base year or current year. If it is a base year, they will mention. If they have not been mentioned anything, you have to consider it as a current year. Okay, everything will not be provided. You have to assume many things while we are calculating or doing this topic. Clear? Right. The topic is, if they have nothing mentioned about the year, base year or current year, you assume it as a current year. If they have not mentioned anything regarding to factor cost or market prices, you have to assume it market prices. I told you the reason why we have to assume as market prices. Whatever the value, if you ask anything, what you will say? You will just say it as, right, it's market price or it's selling price, but not the factor cost. Nobody knows. Yes or no? That's the topic. It's over. Right. One more doubt will be there. Ma'am, we are having several concepts in the national income, right, from GDP, NDP, NNP, NDP, right. All these again have been classified into each 4 concepts. So we will be getting several concepts now. Which concept should be treated as a national income? It is $1 million question to anyone. Which concept should be treated as a national income? Whether GDP at market prices or GDP at current prices, NDP at factor cost, NNP at market prices, which concept has to be considered for the nation, has to be the national income? It must be NNP at factor cost. I'll give the reason and then I'll conclude this concept up to here. NNP at factor cost. Why we have to conclude NNP? Why not NDP or why not GDP? Why we have to consider net values? Right. We can go with the 2. If we consider the gross values, gross includes depreciation. We will overvalue the many assets. Yes or no? So if we consider the gross, overvaluation takes place. So we have to take net values. Receipts and payments. If we consider only the receipts, if we don't deduct the payments, what happens? It will overvalues. Yes or no? To overcome the overvaluation, what we have to do? We have to consider net values but not the gross values. If we calculate the gross values, it shows overvaluation. Clear? Right. So we have to take net values. Right. Madam, why we have to take national? We can consider even domestic. No. Yes. Children, our country is an open economy. When the country is open to international trade, okay, automatically it comes under S. Right. not domestic, we have to consider national. Citizenship point of view, we have to consider. Then we have to go for national. If it is a closed economy, domestic is enough. But it is an open economy means you have to consider national. As India is an open economy which participates in the international trade and that will be recorded in the balance of payments, we have to consider national. And product as usual. Ma'am, why we have to consider factor cost but not the market prices? Because market prices differs from one area to another area. Metropolitan cities, plus normal cities, townships, villages, and nook and corner of the villages, the market prices of a product differs from one place to another place. To overcome this topic, we consider factor cost. So, what is the national income? National income means it's not GDP or NDP, whatever it may be. You have to remind in your mind that is NNP at factor cost. In your problematic part also they ask us about to find national income. They don't give what is national income, GDP or GNP, NDP or NNP. You have to assume that national income is equals to NNP at factor cost. I have given the reason. That's it. Almost all the formulas have been completed. How we have to assume anything what it has not been provided and what the topics to be considered I have given. And we are having only two more topics, that is disposable personal income and per capita income. What are they? Let's go with their formulas. The last three formulas for us in pending. Personal income. What is the personal income? The income that is earned by the households. All the households of a country are NGOs. We consider not for the profit sake. They just their factor cost. Right, personal income. Do personal income is equals to national income? National income is NNP at factor cost? No. Because national income includes several factors. Right now we have to know what is the difference between the personal income and national income. Personal income, I, okay, right, is equals to national income. No. What are the additional topics we have to know here? With this you can get the answer. Minus plus. Minus income earned but not received. If we receive, we will add. If we don't receive, we will subtract. That's a common thing. What is the formula? NNP at factor cost or national income minus income earned but not received. Income earned but not received means, yes, in our salary we will get the regular deductions. Yes, what will be the deductions? Provident fund deductions, as insurance oriented, SEIS something. Deductions will be compulsory deductions, whatever it may be. We used to call them. Right now in our current year we will not obtain. So what we have to say? Income earned but not received. If we receive, we can add, but we are not receiving, so we have to subtract. Okay now, plus, right, plus that means we have to receive. Income received, it will be included in national income, no, but not income received. As I received, I made it total or added. Clear? Income received but not earned. Ma'am, this type of income is there as, that is transfer income, old age pensions, physically handicapped pensions, widow pensions, unemployment allowances, subsidies. All these comes under income received but not earned. So, what is the personal income formula? Personal income formula is equals to, okay, personal income formula is equals to, right, NNP at factor cost minus national income. You have to write that. In our formulas, they will give NNP at factor cost. Sometimes they will give national income, right? Whatever it may be, you know what is national income or what is NNP at factor cost, right? Minus, when you have to minus, if you don't receive, you minus it. Income earned but not, I am keeping in into, but not received, plus income received but not earned. You can get the topics. Just if you read, you can know what are they, right? We are having one more formula for the personal income. Personal income is equals to private income. What is private income? Households and firms together is known as private income. Okay. Private income, okay, minus corporate taxes minus undistributed profits. We have to pay corporate taxes. At the same time, we have to pay undistributed profits. What are the undistributed profits? Equity shareholders, the company directors, they have to hold compulsorily certain portion of equity shares, and the dividend what they received on that, or the profit what they received on those shares, sometimes they will not receive, they will transfer it to reserves. Yes or no? We call those as reserves and surplus heading. Clear? We call them as undistributed profits, because the profits are not distributed among the shareholders. For what purpose they make that retained earnings or undistributed profit means, or corporate saving, we can say simply. For what purposes? If any future contingencies applies means, this reserves amount can be utilized. For that purpose, or for the future growth of the firm, they maintain some undistributed profits or retained earnings or corporate savings. So you can get the words of undistributed profits, or you can write it as retained earnings or corporate savings. Okay, and this is the formula. And personal means individual, and whereas the private means we have to take individual and also the corporate firm. Firm means nothing but artificial person, right? So we have to pay, right? Corporate taxes we have to pay, undistributed profits also we are not receiving, so we have to subtract. So what becomes the private income formula with this formula? Private income is equals to personal income plus corporate taxes plus undistributed profits. If you know one formula, you know the mathematical rules very easily, no? You can do it. That's it. Okay. The last but one, personal disposable income. Or disposable personal income. Okay. What my income will not be entirely my personal income, will not be entirely my disposable personal income. There is no right for any citizen of India to enjoy their own personal incomes. Why? Because mandatorily, tax is our wish or mandatory. Personal income taxes is mandatory. In this topic, we are coming with the direct taxes. So far with the product, GDP, NDP, NNP, NDP, what are the concepts we have learnt in the previous topic? It is on product, that means production. So we used indirect taxes. Right now we are discussing about the income here. Income means direct taxes. How many types of direct taxes we are having? Two, personal income taxes and corporate taxes. In the private income we discussed about the corporate taxes. Right now we are discussing about the personal. On persons, we will levy, as a government it will levy the personal income taxes or personal taxes. Yes or no? The present highest slab rate is 30%, right? And additional surcharges will be there based on their income levels and all, right? Whether I have to pay the taxes or I will receive the taxes. In the personal income, I have to pay the taxes or I have to receive the income. I have to pay the taxes. So I will subtract personal income taxes from personal income. Is it mandatory or my wish? I can pay or it's my wish. It's a mandatory, yes or no? And the remaining balance income I can use for my consumption or for savings, yes or no? I can use my balance income for consumption or for savings, yes or no? So what the amount I consume will be treated as, that is the income, that income will be treated as personal disposable income but not personal income. Madam, many of the people are there, only 3% are taxpayers, direct taxes. What about 97% are there and they are not paying any taxes? How can you say like that? Why we have to use the disposable income? If no tax means in the tax place you just made it zero. That's it. But the income what we are spending, we have to use the term of personal disposable income or disposable personal income. What is the disposable personal income? That can be used as we wish, but we cannot use the whole amount what we earn as we wish, because mandatorily we have to face the personal income taxes. So what is the formula for the disposable income or disposable personal income? Personal income minus personal taxes. Clear? And the remaining balance will be used for consumption and savings. For this, there is no need to by heart any definition for this. You can write when personal income taxes are deducted from personal income, we get disposable personal income. This disposable personal income can be used for consumption or savings or both. That's it, no? Totally we can use for consumption, totally we can use for savings or both, a combination of both. There is a definition. If you know the formula, you can frame the definition very easily. Okay, right. The last one is per capita income. What is the per capita? Per capita means nothing but average. Whenever you get the word of per capita as a prefix or suffix, whatever it may be, in this concept of national income, take the denominator as total population. Average we have to know, so we have to go for the total population as a denominator. What is a per capita income? Per capita income is equals to, right, beside per capita what we are having? Income. So as we are in the macroeconomics, take it as national income by total population. If they ask about per capita GDP or GDP per capita, it can be used as a suffix or prefix. It's nothing wrong in that. Okay, right. Per capita GDP means, per capita means denominator, you have to take total population. They are asking GDP, no? GDP by total population. Per capita NNP by total population. Per capita GNP by total population. If nothing is mentioned in the base, market prices. I told you. That's it now. The current year. That's it. Overall formulas has been completed and no pending tests. Please, the first one, real base year quantity, nominal current year prices, real plus inflation is equals to nominal. Second one, market price is equals to factor cost, fit I told you, plus indirect taxes minus subsidies is equals to factor cost plus net indirect taxes. Third one, factor cost is equals to market prices minus indirect taxes plus subsidies, or market prices plus net indirect taxes, or we can use the formula of labor income plus capital income plus mixed income. Also can be written as a compensation to employees plus operating surplus, that is rent, interest and profit plus mixed income. Right. Now the next one, rent plus wages plus interest plus profit. Clear? Over. Fourth one, net is equals to gross minus depreciation. Fifth one, net is equals to receipts minus payments. Net indirect taxes minus subsidies. Net exports minus subsidies. NFIA, net factor income from abroad is equals to factor income from abroad minus factor income to abroad in the form of receipts minus payments. Right. Sixth, domestic plus NFIA is equals to national. Right. The seventh topic is personal income formula. We are having two. What are they? National income or NNP at factor cost. I will write here itself. NNP at factor cost minus means not received. Income and but not received, plus received but not and. Income received but not and. Nothing but transfer payments. What are they? Transfer payments. What are the transfer payments? Do you know what are the transfer payments? Yes, we are having three types of transfer payments. What are they? Okay, what the government provides to its citizens. Okay, current transfers we call them as, there is no need to write the transfer payment. Current transfers by the government. Pension, unemployment allowances, all this will be termed as current transfers by government. Okay, at the same time, even current transfers between the countries will also be there. When natural calamities occurs, like that means we will provide some grants to other countries. In the same manner, some countries will be providing to our countries. At that time, we call them as from other countries to other countries. Net current transfers between the countries, no? So between the countries are foreign countries or rest of the world. Net current transfers from rest of the world. And the last one is interest on national debt. What the government borrows, not on borrowed amount, the interest. When the government will borrow, when the government is in deficit, it will borrow. When the government will be in deficit, when there is excess of expenditure over revenue. When there is an excess of expenditure, the government has to cut its transfer payments. It is not cutting its transfer payments. It is also meeting its transfer payments. Then the interest on national debt will be treated as transfer payment. Okay. So we are having three transfer payments. What are they? Income received but not and. That is termed as transfer payments. We are having three current transfers by the government, pensions, allowances and all. Right. Net current transfers between the countries are rest of the world. between two countries. And the next to the last one is interest on national debt or interest on public debt, you can call it. The last one is also we are having with the private income formula. Private income minus corporate taxes minus undistributed profits. Undistributed profits are also known as I told you retained earnings or corporate savings. In one formula problem they'll give that words. Even I told you depreciation will be termed as a consumption of fixed capital in many problems. Okay, the last but one children, it is PDI or DPI, disposable personal income. Disposable personal income means personal income minus personal taxes, and the remaining amount can be used for either consumptions or for savings. That's it. And the ninth one, that is per capita income. Per capita income is equals to national income by total population. Whenever you get the word of per capita in the formula, you have to use, in the formula you use denominator as a total population. Per capita GDP, GDP by total population. Per capita personal income by total population, like that. Per capita NNP, NNP by total population. Clear? Yes, right. So almost all concepts have been completed regarding to this issue. Right, we will go right. I have to go with the definition of national income and some formulas problems based on this. Right, I'll solve a problem first of all. Right, then you can get the clarity. Then we can do it. Right, right. Now you have to know the definition of national income. Right. So far, what's the definition we have followed? Only one definition. That is, it is the money value of all the final goods and services that are produced in an economy during a given period of time, usually 1 year. That's what the formula we studied. That's what the definition we did. But in economics for finance, how we have to write the national income? National income means, right, it is the NNP at factor cost. Yes or no? Yes or no? Right. How can we write the definition of this? Only one definition you know. You can write GDP definition, GNP, every formula definition you can write. Personal income we know. What is the formula for the personal income? When income received but not earned is added and income earned but not received is subtracted from national income, we get personal income. For disposable income we know the formula, disposable personal income. When personal income taxes are subtracted from personal income and the remaining amount can be used for consumption savings. You can frame the sentence. Per capita income, when national income is divided by total population, we get average standard of living of the people, and this will be termed as per capita income. We can do this. And the definition for all the remaining, there is no need to by heart. Very easily you can do it. Yes, first I will give the definition of national income and then we can go one by one. That's it. Right. What is the definition of national income? So, it's on the board. Please watch it out. National income is the defined as NNP at factor cost or GNP at factor cost. NNP at factor cost. So, we have to take the net values but not the gross values. Yes, Anuma? So, what we wrote? National income is the net value of which goods, economic or non-economic? Economic, final or raw material? Final, economic, all economic, final goods and services produced or consumed. Consumed means closing stock will be undervalued. So, what we have to take? Produced, right. Is it national or domestic? National income means what we have to take? NNP at factor cost or NDP at factor cost? We have to take NNP at factor cost. NNP at factor cost means what we can do? Domestic plus NFIA we can do. Yes or no? What they have given? Produced within the domestic territory of a country. Okay. In accounting year plus NFIA. Why we wrote NFIA? Why we wrote NFIA? Because we need national income means net national product at factor cost. We need national information. To get national information, what we have to do? For the domestic, we have to add NFIA. That's why the definition became like that. Otherwise, we can't understand why we are adding NFIA and why we are doing like this. We can't understand. So, I went through formulas for the first and next I am going with the definition. What is the national income? National income is the net values of all the final economic goods and services produced within the domestic territory of a country plus NFIA or including net factor income from abroad during a year. We can frame this now because national income is NNP at factor cost. So that way we took net values and domestic plus NFIA separately. That's it. Over. I told you this system was developed by the United Nations through system of national accounts for international comparison also for each and every country. This can be used as a guidelines, I told you, right? In our country, it will be performed by the CSO, National Accounts Division of CSO, and also Ministry of Statistics and Program Implementation, it will be done, and some amendments will also be there, right? Right now the base year, it is about 2011-12 is the base year, right? So basic price has been, before that we used to calculate market prices and basic factor cost. Right now they introduce the term of basic price. Basic price is equals to market price, okay, minus tax on the product plus subsidies, minus indirect taxes plus subsidies as usual. Okay, I'll show you. I'll show the formula, right? Factor cost is equals to, what is the formula? Market price, M for minus indirect taxes plus subsidies. Okay, indirect taxes can be levied either on the output or on the production process. Yes or no? Excise duty on production of goods and services, sale tax on the product. Yes or no? So how can we write it? Market prices minus indirect taxes on production plus indirect taxes on product plus subsidies also we can levy. Subsidies on production to the farmer on pesticides and fertilizers, subsidies on production, plus subsidies on product, 1 rupee kilo rice in Andhra Pradesh, and on many medicines also they will provide subsidy, yes or no? Subsidies on product. Okay, this is the formula for the factor cost. Factor cost is equals to market prices minus indirect taxes on production and indirect taxes on product. In the same manner, plus subsidies on production and subsidies on the product. But right now we are calculating at basic prices. What is the formula for the basic price? Market prices minus, we should not take both. Both are already included in the factor cost. Right now we are going to calculate only on the product because we have to consider only the final value. Value added tax, VAT has came, cascading effect has been reduced. So ultimately the production taxes will be reduced, yes or no? Right. So we call it as indirect tax on product plus subsidies on product. It's not on production because we are in the value added. Right now it is GST. To overcome the cascading effect, what we will do? We will use the formula of value added. What is the formula for the value added? Can you get the difference between the market price and basic price? Right, factor cost and basic price, sorry. Right, factor cost is equals to market prices minus indirect taxes on production and product plus subsidies on production and product. Whereas if we go with the basic prices, market prices minus indirect taxes on product plus subsidies on product. That's it. It's very easy to remember. Hope so. Right. The last but one. You used to calculate value added tax, isn't it? May I know the formula? I'll tell you. Value added tax. What is the formula for the value added? Whenever you come across with the value added, whatever may be the topic, is the formula is value of output, that is final good, minus value of intermediary or input, whatever it may be. In higher studies, everything we call it as intermediary rather than input, or input not bothered, right? What is the formula for the value added? Wherever we come across with the term value added means value of output minus value of intermediary. That's it, no? That's it, no? Right. VAT. What is value added tax, no? Right. How we can write the formula? Value added means what is the formula? Value added formula means value on output minus value of intermediary. That's it, no? Right. What is the formula for VAT? Taxes on value of output minus taxes on value of input. That's what you are doing even in GST, yes or no? Output tax minus input tax to overcome the problem of cascading effect. That's it, no? So value added is a term that means the difference between the value of output minus value of input. Madam, where we have to apply this value added? It doesn't mean of tax, no, it's not a VAT, just value added. Wherever where we have to use the value added. Yes, value added can be applied for domestic country's production, not for the imports. Okay, na? In our country, what we will produce for domestic production, we use the word of domestic value added. Okay, right? GDP we used to write gross domestic product, so we can write it as gross value added. NDP we used to write net domestic product. We can even also write it as NVA, net value added, because value added means value of output minus value of intermediary we have to do, or value of inputs we can do, right? That will be treated for our domestic production. So wherever you come across with the domestic product, we can write it as value added. That's it, no? Okay, yes. One definition you know means you can write any definition, right? Just watch it out on the screen. You are having gross domestic product. If nothing has been given, you have to calculate as market prices. We wrote domestic product is also known as value added. Just now I told you gross domestic product is also known as gross value added. If you know the definition of this, you can write the definition up to NNP at factor cost. No need to by heart. Please have it. It is the market price. No, nothing has been mentioned. It is the market value of all, as usual, the final economic goods and services. Okay, right. Here what we are calculating gross. Yes or no? Gross includes depreciation. Gross minus depreciation is equals to net. Gross is equal to depreciation plus net. That means gross of depreciation including depreciation. What is meant by gross of depreciation? What is meant by gross of depreciation? Gross including depreciation. Yes or no? Right. Next, produced within the domestic territory, because we are discussing about D, domestic territory of a country during a given period of time. If this definition is known to you, you can write any definition. Next, real GDP at constant price. Real GDP or GDP at constant prices. I told you RBQ. Can you remember? Watch out the point. First point you are having at base year. Yes or no? Second point, whenever the quantity changes, RBQ expressed in base year, the information gives the changes in quantity. Yes or no? Right. Nominal GDP or GDP at current prices. Watch it out. NCP, that is expressed in current year, and changes in prices can be recorded. Yes or no? Watch it out. Right. Prevailing prices of a current year and GDP changes when price changes. Clear? RBQ, NCP. It's over now. Right. Definition you have to remember. I told you. No need to remember or by heart. Right. What is the first definition? Gross domestic product. What is the definition? Is market GDP. Nothing is given. You assume it as a market prices for both of them. What is the definition? It is a market prices of one or all. All. Final or raw. Final. Economic or non-economic. Economic. Goods and services. Okay. As we are discussing with the gross, write it as gross of depreciation or including depreciation. Gross of depreciation. Produced, as usual definition, produced within the domestic territory of a country okay, during a 1 year, or during a given period of time. That's it, no? Right. If they ask about a net domestic product, how we can write? Same definition, but they are asking about net. So you write here, instead of gross of depreciation, you write net of depreciation. Otherwise, at the last, you write excluding depreciation. That's it now. What's the formula for the NDP? GDP minus depreciation. You write the formula of GDP, okay, definition of GDP and excluding subsidies, right? Market prices of all the final economic goods and services. Instead of gross of depreciation, you write net of depreciation. Enough. Net of depreciation produced within the domestic territory of a country during a given period of time. That's it. Clear? Next, GNP at market prices. What is the formula for the GNP at market prices? Right, you can do it. What is the GNP at market prices? It is the market, first what is the formula? GDP at market prices, gross same, national domestic plus NFIA. You just write the definition of GDP at market prices. At the ending, you write just NFIA plus NFIA. That's it. What is the definition right now for this? GDP at market prices is the market value of all the final economic goods and services, gross of depreciation, produced within the domestic territory of a country during a given period of time, including or plus net factor income from abroad. That is the definition. No need to buy hat. Same. If for each and everything, you have to write like that. Okay, whenever you come across with gross value added at market prices, no? So it is in value added. So you have to write value of output minus value of input. So only one kind of output and one kind of input are intermediary? No, we are having several. You can write it as summation. From primary sector, from secondary sector, from tertiary sector, you can write it and you can do the summation of this. You can do it separately of all input output separately or otherwise in an aggregate sense. Okay, right. Whenever you get the formula in the sense, you just watch it out in the sense, if we get the here as factor cost as a base, you should not write the formula of this. What the formula you have to write? You have to write the formula of factor cost. What is the formula? Compensation to employees plus operating surplus plus mixed income you have to write. Rent, interest and profit. Okay, you give importance to this. Okay, right. I need one small information. You used to pay your taxes on net income or gross income, or gross total income or net total income. On net income, yes or no? Which profit you will carry forward to the balance sheet, either gross profit or net profit? Net profit. Yes. Whatever may be, the income that will be calculated on net basis but not on the gross basis, because the country will get the information on net values. So all these, this compensation to employees, the government will have, because I'll pay on my net income, not on gross income. So that will be termed as net. In when gross operating surplus will be provided, net profit will be carried forward to balance sheet. Yes or no? Right. Mixed income. All this will be in which values? Net values. Yes or no? But here we are having what? Gross. What is the formula for the gross? Gross minus depreciation is equals to net. Gross is equals to net. So you have to write here depreciation. Yes, what is the formula for the GDP at factor cost? Consumption, What is the formula for the GDP at factor cost? When you get the base as the factor cost, you know what you have to write? It is the compensation to employees plus operating surplus plus mixed income plus depreciation. Why we are writing depreciation? Because all this information will be provided in which values? Gross values. Net values. Net plus depreciation becomes the gross values. Right, I'll write. What is the formula for the NDP at factor cost? Here we are having factor cost, yes or no? Compensation to employees plus operating surplus plus mixed income as usual, right? But we are having here net. All these values are almost in net, already in net, yes or no? There is no need to either add or subtract depreciation or CFC. Clear? And just we are having methods. So if we complete the methods, this chapter will be concluded. Right, methods. Before going to that, we have to go that circular flow of income. Nobody knows, okay, where the production starts, ends, and when this economic activities will end, nobody knows. Already this answer has been asked, so no chance for us to be asked once again. You have to know, first of all, right. In any economy, there are three economic agents are there. That means the persons who participate in economic activities, they are nothing but households or consumers. They perform the consumption, right. The next one is firms or business firms. We call them as producers, right. Investment they do, Okay. And the last one is government. Wherever you go in any economy, in any country, either capitalist or socialist or mixed or developed, underdeveloped or developing countries, whatever they may be, you come across with these three economic agents or economic persons. They are nothing but households, firms and government. Okay, right. And circular flow of income, right. This circular flow of income is very easy, right. First, what happens? In every country, production takes place. In the process of production, what we need? Factors of production is required. That factors of production will be supplied by households. Yes or no? Circular flow of income, right. In any country, first production takes place or consumption takes place. Consumption takes place only after the process of production. In any country, the first production takes place. Next, what takes place? Consumption. Between the production and consumption, there is one market known as distribution. These are the three phases. How many phases are there in the methods of calculating national income? Three only there. Production phase, distribution phase, consumption phase. Right. Production phase is known as by which method? In the production, we will get the final product. So we call it as product method. Okay. We have to take output also. Output also means we have to take minus intermediary, no? So we can call it as net output method or value added method, because value of output minus value of intermediary we have to do. At the same time, industry of origin method. Output means production. Yes or no? Output means production. In business, the classification of business might be knowing. The classification of business is two types, industry and commerce. Commerce means trade and aids to trade. Warehousing, banking, insurance, like that, trade, internal trade, international trade, regional trade, local trade, regulated trade, like that. Industry means we come across to the genetic industry, extracting industry, manufacturing industry, service industry. Here, even Tollywood film industry. That means actually there is a service, but also we call it as industry. Wherever the production takes place, that means conversion of input into output, we call it as industry. Maybe the primary sector, maybe the secondary sector, maybe the tertiary sector, we call it as industry. Okay. In the classification of business, industry means it's not the secondary sector. Industry means production. Whether it may take place in the primary sector or secondary sector or tertiary sector, whatever may be the sector, it takes place in conversion of input into output. That's it. So here we are getting the information from the production point of view, not from the trade or aids to trade. So we call this as industry of origin method. Clear? How can we calculate this? Very simple. Basically, we have to calculate from the gross. Then only we can get the net values by decreasing or subtracting depreciation. Right. Gross domestic product. So output will be calculated in the market prices. Yes or no? GDP at market price is equals to, right. Domestic price can also be written as gross value added at market price is equals to summation of value added. That's it, no? Is equals to value of output minus value of intermediary. That's it, no? Clear? Production method means basically you have to start whatever the information they provide, you have to basically start with the GDP at market prices. GDP at market prices is also known as GVA at market prices, because value added is applicable only on domestic production, not on imports. So we write that formula. GDP at market prices is also known as GVA at market prices is equals to summation of value added. Summation of value added means nothing but different sectors. Right. What is the formula for the value added? Value of output minus value of input. Sometimes in the problem we may not find the value of output. How can we know the value of output? Sales plus closing stock. That's it, no? Yes or no? In the trading account, to know what is the total amount of output, we can know, right. If value of output is not provided, this value of output can be written as Later we can write the summation and all, not necessary. Value of output can also be written as sales plus closing stock. Clear? Ma'am, opening stock information will also be there in the closing stock. No, opening stock is the previous year's closing stock. Yes or no? We should not consider the previous year. We have to consider the present year. So what you can do, we should not consider means minus it. Subtract it. What is the formula for the value of output? Sales plus closing stock minus opening stock, because opening stock, current year opening stock is the previous year's production. We should not consider the previous year production. So we subtracted it. So what is the formula for the value added, ma? Value of output minus value of intermediary. This can also be written as sales plus closing stock minus opening stock minus value of intermediary. Otherwise, sales plus change in stock. Change in stock means you have to take closing stock minus opening stock, but not opening minus closing. Clear? Why we have subtracted a opening stock? Opening stock is the previous year's closing stock. We should not consider the previous. So hope you can find. Yes or no? Right. So what is the formula regarding to? Yes, I'm going with the product method or output method or whatever it may be, value added method, industry origin method. So it has to be take with the basic of GDP at market prices. GDP at market prices or gross value added at market prices is equals to summation of value added is equals to value of output minus value of intermediary, or summation. The value of output can also be written as sales plus closing stock minus opening stock minus value of intermediary. Okay, at the same time this can also be represented as sales plus change in stock minus value of intermediary. Clear? Ma'am, we are having only GDP at market prices. No, but to calculate the national income we need NNP at factor cost. Is it possible to be converted? Yes, I'll show. NNP at factor cost, but we are having the information in GDP at market price. Is it possible to convert? Yes, let me show. We are having here net. We have to find net, but the information we are having here is GDP. So to get net values, what we have to do? Minus depreciation. Okay, yes, gross minus depreciation is equals to net. We are having the information of domestic, but we need national. What we have to do? Plus NFIA. Product. Okay. We are having market price, but we have to find the factor cost. So to find the factor cost, what we have to do? Market price, M for minus indirect taxes plus subsidies. That means indirect taxes, subsidies, depreciation, NFIA is applicable in all the methods. Clear? Right. And the next one is distribution. What is distribution? It's not presenting any gifts to orphans, not like that here. Distribution means here, okay, right, paying rewards to factors of production. Who are the factors of production? Land, labor, capital, organization in economics, labor and capital in economics for finance. What we have to pay? Rent plus wages plus interest plus profit. That is factor cost only, no? Yes or no? Right. And this method is known as factor cost method. Factor cost is also known as factor payment. Factor payment method, right? And receivers calculated as factor income. Factor income method. Okay. Clear? Distribution phase is also known as factor cost method, factor payment method, or factor income method. Right? How we have to calculate? Right? Basically, the formula starts with GDP at factor cost, because we are telling it as a factor cost. So we should not take market prices. Output can be calculated in market prices, but what is the formula? We are writing factor cost. So you write in economics for finance, compensation to employees plus operating surplus plus mixed income, as it is in gross, but these values are obtained in net values. You have to add depreciation. What is the formula for the GDP at factor cost? You basically take the formula of GDP at factor cost, not at market prices. In which method? income method, or factor income method, or factor payment method, or factor cost method, whatever it may be, you have to take GDP at factor cost as the base to find any formula. What is the formula for this? GDP at factor cost is equals to compensation to employees plus operating surplus plus mixed income plus depreciation. Why I wrote depreciation here means, right, because the values of compensation to employees, operating surplus and mixed income are available in net values, but we want to know GDP at factor cost. Then what we have to do? We have to add depreciation to get the values of gross, right? Ma'am, can we find NNP at factor cost with this formula? Certainly, children. Right. In the income method or factor income method, in what base we have to take? GDP at market prices. Sorry. Income has to be expressed in factor cost. Yes or no? What will be the formula? What is the formula? Right. Factor cost, no? Compensation to employees plus operating surplus plus mixed income plus depreciation. Okay, what we want to find right now? NNP at factor cost, isn't it now? Right, I am writing here because the formula is here itself. In the income method, if you want to calculate the national income or NNP at factor cost, but the information we are having with the GDP at factor cost, right? GDP at factor cost, right? We need net. So what we have to do? Minus depreciation. We are having domestic, but we need national. What we have to do? Plus NFIA. Domestic plus NFIA is equals to national. We are having product. Okay. We are having factor cost. That's it. Whatever you want the topic, you can find with the basic information. Right. The last one is consumption. We should not express this phase as a consumption. We have to express this phase as disposition. Why we call it as? When we sell the good or service to the consumer, the ownership of a product changes from producer to consumer. Ma'am, wholesaler, retailer, either wholesaler, retailer, consignee, partnership, whatever you take, even the door delivery boy, they all will be considered in economics as a producer only. Ultimately, who consumes that product will be treated as a consumer, and the remaining all who participates in the process of production to door delivery, we have to treat them as producers itself, right? So ultimate consumers, when the product is sold by the producer to consumer, the ownership transfers from the producer to consumer. In the retailer, from one producer to another producer, the ownership lies with the producer, but not with to consumer. So we call it as the ownership changes from producer to consumer. We have to call it as disposition phase. What we have to call? Disposition phase. That's it. In the disposition phase, what this method is known as? The consumer has to purchase. Yes or no? So we call this method as expenditure method. What is the method known as? Expenditure method. Yes, in the expenditure method, basically we have to know the formula from GDP at market prices. Who can spend? Expenditure method. Who can spend? Right. GDP at market prices is equal to who can spend? Consumers. It is an household expenditure plus firm's expenditure plus government expenditure. It is the economics formula. But you are not in economics. Economics for finance. You have to write expenditure in two terms. According to your accounts, you are having two types of expenditure. What are they? Revenue expenditure, or you also call it as consumption or current expenditure. We call it as consumption expenditure, and capital expenditure, isn't it? Even the households, or the firms, or the government, whomever they may be, what will be the sort of expenditure? Only two types of expenditures will be there. They must be either capital expenditure or revenue expenditure. Right now, how can you write the formula for the GDP at market price in economics for finance? Not with expenditure of household, expenditure of firms plus expenditure of government is the formula of the economics. But in economics for finance, how you have to write a gross domestic product at market prices, because expenditure will be expressed in selling prices, not at factor cost. So you have to take the base as GDP at market price. When you consider this as a market price, what will be the formula? Let's have a look on this. GDP at market price is equals to, clear? Right. Revenue expenditure plus capital expenditure, okay, plus exports minus imports. Ma'am, you wrote here domestic. How can you write exports and imports? Which products will be exported? The domestically products will be exported. Yes or no? Which products will be imported? Yes, the foreign products will be imported into our country. As those are not produced in our country, what we have to do? We have to subtract. But we have to say from the consumer point of view, what is exports? Demand for domestic goods by foreigners. Yes or no? Because our goods demand has been increased. So you have to add imports. Demand for foreign goods but not by the domestic goods. Add it is not the demand for domestic goods. We have to subtract. Clear? Because we are consuming, we are selling. So we have to write like that. Exports minus imports. Clear? Right. What is the formula for this? Right. Revenue expenditure plus capital expenditure plus what we have to write? Exports minus imports. Instead of revenue expenditure, we call it as consumption expenditure. Which consumption? Final consumption expenditure. Private final consumption expenditure plus, right, capital formation or capital expenditure. Which capital formation? Gross domestic. So, gross domestic capital formation plus exports minus imports. I'll write the full form. Revenue expenditure is nothing but final consumption expenditure, okay, plus capital expenditure is nothing but capital formation. Which capital formation? Gross domestic. In an economy, who will be the spending people? Final consumers. Final consumers may be households, firms. Households and firms together is known as private final consumption expenditure. And again, government also. I am a government employee. My services are consumed by the government. And those will be termed as revenue nature. Every month I am drawing the salary. So it comes under the revenue nature. So, government final consumption expenditure. Just imagine, children, if it is a revenue expenditure, you just write it in consumption expenditure or final consumption expenditure. If it is a capital, whether may be headed by the government or private individual, that means in the sense the households or firms, whomever they may be. It doesn't mean that. You have to know that it must comes under gross domestic capital formation or capital expenditure. So, exports minus imports. Ma'am, can we find NNP at factor cost with this formula? Very easily we can find it out. Right. NNP at factor cost is the national income. Yes or no? NNP at factor cost is equals to, okay, right. We are having the information with GDP at market prices. GDP at market prices, clear? Right. We need net minus depreciation. We need national. We are having domestic. So, plus NFIA. Product, okay. We are having factor cost here. We are having market prices. Market prices, how it can become market factor cost? M for minus indirect taxes plus subsidies. That means in all the methods in common we can get indirect taxes, subsidies and depreciation, NFIA. I am giving the conclusion. Yes, how many methods are there? 3. What is the first method? Value added method, net output method, industry of origin method, product method. All these are one and the same. Yes, what is the basic formula? Starts with GDP at market prices or GVA at market prices is equals to summation of value added is equals to value of output minus value of intermediary is equals to sales plus closing stock minus opening stock minus value of intermediary is equals to sales plus change in stock minus value of intermediary. Next, second method is income method. Under income method also the formula starts with GDP but not with market prices because factor income. Factor income is also known as factor cost income. Yes or no? Factor cost. Compensation to employees plus operating surplus plus mixed income plus all these values are in net but we need in gross, so add depreciation here. Right. Third one is expenditure method. Expenditure method starts with expenditure is in selling prices. GDP at market prices is equals to what is the formula? Right. GDP at market prices. Right. Final consumption expenditure, whomever they may be. either government final consumption expenditure or private consumption expenditure or households consumption expenditure or firm consumption expenditure, it must be in the revenue nature. Ma'am, how can we know the firm's revenue expenditure, madam? Right? What are the things you write in manufacturing or trading or P&L account comes under revenue expenditure? That's it, no? Right. And next, what is the expenditure? Capital expenditure. Capital expenditure is termed as gross domestic capital formation. Right. What are the fixed assets and whatever it may be, the capital nature that can be recorded in the books of accounts. It becomes an expenditure for you. Means to write in the gross assets, any purchase of asset, even by a household or by the firm or by the government, tunnels, roads, bridges, dams, whatever it may be, it becomes an expenditure to the government. Even for the households, construction of new house, even for the firms, plant and machinery, furniture and fixtures, whatever the fixtures or non-fixtures, tangible or intangible asset, whatever it may be, this all comes under balance sheet. In all the terms which can be represented in the balance sheet, you go with the capital expenditure. And the next one is exports minus imports. Exports minus imports together is known as net exports. By means of exports, we receive money. By means of imports, we have to pay the money. Receipts minus payments, it becomes net. Adjacent to net, we have to write the receipt word. Receipt here we are having exports. So we call it as net exports. That's it now. So you just assign these values. If you get value of output, sales, change in stock, at the same time what you can say, value of intermediary, output, like that means you go for the product method, right? Yes. If you get the word of wages, salaries, bonus, commission, compensation to employees, rent, interest, profit, like that if you get the words means you go with the income method. If you get the word of consumption expenditure, capital expenditure or exports, imports, and you have to use the words of expenditure method. This is the basics to solve the problems. If we do this, almost the chapter will be completed. Before going to the problems, let me conclude the theory. Right, what is the theory? Right. The pending theory is only 4 forms. What are the challenges in calculation of national income? Are problems are ignored or neglected? Significance or importance? All those have been in our material. We have provided in very short terms. These are the methods, right? It's on the screen. You can have what is the phase known for, and what are the methods, different names, and what is the data required for this, and what are the formula I have given. Gross value added, what are the formula, right? For the distribution GDP at factor cost, for the disposition or expenditure, final consumption expenditure plus gross domestic capital formation plus net exports, and what will be included, what not will be included. All the illegal things will not be included, and previous year will not be included. Non-economic activities will not be included. Intermediary goods will not be included. Like that you write present current production, and value of output or final goods have to be considered. Economic activities have to be considered. Like that you can go for the information. Right. So only in one area we are having. Any method if they ask, you can provide very easily, but you have to follow this material. It becomes very easy for you, right? So these are the definitions and formulas, and we are having only one column. What is the significance of national income estimates? Next one, what measures do while we are calculating national income we are ignoring. The next one is conceptual difficulties, and last one is challenges in the computation of national income, and it has been asking for only 2 marks. For 2 marks, you just go ahead with the 4 points which are convenient for you. The first one is usefulness. Right. If you calculate our national income, we can compare our national income with other countries. Yes or no? So that we can know at what position we are and in what senses we have to improve our economic activities. So international comparison, it will be useful. The next point, yes, it is a short run performance as we are calculating for 1 year, less than 1 year or 1 year, but not more than 1 year. Yes, it's a short run performance. So we can go from income method, from output method, or from expenditure method. We will be knowing from output method. We can know from each sector what is the contribution of each sector. So we can know Right. No need to buy at all these things first of all. Right. From each sector, you can know what is the output. Right. Primary sector output, secondary sector output, and tertiary sector output. You can know which sector is lagging and which sector is leading. For the leading sector, what provisions are to be made for its better performance? For the lagging sector, what provisions have to be made to pick up that sector? Yes or no? Like that, we can benefit our economy by knowing the condition of the economy through national income accounts. So, priority sector, we can know the sector production. Yes, we can compare with the other countries and we can know. Yes, right? Yes. So, it indicates the economic activity and also economic development. It's over. Right? Yes. At the same time, we can know the demand for goods and services. As national income increases, we can know that in our country, the demand for goods and services also increasing. As national income decreases, we can say that the demand for goods and services are decreasing. Yes or no? Right. We can forecast the future trend as from comparable to previous year, our national income is increasing. So, we can that even in future it increases. We can have the future forecast according to this terms. Yes or no? Right. The next one, sector specific. Right now I told you in which sectors we are in leading or lagging. We can make the appropriate plans for that and we can make the development of those sectors. If it is already in developing position or developed position, still we can make much better. That's it. For the political, what the economic plans, LPG, SNO, recently agricultural policy, all these are going on. Okay, all these policies is right or wrong, it will be judged with this national income. Because of LPG, our national income has been increased. So, we can say that LPG is a successful policy adopted by the politicians or by our government. We can say that the particular person, we can say hats off. Yes or no? Right. Agricultural policy, new agricultural policy, right now the discussion is going on in our parliament. Right. If our national income increases because of this aspect in the long run, we can say that this policy is also good. The decision took by the Modi is also very good. We can say like that. We can judge the political performances with the concepts of national income. Right. The next one. So, whenever we go with the national income data, you know, it's expressed in money value. So, automatically you have to consider the central bank policies, monetary policies we say. So, how these both accommodate to control the economy is the major criterion. At the last point, we can know international, so this point has to be known. Nation's contribution to international bodies, right? In IMF, India is also one of the member, right? In IMF, to be a member, right, in your non-trading concerns, for a club like that, you will be writing entrance fees will be there. You write subscription fee or entrance fee like that. In the same manner, to become a member of IMF, we have to pay certain membership fee. That membership fee is known as quota. What it is? Quota, Quota. That quota will be decided based on our national income and economic development. So, in those aspects also our national income is necessary to have withdrawal rights and all. Okay, right. So, all this, it's not possible for, it's not the right time to remember for the exam sake. So, you can, so sector specific point you can do. International comparisons you can do, previous year comparisons, and the political judgments can be done out. All these things you can do in your own words. Clear? The last one. What we are ignoring? We are calculating national income in money value. But there are many values in economy which are not expressed in terms of money, none other than non-economic activities. Yes or no? Are we considering without non-economic activity, without the love of our parents, affection of our parents, is it possible to survive for us? No, first of all, if all the human beings are humiliating us, it's not possible to be alive. Their love and affection, their grace, their responsibilities to us leads to such a position. Yes or no? But we are ignoring that non-economic activities. Yes or no? So, we are telling that, especially we are expressing everything in money value. Quantity increased, either price increased, so national income increased. We are expressing in quantitative terms, but not in qualitative terms that has been brought by the technology. Yes or no? We are ignoring the technological improvements because it cannot be expressed in terms of money. The second point, we are ignoring the non-economic activities because they are not expressed in terms of money. At the same time, we are also even ignoring hidden goods. Hidden in the sense because of these taxes and all, especially some goods have been prohibited in our country which are considered as demerit goods, and some goods are have to bear high taxes and all. So, to avoid the tax evasion purpose, many people what they are doing is they are going with the hidden production. The production which is not recorded in the books of accounts, not only the drugs, narcotics, whatever it may be, even the households, in their own houses, they will be having some gardens. Yes or no? Almost the celebrities in this pandemic situation, they went for this challenge and they are growing different kinds of edible crops and different kinds of plantations also they are going with this. Yes or no? Right. If they consume those goods and services, will it be recorded in the books of accounts? No. Even the farmer, what he produces, okay, do everything output that has been produced by the farmer will be recorded in the books of accounts? No, because some product of his own production will be kept aside for his next seed purpose or for self-consumption, for sampling purpose, for giving gifts to their relatives, friends or whomever they may be, like that. Many hidden production is there. This production is not revealing. We are also ignoring that. While calculating national income, you sow the seeds. From where you got the seeds, you should give the information that binding agreement is not there in our economy. So we can say that many production has not been concluded. That means we can say that it is ignored. What we are ignoring? Technological ignorance, technological improvements we are ignoring. The second point is, right, non-economic activities we are ignoring. The third point is hidden goods. As many topics like this we can say. Right, in this generation we are having this much of national income, high cost of living, high pay we are drawing, white collars pay we are receiving, all this because of equality in income, equality in employment opportunities, equality in different kinds of opportunities, equalities in wealth. Yes or no? All these are there which are non-economic activities. They apply to the economic activities and they generate the income, but we are not including in national income. We are ignoring them. Like that you can make it each point as a single point and you can do it right. The next one you can go, and we have given only few points. You can do only 4 points because for 2 marks they are asking about and what are the conceptual difficulties. Basically we can say that national income, there is no agreed definition because each and every country calculates each one concept separately as their national income. In their computation gets difference, a lot of difference is there, right. The second one is for some people, you take the example, right, for some people, right, it becomes intermediary good. The same product for some people, it becomes a final good. You take the jute bags. If we go for shopping by using the jute bags, we call it as final good. If the same jute bags are used for packing anything else, it will become an intermediary good. It doesn't become a final good. Yes or no? So many goods are there. They are using, some goods are using for final goods. The same good will be utilized for intermediary good. So in this process, we are unable to get the clarity difference between the final good and the intermediary good. So it becomes a difficulty for us while we are calculating the concept. The next one, issue of transfer payments. Transfer payments are unproductive. Yes or no? Government is collecting higher taxes from the rich and providing to the poor. They are transferring the income from rich to poor. Yes, it's a transfer payment. And this is an unearned income to the common public who are receiving the pensions or allowances, whatever it may be, from the government. Right. It should not be included. But these incomes, the people will go and they will spend on goods and services. It comes under expenditure method. We should not include transfer income. In income method, we should subtract. But the same income, we are going and we are purchasing some goods and services. How it is possible? It's not at all possible to calculate. Somewhere we are subtracting. The same point we have to subtract in another method also. But we are adding in another method. How it is possible? Without source, how we are purchasing? Is totally a question mark. The next one, right. Incorporating in distribution of income, as certainly some people are rich are becoming richer and poor are becoming poorer. The next one, value of a new good at constant prices. Many times to calculate, we are converting the current year prices into base year prices. Right. Recently, many mobiles with new variants have been launched. Even in this COVID-19 situation also, many variants of many companies. Right. Those products are not available in the base year. How can we calculate their prices in the base year? No information at all. How can we convert every top? We are in the innovative world. Every day we are getting new products. Those new products were not available in the base year 2011-12. Those products were not there. How can we assign this? It's not at all possible. Like valuation of government services, as they act as intermediary, but they are not providing any direct services. Yes. But the expenditure is incurring on government expenditure. Yes, all these are conceptual difficulties we are facing. And the last one, challenges we have to face. The first one is the data. All the people are providing data. even corporate taxes or personal income taxes, we are filing our returns and all, but what the data we are providing, it may be not genuine. Yes or no? Yes or no? Even what the farmers they provide their output may be not genuine. Some information, some topic they have consumed on, because to avoid taxes, many of the people are not giving the right information to the government. Yes, so we can say that though we get the data of national income, it is not possible to be reliable, unreliable it is. Yes, the second point, in our economy, we are having more than economic, we are having non-economic sector, that is non-monetary sector, because non-economic means it cannot be expressed in terms of money, right? They are also participating, right? But they are main source for providing income, but not directly, indirectly, but they are not representing. The third point, self-consumption, I told you in the regarding farmer's sake. So self-consumption, gifts, samples, whatever it may be. Next, absence of recording. Many of the people don't know. Now you ask your father or mother who are engaged in their economic activities and all, you just ask them right from their marriage to till date, how much expenditure they got, how much income they got. They don't know. It may be because of some parents, because of illiteracy. Some parents ignore this. What's necessary for this? Just for the tax payments we will pay, that form 16 will be provided, we will forward that. Many of the people doesn't record their expenditures or incomes or their output. Yes, it's also drawback for us while we want the data regarding to the national income. The last one is there is no proper occupational classification in our country. Many of the people are engaged in different sectors during a year. Some people in season they'll go for the agriculture. In off season they will come to service sector for construction like that. Otherwise they will be engaging in any industries like that. They are not perfectly assigned to a particular sector. So we can't say that this person is confined to primary sector, secondary sector or tertiary sector. So we can't get the data. Yes or no? The last point, duplication or double counting. Yes, to overcome this double cascading effect in the taxes, interest on interest, we called it as compound interest. Tax on taxes, we called it as a cascading effect. Yes or no? At the same time, even in our national income, if we value these intermediary goods also, it becomes overvaluation or double counting. To overcome this problem, as many times value of output minus value of intermediary. This is not happening. So we can't even clarify the intermediary goods also. In that position, as we can say that double counting or overvaluation of national income is going on. Yes, you can go these points any 4 for 2 marks. Clear? If they ask for 3 marks, you can go with the definition, and what are the challenges you can write present it 3. 4. It will be benefited for you, and all this has been given in a one table. You can have it here, and totally we are having only 3 pages of national income. We can make it very fast and very speedy revision also. There's only 2 problems I will solve. With this the chapter will be concluded. That's it. Let's conclude the chapter by these 2 problems. Theoretically we had completed. Right now the problematic approach. First, what's the question they have given? Find the GDP at market prices and GNP at market prices from the following data. Is the topic that the data that has been provided in crores of rupees, Indian currency crores of rupees. Using income method, show that it is the same as obtained by the expenditure method. So we can conclude that this problem includes 2 methods. One is income method and the next one is expenditure method. So you just bifurcate the paper into 2. Okay, first one write. So first one write. You write income method. Clear? Method is income method. Here we have to calculate under which method? Expenditure method. You first write the basic formulas of those. Okay, what is the formula for the income method? Starts with GDP at factor cost, isn't it? Right. Because income or factor cost or factor payment. When we write factor cost as the base, what's the formula we have to take? Compensation to employees plus operating surplus in the sense rent, interest and profits plus mixed income. Do okay. Next, what's the next one? Right. All these values are in net. So whether you take the compensation to employees or rent, interest and profit, at the same time mixed income will be available in net values. But we need gross domestic product at factor cost. As we need in gross and these values are in net, what we have to do? We have to sum up depreciation and consumption of fixed capital. This is the formula to find out the GDP at factor cost, and this is the basic formula, right? Yes. And what is the formula under the expenditure method? GDP, while we are spending, we pay the market prices. Yes or no? GDP at market prices is equals to final consumption expenditure. First write the formula, clear? The next one is gross domestic capital formation, and the last one is exports minus imports. And this is the basic formula what we require, right? Then we can know, we can find what they are asking us for the question's sake, right? First, personal consumption. What is the first data for us? Personal consumption. Consumption comes under revenue expenditure. So it is an expenditure method. I am writing X for expenditure method. Okay. Right. Depreciation. It is applicable in all methods. Depreciation, NFIA, next, indirect taxes and subsidies are applicable to all. Okay. Next. All. Wages, compensation to employees, income method, isn't it? Right. Indirect business taxes are indirect taxes. Indirect taxes are applicable in income method, expenditure method and product method. So to all. Interest, rent, interest and profit, operating surplus, income method. So it is an income method. For income method, I am writing I. For the expenditure method, I am writing X. Next, domestic investment. Investment comes under investment. It's the capital expenditure. Yes or no? Right. Expenditure method. Government expenditure. Yes, it is an expenditure method. Rental income, operating surplus, income method. Yes, it is an income method. Next one, corporate profits, rent, interest and profits. Corporate profits are unincorporated profits, any other profits, right? It comes under operating surplus, income method. Exports, expenditure method. Net factor income from abroad. Net factor income from abroad, depreciation, indirect taxes and subsidies are applicable to all methods. Yes or no? In the formulas, we proved that. For all. Mixed income, income method. Imports, expenditure method. So we are having the details, our topics, our content of income method and expenditure method. Moreover, we are having some common terms like NFIA, depreciation, indirect taxes and subsidies. That's it now? Right. Let's find out the GDP at factor cost under income method is equals to compensation to employees. They have not provided the word of compensation to employees, but they have given wages. Yes or no? It comes under yes or no? Right. You write wages. Right. Operating surplus. Right. Operating surplus they have not given directly in the form of operating surplus. They have given individually rent, interest and profit. Yes or no? So let us write what they have given. In the form of rent they have given rental income. Right. Rental income plus interest. They have given normally interest plus corporate profits. These three together is known as operating surplus. They given mixed income separately as mixed income. You just substitute the values of this, you will get the answer. What is the wages they have given? 6508 crores of rupees. What is the rental income? They have given 34. What is the interest amount they have given? 1060. Right. What is the corporate profits they have given? 682. Plus, what is the mixed income? 806. So, you will get GDP at factor cost. Yes or no? What is the value of this? Right? Depreciation. What is the depreciation amount? It is 800. So, you can find GDP at factor cost. If we sum up these values, we get 9,890 crores. Please mention the units. We got GDP at factor cost. But in the question, they are asking us to find out GDP at market prices and GNP at market prices. Yes or no? Right. Let us calculate. GDP at market prices. What is the formula for the GDP at market prices? We are having information in the previous step, that is GDP at factor cost. We are having GDP as usual. We are having the difference only at market prices and factor cost. Market price and factor cost. What is the formula? Market price is equals to factor cost fit plus indirect taxes minus subsidies. Right. Plus indirect business taxes, and they have not given the information regarding to the subsidies, so make it as 0. Right. 9890. Okay. Plus what is the indirect business taxes? 1000. They have not given any information regarding to this. What becomes? Right. GDP at market price is equals to 10,890 crores. You must mention crores or rupees, whatever may be the units and currency, please represent. Right. Still what they are asking to find out. They are asking not only about GDP at market prices, but also about GNP at market prices. That's it, no? What is the GNP at market prices? We are having already the information of GDP at market prices. Right. GDP at market prices, GGPP, MP. What is the difference between these two? Domestic and national. We are having here domestic and we require in national. What is the formula for this? Plus NFIA. That's it, no? Right. What is the value of GDP at market prices? 10,890. And what is the value of net factor income from abroad, please? Here it is net factor income from abroad. It is 40 rupees. Yes or no? Plus 40. So, GNP at market prices is equals to 10,930. This is the GDP at market prices, okay, and this is the GNP at market prices according to income method. In the same manner, with the given information, we have to find out even in the expenditure method. Right. Already we wrote the formula for the expenditure method, that is GDP at market prices is equals to consumption, final consumption expenditure plus gross domestic capital formation plus exports minus imports. Right. Let's go with the topic. Right. They have given personal consumption. Personal consumption comes under first paragraph. Let us take the final consumption expenditure. Next brackets, let us take for the gross domestic capital formation. Next, let us take for the exports and imports. Okay, right. First, what they have given? Personal consumption. Personal consumption comes under final consumption expenditure. Right. Personal consumption plus, right, depreciation all, wages in this income method, indirect business taxes all, interest income method. Domestic investment comes under capital formation but not consumption expenditure. Right. You write in the second one. Domestic investment. Government expenditure. If nothing has mentioned, take the current expenditure. If specifically they have mentioned for this purpose like that, you can allow it. If nothing is given, it's a revenue expenditure, you have to admit. Government expenditures, right, rental income method, corporate profits income method, exports, right, net factor income mixed all, minus imports. That's it, no? Based on consumption expenditure, we are having two concepts, that is personal consumption expenditure plus government expenditure, and based on investment gross domestic capital formation, we are having only one capital expenditure, that is a domestic investment, and for exports minus imports as usually net exports. Let us take the values of this. Right. What is the personal consumption expenditure? 7,314 plus what is the government expenditure? Government expenditure is about 2156. Okay, this is the consumption or final consumption expenditure, and gross domestic investment, and they have given domestic investment as 1482 over. And next, what is the exports? Exports, they have given the values of 1346 minus imports, they have given 1408. That's it. If we find out calculate the value, you will get 10,890. You do calculate with the given values, you will get the values of 10,890. Can you get this? Just we want to know the basics of the formulas, and it will be very easy for us whatever we want to find. That's it. And now we have to find GDP at market prices is over. Still we have to find the GNP at market prices. Right. GNP at market prices, and we are having the information of the previous topic content is GDP at market prices. What is the difference between these two? GNP and GDP is domestic and national. What is the relation between these two? Domestic plus NFIA is equals to national. So plus NFIA is equals to 10,890 plus 40. So therefore GNP at market prices is equals to 10,930 Indian crores. Crores of Indian rupees, Indian national rupees. Clear? First, you write the basics of the formulas. It will be easy for you. What the basic formula for that, what the topics that have been given in the problem, you please substitute them and you can add. That's it. And we have we found out income method and expenditure method. Let's go with one more method, that is output method or product method or value added method. A small problem. From the following data, calculate gross national product at market price using which method? Value added method. Value added method is also known as product method, industry of origin method, right? What are the names you remember? You can present them, but in the problem sake, not necessary to produce all those things in the examination, right? What is the formula required, right? We can write it as GDP at market prices or gross value added at market prices. We are having different formulas. What are they? Value of summation of value of output minus value of intermediary or sales plus closing stock minus opening stock minus value of intermediary. Otherwise, we can go for, right, what's the other formula? Summation of, right, we have told the three. Change in stock, sales plus change in stock minus value of intermediary, we can go. What the information they have given by watching out, we can write the formula. First, value of output in primary sector, which method? Product method, P. Net factor income from abroad, all. Value of output in tertiary sector, S, it is a product method. Value of output in secondary sector, whichever may be the sector, value of output comes under product method. Government transfer payments, it comes under income, personal income, and not useful for the calculation of this. Intermediate consumption in tertiary sector, S, product method. Intermediate consumption in primary sector, S, it is product method. Intermediate consumption in secondary sector, it is product method. That's it now. First you have to calculate under which formula we have to take. Summation of value added. What is the formula for the summation of value added? Value of output from different sectors minus value of intermediary from different sectors. Antara? That's it now, right? How we can calculate, right? Value of output by primary sector, okay, minus value of intermediary by primary sector. That's it now. Only primary sector is there? No, different sectors are there. The production of all sectors has to be added. So we took the formula of summation, right? Value of output by secondary sector minus value of intermediary by secondary sector, right? Value of output by tertiary sector minus value of intermediary by tertiary sector. That's it now. Substitute the values, you will get it. Value of output in primary sector is 500. Value of intermediary in the primary sector is 250 according to the information, right? Plus value of output in secondary sector is 900. Value of intermediary in secondary sector is 300. Value of output in tertiary sector is 700. Value of intermediary in tertiary sector is 300. 250 plus 600, 850. 850 plus 400, 1250. That's it now. So, GDP at market prices is equals to 250, 850, 1250. Okay. Right now what they are asking to find out gross national product at market prices, but we are having the information with GDP at market prices. So how can we convert? Very easy. We have to find out GNP at market prices. GNP at market prices is equals to GDP at market prices. Okay. What's the difference between these two? GG, PP, MP, MP. What is the difference? Domestic and national. What is the relation between these two? NFIA. How the formula can be executed? Domestic plus NFIA is equals to national. Right. What is the GDP at market price? 1250. What is the NFIA they have given? Net factor income from abroad they have given 20. So it becomes 1270. Therefore, the gross national product at market prices under value added method is 1270. Here, one topic has not been considered. Please watch it out. Government transfer payments. So, you just write up to the conclusion of the problem. You just write the inference or note, whatever it may be. You conclude that government transfer payments are not required to calculate GNP at market prices under value added method or product method, industry origin method, whatever it may be. Clear? In the given table or in the given information, if any topic is not required for you to calculate, then you have to mention in the form of note. This information is not required to calculate this concept. Whatever may be the concept and whatever may be the information. So, hope you can do it very well. In many problems, some topics are not at all required to calculate, but they will provide just to manipulate us or to mislead us. So, if you know the basic information of formulas, you can find these are required for this purpose and this is not at all required for this purpose. You can get the clarity. That's it. We have concluded the chapter. Before that, so first, RBQ, real base year quantity, nominal current year prices, real plus inflation is equals to nominal if deflation minus second market prices is equals to factor cost fit. Whenever we get fit, factor cost fit plus indirect taxes minus subsidies. It can also be written as factor cost plus net indirect taxes. Okay, factor cost is equals to market prices. M means minus indirect taxes plus subsidies. Otherwise, market prices minus net indirect taxes over. Next, labor income plus capital income plus mixed income also we can write, and this can be regarded as or written as compensation to employees plus operating surplus, that is rent, interest and profit plus mixed income, or it can also be written as rent plus wages plus interest plus profit whenever you get factor cost and whenever you get right. What is the third formula? Net is equals to gross minus depreciation. Fourth, net is equals to receipts minus payments. Based on that, we are having a net exports, net indirect taxes, this one, NFIA, net factor income from abroad. Fifth one, domestic plus NFIA is equals to national. Sixth one, value added. Value added means what is the formula? Value of output minus value of intermediary, and this is used for to design. Value added is also known as domestic product. right? And we are having personal income, NNP at factor cost or national income minus income earned but not received plus income received but not earned. Seventh one. Eighth one, disposable personal income minus personal taxes, direct taxes, okay, right? Consumption plus savings. Ninth one, per capita income, national income by total population. Whenever you get per capita, denominator should be in total population. Yes or no? Right. Over. And now methods. Whenever you come across with the product method or value added method or industry of origin method, other names, okay, right? Basic, you have to take a GDP at market prices or gross value added at market prices is equals to, what's the formula? Right, summation of value added is equals to value of output minus value of intermediary, or its summation. Otherwise we can write it as sales plus change in stock. Change in stock means what we have to take? Closing stock minus opening stock minus value of intermediary. Okay, if we go with the income method or factor income method or under that method you have to start the basic information with GDP at factor cost, compensation to employees plus operating surplus plus mixed income plus depreciation. Because all the values will be in net, we need a gross value, so I did depreciation. The last one, expenditure method. Expenditure method also starts with GDP at market prices. GDP at market prices is equals to, what is the formula? Final consumption expenditure plus gross domestic capital expenditure or capital formation plus expenditure on exports and imports. Exports minus imports, net exports. That's it. You have to remind these formulas so that it will be easy for you to how to write the definition. What is the definition of national income in economics? It is the money value of all the final economic goods and services that are produced in an economy during a given period of time. What is the national income definition in economics for finance? It is NNP at factor cost. It refers to the market net values of final economic goods and services produced, gross of depreciation. I'm explaining about national income, isn't it? It is the net value of all the final economic goods and service produced in produced within the domestic territory of a country during a given period of time plus NFIA. Net values, domestic plus NFIA becomes national. That's it. Nothing is mentioned, take market prices. Domestic product is also known as value added. That's it regarding to this. All formulas have been provided, so based on this you can go. At the same time, if problems have been given based on methods, you can go. In the previous topic, they have, in previous question papers they gave market prices, they gave subsidies, they have given indirect taxes, they asked us to find out the factor cost, isn't it? So all those information you will get in these formulas. So whatever may be the formula, you can do it based on this formula. Whatever may be the problem that has been exposed in the question papers, you can solve it very easily. That's it. We concluded the national income chapter. Before that, they may ask any challenges, importance. If you write in the positive sense, it becomes importance or usefulness. If you write any difficulties while you are facing depreciation, you take the example. You are having certain accounting standard regarding to depreciation. Yes or no? Right. But you have to know the same depreciation will be applicable to all the gadgets in equal manner. No. Some its lifetime may over before its sometimes the depreciation may be more, yes or no? Sometimes depreciation may be less. So it is not, it is on an average basis they will take, but it is not the correct value. So like that, we can mention anything. Non-economic activities not possible to be included. Qualitative technological improvements or qualitative improvements cannot be expressed in national income. All these topics in the positive or in the negative, wherever it is required, you have to paste it. But as a professional student, there is no need to by heart advantages or disadvantages or consequence of any topic. Any topic. What will be the consequences, right? You just assign it, what will be its effect and what are its consequences. You have to write off your own. But these formulas means we have to by heart. That's it. We have concluded the chapter of national income. The first unit of first chapter has been completed. That's it. We are going with the next chapter. had completed the first unit of first chapter, determination of national income, that is macroeconomic aggregates and measurement of national income. And the weightage of this unit, the total chapter weightage is minimum 12 marks and maximum we can expect up to 12 to 15 marks. The variation will be, right, minimum is a 12 marks compulsory, and many times we are getting 8 marks, 6 marks, even 7 marks like that. One problem, sometimes 2 problems they are asking, one definition they are asking, like that. Even differences also, you just write the definitions of both, you can get the differences. That's it. Successfully we had completed this chapter. Over. And now the second unit of the first chapter is the Keynesian theory of determination of national income. And with these together, national income chapter and Keynesian theory, get together 12 marks. Minimum 12. Clear? Yes. Right. A very small chapter, we can conclude very easily. Right. The second unit of the first chapter, that is a Keynesian theory of determination of national income. Basically, we need to know some basic points of this. It will be easy for us while we are discussing any topic regarding to this. Right. In any economy, already in the previous class or previous video, we discussed about how many economic agents are there. Means the people participating in the economic activities will be regarded as economic agents. Who are they? Either they should be the consumer, or also known as households, right? Producers, also known as firms or business firms. Next, government, isn't it? In any country, okay, in any country, who will participate in the economic activities? They must be either consumer, or they must be producer, or government. None other than we can find nobody. Other than this, we can't find nobody. Yes or no? We can find nobody. Right? Right? It is consumers, also known as households, producers, also known as business firms, and the last one is government. Okay? Right. And these domestic consumers, domestic producers, and domestic government. At the same time, not only these people, we can come across in the modern world with the open market economy, right? We can come across with the foreign households, foreign firms, foreign government. Yes or no? Right. So we can segregate these economic agents into 4 sectors. Now we are having only 3 sectors now: primary sector, secondary sector. Sector means part. In mathematics, you will draw sector of a circle. A part of a circle is a sector. Yes or no? In the same manner, sector means part. Economic agents have been classified into 4 parts or 4 sectors. What are those 4 sectors? Right, it is household sector or consumer sector. We don't use the word of consumer sector. We use the word of household sector. The next one is business sector or firm sector or business firm sector. The next one is government sector. These 3 are the sectors of domestic. At the same time, as we are facing the open market, means we have to go with the foreign sector. Foreign sector is a combination of foreign household sector, foreign firm sector, foreign government sector. 3 together is known as foreign sector. So how many sectors are there in any economy? 4. Who are they? Household sector, right? Business sector, right? Government sector, and the last is foreign sector. Clear? Right. How many markets will be there? Purchase and sale, demand and supply together is known as market. What is money market? Demand for money and supply of money together is known as money market. What is labor market? Demand for labor, supply of labor together is known as labor market. What is input market? Demand for input and supply of input is known as input market. That's it, no? What is bullion market? Demand for bullion and supply of bullion is known as bullion market. What is securities market? Demand for securities and supply of securities. Purchase and sale are demand and supply of any product, of anything. We call it as a market. Yes or no? Right. How many types of markets an economy has to face in any economy? Whether it is an open economy or closed economy, how many markets will be there? In the previous we discussed about the sectors. Yes or no? How many markets will be there? Yes, we have to face 3 markets in any economy. The first market is input market. Inputs also known as factors of production. So we call it as factor market. Next, by using these inputs, we produce output. So we call output market. Output market is also known as product market. And the last one is financial market. Right? Right? I am selling my labor to Masterminds. And Masterminds is purchasing my labor. I am supplying my labor. Okay? And Masterminds is demanding my labor or purchasing my labor, and this is a labor market. Yes or no? My market right now, what I am selling and Masterminds is purchasing is a labor market. Clear? Right. I am an input for this college. Yes or no? This comes under input market. Input market is also known as factor market. Right? My video making in this process is a input market or factor market. Yes or no? Right. If these videos are sold in the market by the Masterminds, the video is an output. Yes or no? This output or product has been sold in the market. Some consumer will be consumed in the market. Yes or no? Automatically this becomes output market or product market. Clear? Okay. So there are three markets: input market or factor market. The second one is output market or product market. And the last one is any sales has been occurred, either it should be input or intermediary, or otherwise it should be output. More than that, we can come across with nothing other market. Right. The last one is financial market. In the financial market, we have to know the classification of financial institutions first of all. Then you can get the clarity. Financial institutions is a combination of two. One is banking, and the next one is non-banking financial institutions or non-banking financial corporations. As you are having a different subjects or papers, maybe in CA Inter, right? What are the basic difference between these two? Bank accept deposits and also lend the loans. Especially they have to accept the CASA deposits and they have to lend the loans. It is a banking. If non-banking means either it can accept the deposits or lend the loans, but they cannot do the both. You take the example of insurance companies. Insurance companies accept the deposit from the public in the form of premiums. Say daily, annually, monthly, half yearly, year, month, like that. It will collect the premiums. So it is accepting the deposits from the public in the form of premiums. But insurance company never lend the loans to the public. Yes or no? That means it is accepting only deposits. It is a non-banking, right? Like that, chit funds, nidhi companies, all those things are mutual funds, all. They can accept deposits or they can lend the loans, but they cannot perform the both of lending and accepting the deposits. Then it comes under non-banking. We are having non-banking financial companies or institutions like asset management companies, mutual funds, all you can come across in your syllabuses, right? Over, right? So financial market we have to consider, right? Hope you might have understood basics of this. So how many sectors are there? 4 sectors: household sector, business sector, government sector and foreign sector. How many markets are there? 3 markets: factor market, product market and financial market, right? The last one in this, right? How many sector models are there? How many sector models? Do only consumer can perform the market? No, producer has to be required. Do only producer can perform the market? No, consumer is required. So, minimum 2 members are required to perform a market. Yes or no? Right. We are having sector models of 2 sector model. Okay. Next, in a 2 sector model, we can come across with whom? Household sector and business firm sector. Okay. Again, 3 sector model. In the 3 sector model, which sectors can be available for us? Household sector, business firms and government. In the 4 sector model, we can come across with household sector, business firm sector, government sector and foreign sector. Ma'am, why there is no only one sector model? Only consumer can do nothing, only producer can do nothing, only government also can do nothing, only foreign also can do nothing. So minimum 2 is required. So we can come across in this chapter with the 2 sector model, 3 sector model and 4 sector model. Hope it is clear. So totally you need these basics: sectors, 4 sectors, household sector, business sector, This business sector also you can call. Next, government sector and foreign sector. How many markets are there? 3 markets are there. Input market or factor market, output market or product market, and the last one is financial market. How many sector models are there? 3. 2 sector model, 3 sector model and 4 sector model. Yes. Before going to this, let us know one basic topic here. What is leakages and what is injection? Then we can enter into the topic. Right. Leakages. Okay. What is meant by leakages? Leakages means outflow of income. Outflow of income of not government, of private individuals. Okay. Outflow of income means, will it decrease the aggregate demand or will it increase the aggregate demand? Why you are using aggregate demand? We can use even demand, no. As we are doing with the macroeconomics, we have to use the word of aggregate demand, right? With the outflow means payments. With the payment of income or more payments of income, what happens? Aggregate demand decreases. So, whatever will be the topic, if it leads to fall in aggregate demand or if it leads to outflow of income, you have to consider it as a leakage. Ma'am, do any leakages are there in this chapter? Yes, we are having totally 3 leakages of this chapter. What are the 3 leakages? Let us conclude. Okay, the first one is savings. How savings can be leakage? Right. The next one is taxes. The last one is imports. You remember it as STM. What is STM? It's not SM. It is STM. What is STM? Savings, taxes and leakages. Let us see how they leads to leakage of income. Savings. If you keep savings, what happens to your consumption? If you save more, what happens to your consumption? Decreases. If your consumption is decreasing means nothing but in the economy, aggregate demand is decreasing. Yes or no? We have to consider private. Private means households and firms. Okay. If corporate savings or personal income savings are going on increasing in the economy, their consumption will decreases. If their consumption decreases, demand in the economy will decreases. So we can say that savings leads to fall in aggregate demand. Ma'am, we can accept with the fall in aggregate demand. How the savings can become an outflow of income? Savings is, you feel it as cash in hand. Yes or no? Right. Never the cash in hand becomes, it becomes idle saving. Saving means when you save the same money in either banking or non-banking. Right? Either in the banks as the fixed deposits or saving account deposits, right? Or in the insurance companies or whatever it may be, stock market like that. That becomes a savings. Cash at bank. Okay. Not idle cash balances or cash in hand. Clear? Clear? So, when you keep in the financial market, right, your savings is a outflow of income but not inflow of income. Though it is yours, it will be in the bank. So, we call it as cash at bank like that. Yes or no? It's an outflow of income. Yes or no? I'll show in the chart. Yes or no? Circular flow chart, right? The next one is taxes. Right. Is taxes is a outflow of income to the private sector or inflow of income to the private sector? Whether direct taxes or indirect taxes, whatever it may be, the taxes is a payment to the private sector. It is an outflow of income. So, it is a leakage. Yes or no? As we pay more and more and more and more taxes, what happens? Right. Less will be personal disposable income. So, with less personal disposable income, we can have less aggregate demand. So, we can say that the higher the taxes, the lower the aggregate demand. Yes or no? The higher the taxes, the lower the aggregate demand. The higher the savings, the lower the aggregate demand. Yes or no? Right. Imports. The higher the demand for imports. If we all are maintaining only foreign mobiles, especially China mobiles or US mobiles of Apple, right, you just imagine what about the demand for domestic mobiles decreases. So, when imports increases, aggregate demand for domestic goods, what happens? Decreases. Clear? Because of savings, our aggregate demand decreases. Because of our taxes, aggregate demand decreases. Because of our imports, aggregate demand for the domestic goods decreases. So all these three will be considered as the leakages because these three leads to fall in aggregate demand. Yes or no? Fall in aggregate demand, rise in savings, rise in taxes, rise in imports leads to fall in aggregate demand. So we call them as leakages. Also these are outflow of income from the private individuals, right? The next one is injection. If leakages is outflow of income, what becomes the injection? Inflow of income to the private individuals, okay? Private individuals and private firms. Right. If inflow of income arises, what happens? Our aggregate demand increases. Yes or no? Right. So, if any concepts leads to rise in aggregate demand or adds to our income, we call it as injection. We have to call it a. Ma'am, do any examples are there? Yes, we are having three. That is investment expenditure, government expenditure and exports. Yes, I am giving the explanation to this. Investment expenditure. Okay. As investment expenditure of a firm increases, just imagine what happens to aggregate demand. Investment expenditure means it may be working capital or fixed capital, whatever it may be, right? If it is working capital, if he increases the working capital, more number of people will yield income. At the same time, what happens? Aggregate demand increases. Or the firm itself, if it increases the investment expenditure, just imagine what happens. Right. What happens? Demand for the goods and services, what he is doing will increases. Yes or no? A firm, I am increasing working capital right now. Right. I can increase the number of people for labor, right? Number of laborers I am increasing. Automatically what happens? Wages increases. So automatically more number of people will purchase the goods and services. Yes or no? Right. Raw material I am purchasing. So the demand for raw material increases. Right. Say you take direct material, direct expenses, direct labor or otherwise P&L account or other any overheads, factories and administration. Any working capital may be used at any sense. Factory administration and selling and distribution overheads, whatever it may be, whether direct expenses or indirect expenses, it will increases. As it increases, the demand for certain goods and services will increases. So, rise in investment expenditure leads to rise in aggregate demand. Let's go for the government expenditure, right? New PRCs came, right? They have increased DA still 10% more, right? What happens now? Government expenditure increases. As government expenditure increases to the government employees, the income will increases. As the income increases, it leads to a rise in aggregate demand. Any sort of government expenditure, say revenue expenditure in the form of salaries to the government employees, say capital expenditure in the form of construction of infrastructure, energy, transport, communication, banking, like that. At the same time, transfer payments, whatever may be, it may be revenue expenditure, it may be capital expenditure of the government or transfer payments of the government. Whatever may be the expenditure of the government will be income to the common people. Yes or no? As government expenditure increases, common people income increases. It becomes inflow of income to the public. As inflow of income to the public, what happens? Rise in aggregate demand. Yes or no? Right. The last one is exports. Right. Exports. What is the exports? Demand for domestic goods by the foreign people. As exports increases, we can say that aggregate demand for domestic goods will increases. Yes or no? Aggregate demand for the domestic goods increases not only domestically but also internationally. It leads to rise in aggregate demand. Yes or no? So, which concepts leads to rise in aggregate demand? Investment expenditure, government expenditure and exports. Ma'am, how can we say that inflow of income because of exports? Very easy. If we exports, the proceeding from the exports will be received. Yes or no? If we export any goods and services, the value of those goods and services are proceedings from the exports must be received. Okay, it is a receiving concept. That means inflow of income. That's it, no? By exporting goods and services, it is an inflow of income to the country. Clear? Right. There is no need to by heart all these things. You just know what are injections. IGX. What are injections? IGX. What is IGX? Investment expenditure, government expenditure and exports. And what is leakages? Savings, taxes and imports. That's it. How many sectors are there? 3, 4. What are they? Household sector, business firm sector, government sector and foreign sector. How many markets are there? 3. What are they? Factor market, product market, financial market. How many sector models are there in this class, in this subject? 3. What are they? 2 sector model, 3 sector model, 4 sector model. Right. What is meant by leakages? Outflow of income or fall in aggregate demand. What is injections? Inflow of income or rise in aggregate demand. What are the examples of leakages? STM. What are the STM? Savings, taxes and imports. And what are the injections? IGX. What is IGX? Investment, government expenditure and exports. That basically you have to remember. Right. I am going from topic point of view. Just first you have to know how to draw the graphs so that it becomes easy while I am explaining any graph. Okay, right up. Functional relationship is very important. It doesn't mean of making functions and making new relationship in the functions. Here the functional relationships is of 2 types. One is direct relation and other one is not indirect. It must be inverse relation. These are the basics for drawing the graph, please. Right. What is the direct relation? Right. If 2 variables we have to decide, other things remaining concept. X and Y are the 2 variables. If X increases, Y also increases. If X decreases, Y also decreases. And this relation is known as direct relation. Ma'am, can we have any example? Right. If the value of X 10 to 20 has been increased. If the value of Y has been increased from 100 to 200, the value of X also increased. The value of Y also increased. Rise leads to which relation? Direct relation. What will be the slope of this? What's the formula for the slope? Y2 minus Y1 by X2 minus X1. So just calculate the slope for this. 200 minus 100 plus 100, 20 minus 10 plus 10 is equals to plus 10. It doesn't requirement of value is not required. The plus or minus symbol is required. So whenever you get the direct relation between the 2 variables, certainly the slope will be positive. So we call this relation as also positive relation, right? Slope will be positive. If slope is positive, what will be the shape, what will be the slope of the curve, right? Graphical representation is required. This is the x-axis and this is the y-axis. 10, 20, 100, 200 on the y-axis. Well, it is 10, 100. While it is 20, it is 200. The curve slopes upwards. Yes or no? So we can say that when there exists a direct relationship between the 2 variables, certainly the slope will be positive and the curve slopes upwards. It is the basic thing that we have to remember, because any presentations or documentation is required. Never we go with plotting the points and keeping. Just by maintaining the relation, we will draw the graph. Clear? Right. Ma'am, you have taken rise. Even for fall also, you will get the same values, same positive slope. We need this. Yes. I have given you with rise. Let's go with the fall. If X falls, Y also falls. This is known as direct relation. 20 to 10, 200 to 100. What is the slope formula? Y2 minus Y1 by X2 minus X1. 100 minus 200 minus 100. X2 minus X1. 10 minus 20 minus 10. Minus gets cancelled. The answer will be plus 10. So hope you might have identified the slope will be positive. So whenever you come across with the direct relation, is rise or fall, the slope will be positive. And how the curve will be, you have to know. Yes or no? Curve 10, 20, 100, 200, for 20, 200, for 10, 100, again the curve slopes down, upwards, from left to right. Whenever you come across with the direct relation between the variables, that means one rises means opposite a term also should rise. If one falls means other term also should fall, then we call it as direct relation. Rise, rise, fall, fall. Certainly the slope will be positive and the curve slopes upwards from left to right. The last, inverse relation. What is inverse relation? If x rises, only two variables, other things remaining constant, right? If x rises, y will fall. If y will fall, x will rises. This is the inverse relation. What will be the slope of this? Certainly it should be negative. Yes, we can consider one example. X increases, y decreases. X has been increased from 10 to 20, while y has been decreased from 200 to 100. Just calculate the slope of this. What will be the formula? y2 minus y1, 100 minus 200, that is minus 100. 20 minus 10 plus 10. The answer will be minus 10. Value is not required. The answer will be in negative terms. Negative terms means the slope is negative, yes or no? Slope is negative. So we call this relation as negative relation. Clear? When there exists an inverse relationship between the two variables, certainly the slope will be negative. When the slope is negative, how the curve will be obtained? There is no need to every time plot and everything. 10, 20, 100, 200. When it is 10, it is 200. When it is 20, it is 100. The curve slopes downwards from left to right. So, if the curve slopes upward means you have to keep it in mind it is direct relation with a positive slope. When the curve slopes downwards, you have to keep it in mind that is inverse relation with a negative slope. And how many functional relationships are there? Two. What are they? Direct relation and inverse relation. What is direct relation? Rise, rise, fall, fall. The slope is positive and the curve slopes upwards. What is inverse relation? Rise, fall, fall, rise. The slope will be negative and the curve slopes downwards from left to right. Right, in the leakages, that's why I have mentioned rise, fall. It will be useful for you. Please watch it out. Right. Just to see, savings are increasing, aggregate demand is decreasing. Which relation? Inverse relation. If we draw the curve for this means we will obtain downward slope. Clear? Taxes are increasing, aggregate demand is decreasing. Inverse relation. Direct relation. Direct relation. Direct. We can draw the curve very easily. No need to have the points and plotting them on the graph paper using the scale or whatever it may be. It's not required. Just by watching out the graph, we can say that there exists a direct relation between these two variables like that. Clear? Performance of the company, growth rate of a company, shares, everything you will get in this graphical representation. Just by watching out the graphs, you have to say which relation exists in this market at this particular time and all. It's very important. Okay, right, and there are two more based on dependency. Based on dependency, we are having depending relations of two types: direct dependency or direct relation and indirect relation. What is this direct relation and indirect relation? Right, in the previous chapter, we discussed what is the personal disposable income or disposable personal income is equals to personal income minus personal taxes is equals to consumption plus savings. That means right now my disposable income I am using for consumption and savings. Yes or no? My disposable income can be used for consumption saving. Right? I need one topic. My savings depends upon income. Savings depends on income. Yes or no? Income depends upon savings or savings depends upon income. Savings depends upon income. But income does not depend savings. I need to want to save every minute 1 crore. Do my management provides every minute 1 crore? It's not possible. That means my savings has to depend on income, but my income does not depend upon savings. Yes or no? Right. Savings depends upon income. This is direct relationship. Right. Now, investments on income directly. My savings depends upon income directly. Investments depends upon. To my investment depends upon savings or my income. It will not depend on my income. My income will be used for either consumption or savings. That savings can be converted into investments. So I can say that my investments depends upon savings directly. Hope you might get this point. Right. Here direct relation is rise, rise, fall, fall. That relation is not here direct. Right. Dependent relation. That means my savings are depending upon my income directly. And my investments are depending upon my savings directly. In these two things we can cancel the common thing. Right. Let's go with the income and investment. I need answer. Do income depends upon investments or investments depends upon income here? My investments depends upon income. That's it now. Investments depends on income, not directly through savings. Savings depends upon income. So what we have to write? My saving is depending on income, right? Investments are depending upon savings. You write first point here and make it 2 as here, and third it will be easy for you. My investment depends upon my savings. My savings depends upon my income. So I can say that investments depends upon income indirectly, but not directly. My investments are directly depending on savings and indirectly depending upon income. Yes or no? Right. Which factor depends indirectly on income? Okay, which factor or which variable depends on income indirectly? Then in any concept, okay, not only in economics, right, in any aspect, how we have to assume it? We have to assume it as, first you write constant. This term will be easily notified for you. Constant, or you have to treat this as it is constant, no changes in that. You have to make it as autonomous, or it is not endogenous factor which can influence. It cannot influence, so we have to consider it as exogenous. Clear? We discussed about the functional relationships into two, direct and inverse. Direct, rise, rise, fall, fall. Slope is positive. The curve slopes upwards from left to right. Next, inverse relation, right, rise, fall, fall, rise. The curve slopes downwards and the slope will be negative. Here the next one is dependency relation. Dependency will be in two types, direct dependency and indirect dependency. And based on dependency relation, we are having two, direct relation and indirect relation. Direct means, let's take the example is X copies from Y paper directly. That's it. Direct relation and indirect relation. So whichever depend on income indirectly, in this chapter we are going to assume them as constant or exogenous or autonomous. You just write a constant also, no problem. But in the material we sometimes we use the word of exogenous and somewhere we use the word of autonomous. So to have the balancing of force, I wrote in the same way. That's it. Right? So far what we have discussed, sectors, household sector, business sector, government sector and financial sector. And the next one, how many markets are there? 3. What are they? Input market or factor market, product market and financial market. And the next, how many sector models are there? 3. 2 sector model, 3 sector model and 4 sector model. Okay, over. Next one. Leakages, outflow of income, how many types are fall in aggregate demand? STM, savings, taxes and imports. Injection, inflow of income, increase in aggregate demand, what are they? SIGX, investment expenditure, government expenditure and exports. That's it now. Right now let us go sector by sector model. Before that, first one is two sector model without financial market. Without which market? Financial market. Then how many markets will be there? Only 2 markets will be there. What are they? Input market, output market. Yes or no? Right. In the 2 sectors, which sectors will be there? Which sectors will be there? Only 2. Households, business firms. As no financial market, how many markets will be there? Only 2 markets. What are they? Product market and factor market. That's it. You can draw the graph. It doesn't mean that basically it should be horizontal or it should be vertical. It should be in the square shape or broken lines. Nothing is. Take 2. You can present in any manner. We just give the importance to the outflow or inflow. Right. Household sector. Right. And this is the business sector or firms. Yes. If they ask about assumptions, what we can write? Only 2 sectors are there, business sector and firm sector. Right. Government, there is no government sector, so no government sector, so no personal taxes. If no taxes means personal income is equals to personal disposable income. That's it. Right. Next one. There is no savings. Sorry, all the income should be spent entirely. There is no corporate savings, there is no household savings because there is no financial market. Yes or no? So, all the income will be spent not on a single day, but it will be sent today or tomorrow or day after tomorrow. It must be spent, that's it. Either on the goods and services or whatever it may be, right? First production will take place or consumption will take place. First production has to take place. For the process of production, what are required? Factors of production. What are the factors of production? Land, labor, capital, organization. Who has to provide these to them, to business, right? Households provide land, labor, capital, organization to business sector as a form of input market. Yes or no? Right. Business people will purchase. Is this arrow mark is okay? Outflow from household. Even for a business, any manager or owner or organizer, whomever they may be, they have to come from the households itself. Yes or no? That means even organization also will be provided by the households. So, these are the factors of production that are supplied by the households to the business, and this market is known as input market. Do they provide anything freely? No. The business in return has to provide factor payments. Has to provide factor payments. Yes or no? Right. Now, by using the factors of production, the firms produce goods and services. And they will sell to households, and no other sectors are there to sell. The business people will sell to households the produced goods and services. Right. They will provide for free? No. In return, the households, whatever the income that has been received by the business in the form of factor payments or factor income, they will use that money to purchase goods and services. Market price of goods and services, and this will be paid by the households to the firms. Yes or no? Right. You are getting broken lines and continuous lines if you watch it out. You just imagine broken lines are goods and services, land, labor, capital and organization. These two represents quantity or money value. These two represents quantity or in money value, that means in price, quantity. When we represent in quantity, I told you in the previous chapter, RBQ, real, base year, quantity. Whichever the concept represents the quantity, you have to write it as real variables. So, what are the real variables here? Land, labor, capital, organization. What is the other output point of view? Goods and services are the real variables. Right. What are the nominal variables here? Factor income or factor payments, rent, wages, interest and profits. It is the price of labor, price of land, price of capital, price of organization. At the same time, market price of goods and services also expressed in terms of prices, NCP. nominal current year prices. Yes or no? Right. So for that sake, we have given the dotted lines to represent the real flows, and continuous lines to represent the nominal flows in terms of money or in terms of prices. Right. Here there is no financial market. When there is no financial market, there is no savings. Yes or no? No savings of household sector and no savings of private business firm sector. When there is no savings, how the market will be? You just assume. That's it. Right? This answer is over. Right. Let us have a look on this. Right. Let us write. Now, first what happened, ma? The money, how it has been flown from the business to households in the form of factor payments. Factor payments by the business firms becomes equals to household income. Yes or no? Factor payments by the households is equals to household income. Yes or no? Household income, as there are no savings, okay, becomes equal to household expenditure on goods and services. Yes or no? Yes or no? Right. Household expenditure is on goods and services means the amount again moves to business people. So we can write here household expenditure is equals to total receipts of the business firm. Clear? Right? Total payments of a business firm is equals to value of output. That's it, no? Price into quantity. Summation of value of output. That's it, no? This is the basic condition what you have to remember, ma. In the two sector model, without financial sector, that means the business and households, when there is no financial sector, what equation, new equation will arrive at the equilibrium means factor payment is equals to, right, our firm's payment is equals to household income. Household income is equals to household expenditure. Household expenditure is equals to total receipts of the firm. Total receipts of the firm is equals to value of output. That's it now. What amount the producer will receive? That is nothing but value of output. That's it now. At equilibrium. If they ask about any assumptions, how many sectors are there? Two sectors. What are the two sectors? Households, business sectors. What the households will perform? Final consumption expenditure. What the business people will do? Investment expenditure is, right. Households also will not save. Producers also will not save. Over. No government, no taxes. So personal income is equals to personal disposable income. What is the formula for the personal disposable income? Personal income minus personal taxes. As no government taxes becomes zero, personal income is equals to personal disposable income, and no international trade because there is no foreign sector. So it is a closed economy. Yes or no? Foreign sector is not present, so it's a closed economy. That's it. Those are the assumptions. Prices are assumed to be constant. Technology is assumed to be constant. Those are the common assumptions we can write as in economics. And next, what happens? You just, what is the inflow? What is the outflow? Which flows from which variable? The household sells their factors of production to the business firms and receives certain amount in the form of factor income. This factor income should be entirely spent on goods and services. Households also do not save. Business people purchases factors of production from the households and sell goods and pay factor payment and produce goods and services and sell them to the households for certain price. That's it now. You can do of your own. Labor, capital, organization, land, goods and services are the real variables of outflows or inflows, right? Nominal are market prices of goods and services are rent, wages, interest and profit because they are expressed in money terms. You just imagine if real is outflow, nominal will be inflow. Just watch it out. Houseflows outflow is real outflow is land, labor, capital. For them, they are receiving rent, wages, interest, income. Yes or no? Inflow. That means real and nominal flows in which direction? Opposite direction. Goods and services are real. They are expressed in quantity. They are outflow to the business firms. But in return to that, the proceedings of or the values of those goods and services will be received by the firm. Money will be received. Quantity will be sold. outflow. So real and nominal are oppositely related. That's it, no? One is outflow and the other one is inflow. That's it. It is a two-sector model without financial sector. If there exists a financial sector, how it will be? Right. The formulas we have to go right. Right. My income. I'm taking two-sector model with financial sector. In the two-sector model, who will be there? Households, firms, two sectors. And what will be the three markets? Product market, factor market and financial market. Three will be there. Yes, my income is equals to, before going to that, let me tell. Right. How many sector models are there? Three. What are they? Two-sector model, three-sector model, four-sector model. Yes. Who will be the sectors here? Households, business firms, BF. And three-sector model, households, business firms, government. In the four-sector model, households, business firms, government and foreign sector. That's why I wrote business firms, because firms also F, foreign sector also F. It's over. Right. What is the aggregate expenditure of these? Household expenditure plus business expenditure. Yes or no? Household expenditure or business expenditure, whatever it may be, consumption expenditure plus investment expenditure. Can we consider? The expenditure made by the households will be recorded as consumption expenditure, whereas the firms make it as investment expenditure. Yes or no? Right. In the three-sector model, households make consumption expenditure, business firms make investment expenditure and government makes government expenditure. Yes or no? What is the aggregate expenditure in the three-sector model? C plus I plus G. What is the aggregate expenditure in the two-sector model? C plus I. What is the aggregate expenditure in the four-sector model? Right. For the households, consumption expenditure. For the business firms, investment expenditure. For the government, it is government expenditure. For the foreign sector, you have to write net exports. Exports minus imports. Right? While we are making expenditure means we have to purchase in return something product. We are purchasing means it is a demand. So aggregate expenditure is also known as aggregate demand. That's it now. While we are consuming only, we have to face the expenditure. Yes or no? Right? In the what is aggregate demand is also known as aggregate expenditure. Right? In the two-sector model, what is the aggregate demand? C plus I. What is the aggregate demand in the three-sector model? C plus I plus G. In the four-sector model, C plus I plus G plus X minus M. Right. Right. When there is expenditure, there will be income. When we can get the income? When we sell. When we sell means what we can say? Aggregate supply. That's it, no? Aggregate supply is also known as aggregate income. Yes or no? Clear? Aggregate demand is also known as aggregate expenditure. Aggregate income is also known as aggregate supply. Okay, right. Better you use the word of aggregate demand and aggregate supply. Income, expense. No need to mention all these things, right? Now, aggregate income, right? In the two-sector model, whether the households or firms, whatever the income they get after paying the tax. In the two-sector, there is no government, no taxes. What they will do their income, whether they consume or they will go for the savings. Yes or no? Even myself, as a personal income, what I will do? My income, there is no government, there is no need to pay any taxes. It becomes disposable income for me. What I will do with my disposable income? I will go either for the consumption or for the savings. Yes or no? Even from what it will do? Either it consumes or it will go for the savings. Corporate savings, undistributed profits or retained earnings. That's it, no? Right. Consumption plus savings. If we go for the three-sector model, the consumption plus savings. And what is the income for the government? Taxes. Savings plus consumption plus savings plus taxes. Right. For the four-sector model, For the households plus business firms, consumption plus savings. For the government, it is taxes. By means of exports and imports also, who will receive the revenue? Private sector means it will be included in consumption and savings, yes or no? Right, if it government means government, it will be included in the taxes. By means of imports and exports, government will levy custom duties, either import duty or export duty, or the government will receive the revenue in the form of taxes itself. So no other any point, right? So you will get confusion. Aggregate expenditure is also known as aggregate demand. Aggregate supply is also known as aggregate income. That you can do it later, not necessary right now. For examination point of view, not necessary. So I am preparing. Unnecessary concept. I told you there are 3 sector models. One is 2 sector model, 3 sector model and 4 sector model. In the 2 sector model, we come across with the 2 sectors, household and business sector. Aggregate demand is C plus I, aggregate supply is C plus S. In the 3 sector model, aggregate household sector, business sector and government sector, aggregate demand is C plus I plus G and aggregate supply is C plus S plus T. And in the 4 sector model, aggregate households, business firms, government and foreign sector, aggregate demand is C plus I plus G plus X minus M. Aggregate supply is C plus S plus T as usual. Right. And now we have to know the equilibrium. When there is demand and supply, we have to equate them. Yes. At equilibrium. At equilibrium, what is the condition? Aggregate demand is equals to aggregate supply. In the 2 sector model, what is the aggregate demand? C plus I is equals to, what is the aggregate supply? C plus S. CC gets cancelled. I is equals to S. That's it now. In the 2 sector model, I is equals to S. Next, in the 3 sector model, aggregate demand is C plus I plus G is equals to aggregate supply is C plus S plus T. CC gets cancelled. What will be at equilibrium? I plus G is equals to S plus T. That's it now. Right. In the 4 sector model, what is the equilibrium? I am writing here. C plus I plus G plus X minus M is equals to C plus S plus T. CC gets cancelled. And what is the equation? I plus G plus X minus M is equals to S plus T. And this can be written as I plus G plus X is equals to S plus T plus M. That's it now. So in the 4 sector model, I plus G plus X is equals to S plus T plus M. That's it now. The total topic chapter has been ended here. This is the basics what we have to know, and if we know the curves how to draw, it will be very easy. And circular flowcharts we have to do. Right. 2 sector model. Aggregate demand C plus I. Aggregate supply C plus S. Equilibrium I is equals to S. 3 sector model. Aggregate demand C plus I plus G. Aggregate supply C plus I plus C plus S plus T. Equilibrium I plus G is equals to S plus T. 4 sector model. Aggregate demand C plus I plus G plus X minus M. Aggregate supply C plus S plus T. At equilibrium, I plus G plus X is equals to S plus T plus M. Hope you can remember. I told you that savings, taxes, imports are leakages. Yes or no? What are the leakages? STM. I already told you. What are the injections? IGX. Yes or no? Right. Injections are IGX and leakages are STM. Here I investment is the injection, S is the leakage. At equilibrium, leakage is equal to injection. Yes or no? In the 3 sector model, investment expenditure, government expenditure, both are injections. Savings and taxes, both are leakages. So we can say that even in the 3 sector model also, injections is equals to leakages. Yes, in the 4 sector model, I plus G plus X are the injections, S plus T plus M are the leakages. So here also at equilibrium, leakages is equals to injections. Yes or no? So at equilibrium, we are going to prove that leakages is equals to injections. Right. That's it. Right. So we can go sector wise. I explained only 2 sector model with two sector model without financial market. Right. I am going now with 2 sector model with financial market. Not financial management, FM, it is financial market, right. Now, let's go with the topic here, right. So, savings will be there, yes or no, right. My disposable income, in the two-sector model, there is no government. My income can be used for consumption and savings, yes or no. My income can be used for my income. I am representing my income with Y. Okay, is equals to can be used for consumption and savings. So I can say that my consumption depends upon income. So any representation relationship, how you have to write? Dependent you write on the LHS, independent you write on the RHS. Okay, dependent on LHS and independent on RHS. Consumption income. In these two, consumption depends on income, but income does not depend upon consumption. So, consumption becomes dependent. Dependent should be on LHS. What is F? Functional relation. Either direct or inverse, we have to know. Clear? Right. Also, we can write even savings also depends upon income, but income does not depend on savings. So, savings is a dependent. Saving depends on income. So, two function definitions are over here. What is the two function? Consumption function and saving function. What is the consumption function for definition? Consumption function means C is equal to F of Y. How can we write this? Consumption function represents the functional relationship between two topics. What are they? Income and consumption. But we have to take here disposable income, aggregate disposable income, and we have to take aggregate consumption. That's it. Consumption expenditure. You write in those full forms, that becomes a definition. What is the consumption function? The consumption function expresses the relationship between Y and C. What is Y? Write the full form. Aggregate disposable income. What is C? Consumption, aggregate consumption expenditure. The consumption function expresses the functional relationship between aggregate income and aggregate consumption expenditure. That's the definition also. If you want, you can watch it out. Okay, right. Next, what is the saving function definition? Yes, saving function expresses the functional relationship between Y and S. What is Y? Aggregate income. What is S? Total savings. That's it, our aggregate savings. That's it, no? Right. Now, the next one, we have to go average propensity to consume. Average consumption, average savings, because we are having in total. Y means total income is equals to total consumption plus total savings we are having. We need in average per unit. At the same time, we need in marginal. Okay, na? Average savings. Whenever you get the word of average, okay, adjacent to average, you are having the word consumption. You just write its total in the numerator. Total consumption by total consumption depends upon. Consumption depends upon income. One small tip, whenever you go with the formulas basis, no, right, you have to know the genuinity of the formula, whether you are presenting in the right sense or not. Don't by heart the formula. I'll give one thing. Crops depends on rains, or rains depends on crops. Which one is correct? 1, 2. Which one is correct? Crops depends on rains or rains depends on crops? Crops depends on rains. That's it, no? The formula must be C by R. Numerator depends upon denominator directly. Any formula, you take gross profit ratio. Gross profit by sales. That's it, no? Into 100 means you will get answer in percentage. If you don't write 100 means we can get in numerical values or in decimals. That's it, no? Any formula of costing or FM or accounting, whatever you take, the numerator depends upon denominator. current asset ratio, current assets by current liabilities. That's it now. Any formula you do this and you can get very easily how those formulas have been framed. What is the basic ma? C by R. Just you remind credit. CR. Okay. Right. What is C by R here? Numerator depends upon denominator. Crops depends upon rains directly. We should not write indirect sense. We have to write only direct sense. Clear? Crops by rains. Can you get the meaning? Right. Here, right now, I wrote total consumption. My consumption will depends upon my income. Yes or no? Right. Total consumption by total income or aggregate consumption by aggregate income. What is the formula for the average consumption? Total consumption by total income. How we can define this definition? Right. When total consumption is divided by total income, we get average consumption. But in our economics, we call it as average propensity to consume. Propensity means desire. It's not actually occurred. It is planned to occur. Expected to occur. So we write it as desire or propensity. What is average propensity to consume? Adjacent to average, we are having consume, right? Consumption by income. Because consumption depends directly on income. Yes or no? Average propensity to save. APS. Average savings is one and the same, and average propensity to save is also one and the same. No difference. But actually incurred, we consider it as average savings. But expected to incur is considered as average propensity to save. Because all these are assumed values, no? So we should not consider actually incurred. We have to consider expected to incur. So we write average propensity to save. That's it. Adjacent to average, we are having savings. So in the numerator, we will get about savings. Savings depends upon our income. Yes or no? Total savings by total income. Hope you know how to build the formula to my knowledge. Clear? Whatever may be the topic. You used to write average cost. Average cost is equals to, adjacent to average, we are having cost. Total cost by, we used to write total output. That's it, no? Average product. Total product. In the previous chapter, we came to that product means output. Output depends upon input. In the law of variable proportion, we come across with the number of laborers as input. Output depends upon input. So the formula becomes total product by number of laborers. Right? You can do with any formulas, guys. You will get the same thing. Numerator depends upon denominator directly. That's why those formulas have been built. Yeah? So what are the formulas? Right? Average propensity to consume. Y is equals to C plus S. That's it, no? We are having, right? C is equals to F of Y. It is a consumption function, right? S is equals to F of Y. It is a saving function. You can write the definitions of your own. APC, average propensity. Propensity, no meaning here. Just a desire or expected, right? Is equals to consumption by income. That's it, no? Because consumption depends upon income directly. Average propensity to save. Adjacent to average, we are having savings. So we are discussing about the savings. Savings becomes the numerator. It directly depends upon the income. Total savings by total income. Next one. Per unit means not only in average, we can even calculate in the marginal sense. Right. What is the marginal propensity to consume? Whenever we are getting the marginal means, in economics, marginal means slope. The difference, y2 minus y1 by x2 minus x1. That is slope. Whenever we want to calculate the change or slope, we use the word of marginal in economics. Marginal propensity to save. Change. Change by change. Which concept we want to find the change? Regarding to consumption. Marginal consumption or marginal propensity to consume. Right. Consumption. Consumption depends directly on income. What is the formula? Delta C by delta Y. That's it, no? Delta C by delta Y. That's it, no? Right. What the next one? MPS. Marginal means subtly change. Yes or no? Change by change. Slope. Y2 minus Y1 delta Y by x2 minus x1 delta x. Delta Y by delta x we used to represent in the same manner delta by delta. We are discussing about the savings and income. Yes or no? Okay. PV ratio used to calculate sales by contribution. Contribution by sales. Hope so. If given in one period, we calculate as contribution by sales. If given in two periods, means we write change in contribution by change in sales. That's it, no? Yes or no? Change in contribution by change in sales. That's it, no? Right. For even calculating break-even point or whatever it may be, if given in one particular period of time, you write from formula. If it has been given in two periods, you go with the margin. That means delta by delta, isn't it, no? Right. In the same manner, here marginal comparison. To know the change or to know the slope, we have to use the marginal. So, hope you might have understood. What is APC? Total consumption by total income. What is APS? Total savings by total income. What is MPC? Delta C by delta Y. And what is MPS? Delta S by delta Y. It's very easy for you to understand. One normal thing you have to find it out. Right. MPC and MPS is also over. Right. Let us write the equation for the consumption function. Hope you might be knowing about the regressive equations. Let us present the regressive equation. You have to know the basics. Whenever you write the regressive equation, the basic information, right? You write as y is equals to a plus bx, isn't it? Or you write in mathematics as y is equals to slope intercept equation form y is equals to mx plus c. Both are same, right? Y is equal to mx plus c in the mathematics, and in the statistics we write it as y is equal to a plus bx, same thing, right? Whatever may be the equation, in the LHS, dependent should be there. In the RHS, independent should be there. Right. Right now, we are writing about the consumption function. In the consumption function, C is the dependent and Y is the income. Based on this, we can write. Right. Dependent should be in LHS. So, in the place of Y, I have to write C. Yes or no? A, constant consumption. Plus B, slope of consumption. Yes or no? Depends. Consumption depends upon income. So, Y on X. Yes or no? C on Y. That means consumption depend on income. Clear? Clear? Y is equal to A plus BX. Y dependent. X independent. Y consumption is dependent. So, LHS income. Y independent. So, I wrote on RHS. Clear? A, constant consumption. B, slope of consumption. What is slope of consumption? What is slope of consumption? Delta C by delta Y only, no? Delta C by delta Y only, no? I told you, no? Slope, nothing but marginal means slope. Slope of consumption. Marginal consumption means slope of consumption. Slope of consumption is delta C by delta Y. That's it, no? Right. Y is equals, C is equals to A plus BY is the equation. Right? Right? What is the consumption function? C is equals to F of Y. That's it, no? C is equals to F of Y. Right. What will be the equation if we want to write? C is equals to constant term A, slope B, right. Y is the income. C is equal to A plus BY is the equation of consumption function. C, what is C? Aggregate consumption. A, constant consumption. B, slope of consumption. Slope of consumption means nothing but MPC. So, whenever you in the syllabus you come across with the MPC, you can use the word of B, because slope of consumption in the consumption equation we represented with B. So, easy for you? Right. MPC can be written as B. Okay. S is equals to F of Y. Saving is a function of Y, right? Can we build regression equation for this? Yes, easily you can build, children. Saving dependent LHS equation A plus BX, Y is equal to, already we used A, we used B, we used C also, right? Let us use constant savings as D, okay? Plus, right, we need slope of savings E, depends on income, D plus EY. In our books, we are not having, just for your knowledge sake, I am giving. That's it. Clear? Whatever may be the topic, you can prepare the equation also without any doubt. Any formulas also any doubt. Right? What is the formula for the APC? C by Y. What is the formula for the APS? S by Y. What is the formula for the MPC? MPC is slope. Slope of consumption, C by Y. In our syllabus, we represent with the MPS, delta S by delta Y. Slope of savings. Whatever the topic we discuss, it becomes the numerator. Numerator depends upon the denominator directly. Hope you might have understood. That's it. These are the formulas. Right. Can we write like this? Y by C. Average propensity to consume is equal to Y by C. Absolutely wrong. Because our income does not depend upon consumption. If I consume more, my income will increase. No, it will not increase. So that is totally wrong. Literally wrong. So whenever you write the formula, you just have the basics that numerator should depend upon the denominator, but not denominator on numerator. Clear? Right. Crops by rains. That's the basic formula. Right. Y is equal to C by S. Okay. Dividing by Y on both sides. What happens? Y by Y 1. C by Y APC, average propensity to consume. S by Y, average propensity to save. APC plus APS is equals to 1. That's it, no? In any equation, APC plus APS is equals to 1 because by dividing by Y on both sides. Right. Y is equal to C by S. C plus S, sorry. Right. If we apply change in this, because of change in Y. So for the equation, we can't apply change. We have to apply the derivatives, right? D by dy of Y, dc by dy, ds by dy. D means nothing but delta, change. So d by dy of Y, 1. dc by dy, delta c by delta Y, MPC. ds by dy, delta s by delta Y, MPS. MPC plus MPS is equals to 1. That's it, no? There is no need to find children. If we get the value of MPC, we can find MPS because the MPS is equal to 1 minus MPC. Because MPC plus MPS is equals to 1. APC plus APS is equals to 1. We can find it out. If we know MPC, we can find out MPS. If we know MPS, we can find it out of MPC. APC plus APS is equals to 1. MPC plus MPS is equals to 1. Okay, right. Okay. C is equals to F of Y. If our income increases, do consumption increases or decreases? If my income increases, my consumption also increases. Yes or no? If my income increases, my consumption also increases, other things remaining constant. Yes or no? Right. Which relation? Direct relation. The slope will be positive. MPC means slope of consumption. So, MPC should be in positive terms. Direct relation. MPS. S is equals to F of Y. Other things remaining constant. If my income increases, there is a chance for increase in savings. Yes or no? There is a chance for increase in savings. Yes or no? Right. If my income increases, there is a chance for savings. So, even MPS also will be positive. That means either MPC or MPS will not be negative. So, MPC also, okay, MPC and MPC lies between 0 to 1. Yes or no? Because neither can be negative. Because this relation is direct. If relation is direct, the slope is positive. If their slope is positive, their values will be in positive coupled. So, we can say that MPC plus MPS is equals to 1 means MPC can be represented by B. B lies between 0 to 1. That's it, no? Right. At the same time, MPS also lies between 0 to 1. It cannot become negative. Neither MPC nor MPS remains negative. So, they lies between 0 to 1. Positive values. That's it. Right. MPC. What is the formula? MPC plus MPS is equals to 1. MPC is equals to 1 minus MPS. MPS is equals to 1 minus MPC. Our MPC can also be written as B, because in consumption function our equation C is equal to A plus BY. B is termed as slope of consumption. So B has to be considered as MPC, right? Let us take the values, right? This is my income. So no job priorly. So my income is 0,000, right? I'm writing 1,000, 2,000. My income is increasing. I'm taking in increasing order, not ups and downs or decrease order. Okay, right. Let us take my consumption. What is the equation? Y is equal to C plus S. My consumption, my income can be used for either consumption or for savings. Y, I have assumed the values. C, right, let me assume the values. My income is 0. What will be my consumption? What will be my consumption? Not 0. If I do not consume, I will die. Yes or no? So, mustly I have to consume, whether I have income or no income, right? At least by borrowing, okay, or with the past savings, I have to consume. Yes or no? Right. C is equal to A plus BY, no? Equation, right? Let me take this as 500. Let me take this as 500, right? So, what becomes 500 here? A. When 0 income also I am consuming, yes or no? That is constant consumption. Whether I receive income or not, my basic consumption will be 500. Okay. How much percentage of consumption or slope of consumption? Let me take that. I will spend my 75% of my income. My consumption is 75 out of every 100 rupees. That's it, no? That is 75%. That is MPC B. Let us take MPC or B as 75%. Constant consumption as usual. 500. Yes. 500. My income is 1000 rupees. If I spend 75% of my income for consumption, 750 rupees plus basic consumption 500 rupees, it becomes 1250. My consumption becomes 1250. In the same manner, for 2000 rupees, 75% is 1500 and the basic consumption C is equals to A plus BY. My basic consumption at the 0 level of income is 500 rupees and I assume that 75% of my income will be used for, right? What is the income? 2000. 2000 into 0.75, 1500. 1500 plus 500, 2000. Here I will get 2750. Here I will get 3500. 4250. 5000. Clear? How I got the values? I have to assume at 0 level of consumption, I have to assume at the same time what percentage of income I am ready to spend. That means MPC or B value, right? I have to find. I took it as 75%, right? I got that values. Right? Just imagine, do my Y is increasing or decreasing? Y also increasing. C also increasing. Increase, which relation? Direct relation. The curve slopes upwards, yes or no? So, the consumption curve slopes upwards because there exists a direct relationship between Y and C. No need to think. It starts from Y-axis consumption because at 0 level of income also we are incurring certain consumption expenditure. So, the curve starts from Y-axis and slopes upwards, right? Yes. Write my savings. What is the saving? Y is equal to C plus S. Then what will be the savings? Y minus C. We can calculate. Yes or no? Y minus C. 0 minus 500 minus 500 minus 250. 0. 250. 500. 250. 750. Just imagine, as income increases, my saving is also increasing. Watch it out. Minus 500 Okay, minus 250 is greater than minus 500. 0 is greater than minus 250. 250, 500, 750, 1000. So 25% it becomes also MPS, right? As my income is increasing, my saving is also increasing. So I can say that, right, the saving curve also slopes upwards. Yes or no? Right. Let me draw how the consumption curve or how the saving curve will get. At 0 level, we are incurring 500. So it starts from y-axis. This is the C curve. There is no need to keep points and plotting, keeping the scale, everything. Okay, right. Whereas savings, as income increases, savings also increases. The curve slopes upwards, no doubt. But in the initial stages, it is in negative. It touches x-axis because it became 0 also. So we have to start from the negative quadrant and we have to write it as S. That's it. No need to keep any doubts like that, how this curve has came, every time keeping points, everything, noting, not at all necessary. Here, C curve, y-axis to upward slopewards, S curve slopes upward but starts from the negative quadrant. In the initial stages, consumption is more than income. So, excess of consumption over income leads to negative savings or borrowings or debt, whatever it may be. So, when income is equals to savings, at this point, watch it out. When income is equal to savings, when income is equal to consumption, saving is equal to 0. Okay, neither debt nor savings, neither negative savings nor positive savings. Just watch it out. Before the 2000 income level, we call it as low level of income because the people will be in debt. And from 3 to 6 or whatever it may be higher, we call it as high level of income. Why we have to call it as high level of income is very simple, because we are in positive savings. 250, 500, 750, 1000, we are in positive savings. If the savings are positive, we have to call it as high level of income. If the savings are negative or we are in debt, means we have to consider it as a low level of income. When income is consumption is equals to income, the savings is 0 and we call it as normal income. Clear? Yes, right. C plus S. Right, aggregate supply, but we need to know aggregate demand and in the two sector model, what we want to find? Aggregate demand and aggregate supply and aggregate equilibrium between these two. Yes, I know. We are having C value, we are having S value. Right now, to find out what is the formula for the aggregate demand? C plus I. Yes, I know. Right. Let us assume I. I means investment. Do investments depends on income directly? No. Investments depends upon savings. Savings depends upon income. So, investments depends on income. First column, indirectly. Investments indirectly depends on income. Which factor depends indirectly on income? We have to consider that value as constant. I told you. Also known as autonomous. Also known as exogenous. Can you get the clarity? Can you get the clarity? What we want to find in the two sector model? Equilibrium. What is the equilibrium in the two sector model? Aggregate demand is equals to aggregate supply. What is the equation for the aggregate demand? C plus I. Already we are having the column of C and we have to know I. And what is the aggregate supply? C plus S. Already we are having C and S. We can calculate it. Right. If we have the column of investment, it will be completed. Yes or no? Right. Let us take the values of investment. We have to assume it constant. Let us take 500. Any amount you can take, but it must be constant because it is not directly depending on income. So I am taking constant values. 500. Right. What we want to find? Equilibrium. In the equilibrium, what is the condition? Aggregate demand is equals to aggregate supply. So we want to find aggregate demand and aggregate supply. Right. Just watch it out. Just watch it out. As income is increasing, the investment remains constant. So, investment curve will be parallel to x-axis because it is constant, because it is autonomous, it is indirectly depending upon income on x-axis. Right. Now, consumption starts from which axis? Y-axis. Both are 500 only, no? Consumption. Saving starts from negative quadrant, upward slope. Clear? So, we have to get into mind how to draw. That's it. Over, let us calculate aggregate demand. Aggregate demand formula, C plus I, that's it now. C value, I value, 500 plus 500, 1000, 1250 plus 750, 500, 1750, 2500. Aggregate supply, okay, right. What is aggregate supply value? Aggregate supply means C plus S, that's it, no? Second column, third column, 500 minus 500, 0, 1250 plus of minus 250, 1000, right? 2000 plus 0, 2000, 2750 plus 250, 3000, next 4000, 5000, 6000. Just watch out the first column, second column, third column, fourth column, fifth column and sixth. You can identify, children, sixth column and first column are equal, yes or no? Sixth column and first column are equal. So, in the graph, whenever you get aggregate supply, you write with Y because the values are one and the same, yes or no? When two values are same, you can get the curve in 45 degrees because 0, 0. If they starts from origin, if their values are same, you will get certainly the curve from 45 degrees line. If you want, you can plot on the paper and you can get conclude. Clarity also. Okay. 0, 0, 1000, 1000, 2000, 2000, 3000, 3000, 4000, 4000, 5000, 5000, 6000, 6000. Keep the values, you will get 45 degrees line. Because if it starts from origin and having the same values, means certainly you get the 45 degrees line. That's it. It's a condition. Let me draw all the graphs. It is consumption. It is savings, negative quadrant. Investments remains constant, right? Aggregate demand also increasing, yes or no? As income increases, aggregate demand also increasing, but at 0 level it is 1000. So aggregate demand as increasing, direct relation, upward slope, right? Aggregate supply increasing, same, but their values are same, so it comes increasing only, but starts from origin at a 45 degree line. AS is also known as aggregate supply, is also known as Y, is equals to 45 degree line also we can write. These are the curves we are going to do, right? All these are curves, right? Over, right? I am going to find about equilibrium. What is equilibrium? Aggregate demand is equals to aggregate supply. Where you could find aggregate demand is fifth and sixth column, you just compare. Fifth and sixth, the last column. Last two columns you just compare where you got the same values. At 4000 level of income, aggregate demand is equals to aggregate supply where AD is equals to AS, yes or no? And we call this as equilibrium income. Let us prove that whether it is in equilibrium or not. What is the formula for the equilibrium? Aggregate demand is equals to aggregate supply. C plus I is equal to C plus S. Yes or no? CC gets cancelled. I is equal to S. What is the column of I? Fourth column. S column 3. Fourth and 3 also having the same values. You can watch it out. 500, 500. Yes or no? Yes or no? Right. So at equilibrium, aggregate demand is equal to aggregate supply or I is equal to S in the two sector model over right before equilibrium less than 3000 we have to call it as before equilibrium. Which is more? Aggregate demand is more or aggregate supply is more? Aggregate demand is greater than aggregate supply. That's it, no? Right. And C plus I is greater than C plus S. C gets cancelled. I is greater than S. You can watch it out. Fourth and third column, 500 is greater than 250, 500 is greater than 0, 500 is greater than minus 250, 500 is greater than minus 500. Clear? Right. After equilibrium, which is more? Aggregate supply is greater than aggregate demand. C plus S is greater than C plus I. CC cancelled, S greater than I. You just watch it out. S 1000 is greater than 500. That's it, no? You can do it. But every time these values are not at all necessary for you and you can do it very easily, right? I am drawing the graph right now. You just have to divide the graph into two parts. You should not call it as a part. You have to call it as a panel. When you divide the graphs, why necessary for dividing the graph, ma'am? Means I told you. We have to, at equilibrium, aggregate demand is equal to aggregate supply, we have to show. At the same time, leakages is equal to injections also we have to show. Yes or no? For this purpose, right, two sector model. In the x-axis, you take income. Whatever the curves you draw and you take them on y-axis. That's it. At the last, we can write the concepts of concepts taken on y-axis, right? First, you have to draw in the first panel, at the first part of the graph, you have to draw 45 degrees line. I told you it is known as aggregate supply or Y or C plus S or 45 degree line. Aggregate supply is equals to Y, it can be represented with the help of Y, is equals to 45 degree line, is equal to in the two sector model, Y is equal to C plus S. That's it, no? Over. Right. Next, draw the consumption curve. Consumption is neither leakage nor injection. So we can write above. Only leakages and injection. That means investments and savings you have to draw in the second panel. Right. Consumption starts from y-axis and slopes upwards. Okay. In the two sector model, what we have to find? Aggregate demand and aggregate supply. Aggregate supply we have already drawn. Right. Aggregate demand formula C plus I. We drawn C and we have to draw I. I is injection. Yes or no, it is autonomous. Remains parallel because injection investment does not depends upon income directly. So let us take it as parallel to x-axis. I. Over, no? Right. C over I over. Right now we have to draw C plus I. Okay. As I is constant. Now we have to draw C plus I. So C plus I curve lies above C because we are adding I. What amount? Constant amount. So C plus I will be parallel to, right, C above because we are adding investments. Yes or no? C plus I. Is equals to aggregate demand. Right? Yes, sir. I am keeping points here. 1, 2. Point 1. Which two curves are equal? At point 1, Y curve is equals to C. Actually, what is the formula of Y? Y is equal to C plus S. But we are having only Y is equal to C. That means S is equal to 0. That's it, no? You make it here. Y is equal to C. Right. S becomes 0. At point 2, which two are equal? Aggregate demand is equals to aggregate supply. So we have to write it as equilibrium point. Yes or no? At equilibrium point, AD is equals to AS. We have proved those two curves. Automatically C plus I is equals to C plus S. CC gets cancelled. I is equals to S. Or S is equals to I. Right. Now you have to at the last moment you have to draw the savings curve. Initially it is not possible to draw the savings curve. Right. How to draw the savings curve? At Y is equals to C or 0.1, S is equals to 0. S is equals to 0. And this is the equilibrium income. You make it as Y0. At Y0, I is equals to S. S or no? Right. It is the I. Here, S is equals to I. We got the point of S is equals to 0. We got the point of S is equals to I. And right now we have to connect these 2 points of S. S curve starts from negative quadrant and slopes upwards. Yes or no? From negative quadrant, connecting these 2 points, you have to draw the graph linearly. So it is the X curve. Clear? Clear? Yes. How to draw? Right? 2 panels you have to take. Injections are investments and savings. So investments and savings graph should be in second quadrant. Income. Right? First draw. Aggregate supply curve is equals to Y is equals to C plus S is equals to 45-degree line. Okay, next draw C curve and I curve because it is an injection. So in the second panel, I is constant because it is autonomous. It is not depending upon the investment directly. I. And right now we have to draw the aggregate demand curve, that is C plus I. As investment is constant, C plus I lies above the C curve parallelly. So parallel to C, you have to draw C plus I, that is aggregate demand. The curve is over, right? You point out. And this is aggregate demand is equal to aggregate supply. You call it as equilibrium point. And the obtained income here is equilibrium income Y0 over, right? Now you have to draw the savings curve at last. Okay, at this point 1, you can find Y is equals to C. So S will be 0. So don't draw the line here, right? S is equals to 0, right? At equilibrium point, S is equals to I. Already I is here. So S must be equals to I. Connecting these 2 points from the negative quadrant, you have to draw the S curve. Clear? It is a 2-sector model. Same, we can go to the 3-sector, right? We can go to the 3-sector. 2 panels. What is the 3-sector model? 3-sector model, what is it? Aggregate demand is equal to C plus I plus G. Aggregate supply is equal to C plus S plus T. That's it now? Right. Now, first write 45 degrees line as usual. Y is equal to C plus S plus T is equals to aggregate supply is equals to 45 degree line as usual. Draw C. Starts from Y axis and slopes upwards. Right? First you have to draw I, next G, last. I. Constant. Because it does not depends upon income directly. People income. Government expenditure also depends upon government income but not on people income directly. So government expenditure also should be treated as constant. Yes or no? government expenditure should also be treated as constant. So we can say that even G curve also parallel to x-axis. So we can add G curve to I curve. Then I plus G also a parallel to x-axis. As we are adding G, I plus G. That's it now. Right. Now we can write the curve C plus I. I is constant, so C plus I is parallel to C. G is also constant, so C plus I plus G is equals to aggregate demand. Okay, right. You keep the points. Over, right. At this point, at point 1, Y is equals to C. Yes or no? At point 1, Y is equals to C. What is Y? C plus S plus T. Yes or no? Right. Y is equal to C means, actually Y is equal to C plus S plus T. Yes or no? But Y became C. That means S plus T is equals to 0. So don't draw the line. Only at the equilibrium you have to draw the line. Right here, S plus T is equals to 0. And 2 not necessary. And at 3 point, aggregate demand is equals to aggregate supply. Aggregate demand is equals to aggregate supply means CC gets cancelled. I plus G is equal to S plus T. So you have to draw the line equilibrium. Equilibrium, right. This is the I plus G. At this point, S plus T is equals to I plus G. So connecting these 2 points, starting from this, we have to write S plus T. Get the clarity? As income increases, savings also increases, right? Slopes upwards. As income increases, as we are in the progressive taxation, we have to pay more taxes. So we can say that it is also direct relation. So slopes upwards. Not only that, savings also a leakage, outflow of income decreases the aggregate demand. Taxes also a leakage, outflow of income decreases the aggregate demand. Yes or no? Yes or no? Right, that's it. So we represented S plus T in a single curve and I plus G also single curve is enough. Clear? So we can say that injections are constant, leakages have direct relationship with income. So they slope upwards, injections are parallel to x-axis. That's it now. Right. At the same time, for both curves, what you have to clarify? Only one thing. Before equilibrium and after equilibrium. So this is before equilibrium. You just draw the line and you can write of your own. Before equilibrium and after equilibrium. This is Y0, this is Y1, this is Y2. At Y1, just imagine at Y1, this is the aggregate demand and this is the aggregate, this is the aggregate supply and this is the aggregate demand. Okay. You just watch it out. At Y1, before equilibrium, which is more? Demand is more and supply is less. Aggregate demand is greater than aggregate supply. Coming to the point, which is more? At Y1, this is the savings and this is the investment. Investments are greater than savings. Our savings are less than investment. You can do of your own just by watching out the graph. Right. Beyond the equilibrium, at Y2, this is the aggregate supply curve, isn't it? And this is the aggregate demand curve, isn't it? Right. Which is more? Aggregate supply is greater than aggregate demand. If aggregate supply is greater than aggregate demand, savings are greater than investment at Y2. Yes or no? Yes or no? Savings are greater than investment. So, no economy would like to have excessive demand or excess savings. What happens, ma'am, if it is like that? There will be some rectification or changes or amendments. How it will be, ma'am? Very simple, right? Aggregate demand. Aggregate demand is excess of aggregate supply means what happens? To meet that excess demand, what the producers will do? They will produce more, they will create more employment opportunities and they will increase the production and they will increase the income and they will move up to Y. Or why not? Equilibrium income. If there is excess of supply, what happens, ma'am? If there is excess of supply than demand, the producer will not supply more. So what they will do? They will Yes, what they will do? They will not supply more and they will reduce the supply, they will reduce the employment, they will reduce the output, they will reduce the income, and they finally meet at why not. Ultimately, if they lie before the equilibrium or lie before after the equilibrium, ultimately there will be some changes in the economy and they come to equilibrium position. This is Keynes' determination of national income. In the short run only, there will be problem of either overproduction or underproduction. But in the long run, there will be no such problems because ultimately the economy will rectify of itself and come to equilibrium point. That is his opinion. Ultimately, each and every person should come at equilibrium point where aggregate demand is equals to aggregate supply. At the same time, injections is equals to leakages. Either 2 sector or 3 sector or 4 sector. Ma'am, can it be expressed in economics for finance regarding to this aspect? Certainly, children. You will be maintaining inventory. Yes or no? Opening and closing stock of finished goods, raw material, intermediary goods you will be maintaining. Yes or no? Based on this you can get the information. Then there is excess of demand. What with your inventories you can do? We can withdraw with your inventories and sell into the market. Yes or no? When there is excess of supply, what you can do? You can add to inventories. That means you can divert your excess of supply or excess of production to the closing stock. Yes or no? For this purpose only we introduce inventories. Not only just LIFO, FIFO carry basis, not only like that. Children, it is basically to meet the market fluctuations. Sometimes it becomes necessary for us to maintain closing stock. Sometimes it's necessary for us to withdraw from the inventory to meet the demand. Otherwise, other brands will capture the market. It leads to many loss to the firms. So, each and every firm excess capacity they will maintain and they will maintain the closing stock and inventory is essential. So, excess of demand, they will withdraw from the inventory and sell in the market. Excess of supply, they will add to inventories in the form of closing stock. That's it. Either in the 2-sector model or in the 3-sector model. I told you how to draw the graph. First, Y graph, Y is equal to C. Y is equals to aggregate supply is equal to 45 degrees. If it is in 2-sector, write it as C plus S. If it is in 3-sector, write it as C plus S plus T. Right? Next, draw the line of C. Draw the line of C plus I. Right there. In the second panel, I, at the last moment only you have to draw the savings curve. How can you identify the saving curve? When Y is equal to C, S is equal to 0. So, savings curve should touch the x-axis. When aggregate demand is equal to aggregate supply, S is equals to I. So, at the point of I, we have to go. So, connecting S is equal to 0 and S is equals to I, we have to draw the savings curve. That will be concluded. You just draw before equilibrium and after equilibrium. Right? Even for the 3-sector model also same thing. Right? First, Y is equal to 45 degrees aggregate supply C plus S plus T. Next, C plus I is constant. G is also constant because government expenditure does not depend upon people income. It depends upon government revenue. So, it is not depending directly upon people income. We have to assume it also as a constant. So, we assume constant. So, we draw I plus G as a parallel line. Right. C plus I plus G lie above C parallelly because plus we are doing. So, as the amount is constant, it becomes parallel. Right. At this point, when Y is equal to C, assume that S plus T is equal to 0. When aggregate demand is equal to aggregate supply, assume I plus G is equals to S plus T. Connecting these two points, you will get S plus T curve. That's it. Before equilibrium, after equilibrium, same. Aggregate demand and aggregate supply you consider. This is aggregate supply and this is aggregate demand. Excess of demand, excess of supply is there. You have to add to your inventory. So, automatically production everything decreases. You reach to Y naught. Before that, you take here. Aggregate demand is greater than aggregate supply. Right. So, you have to withdraw from the inventories. Before equilibrium, we can say that I plus G is greater than S plus T. Beyond the equilibrium, we can say that S plus T is greater than I plus G. That's it. For the 4-sector model, there is no need to have any confusion. So, there is no need to write Y is equals to C plus S plus T is equals to aggregate supply is equals to 45 degrees line. And don't draw separately all the curves. C plus I plus G plus X minus M, draw ultimately aggregate demand curve and I plus G plus X. I is constant, G is constant in the previous topics, and exports. Exports depends upon who will purchase the exports, foreigners. So exports depends upon foreigners' income but not on our domestic income. So it has to be assumed as constant. Ultimately, we came to know that injections are constant. They are autonomous. They do not depend upon income. No, do not depend on income. That's it, no? I plus G plus X. At this point, aggregate demand is equals to aggregate supply. We consider it as equilibrium. At this point, equilibrium, what happens? Okay. Aggregate demand is equals to aggregate supply. C plus I plus G plus X minus M is equals to S plus T, C plus S plus T. CC gets cancelled. I plus G plus X is equals to S plus T plus minus M becomes plus M because it is a leakage, right? At this point, draw the curve from negative quadrant S plus T plus M, because as income increases, saving increases, upward slope, direct relation. As income increases because of progressive taxation, taxes also increases, direct relation, upward slope. As income increases, people demand more imports also. There is a possibility as upward relation, right? We can say that S plus T plus M. Leakages depends upon income. That to what kind of dependence? It is a direct relation, so the curve slopes upwards. Injections do not depend upon income. They are constant as they are parallel to x-axis. I is parallel to x-axis, G is parallel to x-axis, X also parallel to x-axis. So, I plus G plus X, which are injections, are constant and hence they are constant parallel to x-axis. STM are the leakages. Outflow of income decreases aggregate demand and they directly depends upon the income. So, the curve slopes upwards. Either S curve or S plus T curve or S plus T plus M. Instead of drawing separately, we made it into one curve. That's it. This is the fourth sector model. And just we are having only investment multiplier in this concept and marginal propensity to import and fourth problems. With this, we can conclude the chapter. That's it. Let's continue with the two-sector model. In the two-sector model, we are having investment multiplier concept. What is investment multiplier? Here, each and every topic we have to connect with the, each and every topic of this Keynesian explanation has to be connected with the income. First, let me say, investments depends upon savings, but not on income directly, isn't it? Investments depends on savings, whereas savings depends on income. Representing I, this is as S, S, Y. Right now we can say that investments directly depends on income. Investment directly depends on income and directly depends on savings and indirectly depends on income. Yes or no? Investment directly depends upon savings but indirectly depends upon income. I told you how to write the formula for any topic. That is crops by rains. Yes or no? Crops depends upon rains directly but not indirectly. Yes or no? So, let us write the formula. Which one will be correct? Investments by savings is correct or investments by income is correct? Yes, do investment depends upon savings directly? Yes, it is correct. Do investments directly depends upon income? No, it indirectly depends upon income. So there is no chance for this. That means investment by income is not possible. So right? Let's continue here. Right. So what will be the formula based on income? Every concept has to be connected with income because here we are taking every topic depends upon income. Clear? Right. How can we delete? Investment multiplier as explained by Keynes will be represented by K is equals to what will be the formula? Income by investment. Yes, income directly depends upon investment. How it is possible? Very possible. We can explain it. As investments increases, right, employment opportunities increases. Take the example of trading account. We can increase the number of workers, our raw material purchases, output increases, growth increases, profit increases. So we can say that return on investments may be increased. Yes or no? Just like you write your formula. Return on investments is equals to earnings before interest and taxes by capital employed. How you write? Earnings means nothing but income only, no? Yes or no? Earnings means nothing but income before interest or taxes or after interest and taxes, whatever it may be, it's an income. Yes or no? Say dividend, return, whatever it may be, it's a sort of income. Yes or no? Right? Capital means nothing but investment only, no? The capital which has been used for this purpose is nothing but investment only, no? Do you get the formula? Why we get? Is investment by income is correct? No, not at all. Why it is not correct? Because investment does not depend directly on income, but our income directly depends upon investment. So what is the investment multiplier? K is equals to, you have to write, K is equals to change in income by change in investment. Hope it is clear for you. But while you are writing, you have to say that numerator depends upon denominator. Change in income due to change in investment. Otherwise, change in investment leads to change in income, like that. Your definitions, wherever you go, the definitions will be the one and same. If you are unable to understand even that sense while presenting the answer, you just go through that. It is the ratio. A by B means nothing but A is to B. It is the ratio of change in income to change in investment. That's the formula. But our Keynes explained this topic in another sense. Let's go with the Keynes explanation regarding to the investment multiplier. Right. So, K is equals to, according to Keynes, delta Y by delta I. But Keynes believe in long-term equilibrium. Every economy, whether it is in less than full employment or more than full employment, ultimately reaches full employment. That means equilibrium. So, he believes in equilibrium. So, we are in the two-sector model. What is two-sector model? Aggregate demand is equals to aggregate supply in equilibrium. What is aggregate demand in the two-sector model? C plus I. What is the aggregate supply? C plus S. That is nothing but I is equals to S. So, according to Keynes, he believes that delta Y is equals to delta S. What is delta Y by delta S? 1 by MPS. That's it now. Because MPS is equal to delta S by delta Y. So, delta Y by delta S means that is but reciprocal of it is equals to 1 by MPS. Also, we came to know that MPC plus MPS is equals to 1. That means MPS is equals to 1 by 1 minus MPC. That's it, no? That's it, the formula, and even we can write it as 1 by 1 minus B. Because MPC is represented by B. That's it, no? Right. What is the investment multiplier? K is equals to delta Y by delta I, that is change in income due to change in investment. It can also be treated as reciprocal of MPS and also treated as 1 by 1 minus MPC. We can say that MPC and MPS determines the value of multiplier. We have to say MPC and MPS determines the value of multiplier. Right. Just MPC and MPS lies between 1. So, minimum value is 0 and maximum value is 1. Yes or no? Right. MPS 0, maximum value is 1. Right. Calculate K, 1 by MPS, that's it, no? 1 by 0, infinity. Right. When MPS is 0, right? When MPS is 0, the investment multiplier, the multiplier value is infinity. When MPS is 1, right? The 1 by 1, 1. K is equals to 1. At the same time, MPC also may be 0 and 1. Substitute the values. 1 by 1 minus MPC. K is equals to 1. Right. 1. 1 by 1 minus 1, 0. 1 by 0, infinity. So the maximum value of multiplier will be infinity and the minimum value of multiplier will be 1. This is the concept of investment multiplier, and we are having several problems based on this, and we have to go for the graphical explanation. Before going to graphical explanation, first you have to know what is the definition for the K or investment multiplier. That's it. The theory will be concluded. Investment multiplier. What is the investment multiplier? It is represented by K. What is the formula? Delta Y by delta I. What is its representation? Change in income due to change in investments. That's it, no? That's it, no? Change in income due to change in investments, or change in investments leads to change in income. So initially what has to be changed? Investment has to be changed. So let's go for the graph regarding to this issue, and we can conclude the theoretical part, and then let's enter into the problematic part regarding to this. Right? Yes. First, I am drawing two-sector model graph. This is the Y is equals to C plus S is equals to aggregate supply is equals to 45-degree line. Okay. And this is the C. Okay. And this is the C plus I, because I is constant. So C plus I will be parallel to C and lies above to C plus I. And next go for the next, and let's move to the next panel, and this is the I. Right? And here at this point Y is equals to C, Y is equal to C plus S. If Y is equal to C, S is equals to 0. So S is equals to 0. Don't draw a line here. S is equals to 0. That's it. Is it okay? Right. And then move here. It's an equilibrium. Aggregate demand is equals to aggregate supply. That means equilibrium. At E, aggregate demand is equals to aggregate supply. C plus I is equals to C plus S. CC gets cancelled. I is equals to S. So draw a line. Y naught is the equilibrium income, and here S is equals to I. That's it now. Right. What is the right now we have to discuss? Investment multiplier. What is the investment multiplier? Change in investment leads to change in income. First we have to change the investment. Right. At present, what is the investment? I. Let us change. Let us increase. Plus 20. Our change in investment is 20. So the new investment is equals to I plus delta I. Can we say like that? The new investment is I plus delta I. Even delta I is also constant, so it lies above. Plus means above. The new investment I plus delta I. I lies in aggregate demand. Yes or no? Previously aggregate demand was AD naught is equals to, this is E naught, this is Y naught. AD naught is equals to C plus I. But if we move to the new equilibrium, that is AD1, the new equilibrium will be C plus I plus delta I. That's it now. As delta I is also constant, we can get the curve C plus I plus delta I. This is the new aggregate demand, and this is the new equilibrium. Okay. Right now, just tell me, as investment increases from I to I plus delta I, okay, as investment increases from I to I plus delta I, okay, the aggregate demand curve has been shifted from AD naught to AD1, that is C plus I to C plus I plus delta I. That's it now. Right. As aggregate demand increases, automatically equilibrium point has been increased or shifted from E naught to E1. When new equilibrium becomes E1, the new equilibrium income becomes Y1. Just watch it out. This is the change in investment. Because of change in investment, we incurred change in income. That's it now. Increase in investment from I to I plus delta I led to increase in income from Y naught to Y1. So we can conclude that this is the graphical representation, and what I had explained in technical terms, you just present them in the theoretical part. From the above graph, right? X-axis represents income. Ma'am, Y-axis represents, no need to bother, consumption, aggregate demand, aggregate supply, right? Here, X-axis represents income, national income you have to write, or output you can say, right? Here, what the topic you have to take? Investments and savings, right? Connecting to these 3 points, you have to draw a line for savings. That's it. We had completed the theoretical part regarding to this. I told you there are 4 sectors in the economy: households, firms, government, and foreign sector. And there are 3 sector models: 2 sector model, 3 sector model, 4 sector model. And there are 3 markets: factor market, product market, and financial market. I told you it's over. And the next one is in the 2 sector model, 3 sector model, 4 sector model. I have given aggregate demand C plus I, C plus I plus G, C plus I plus G plus X minus M. For the 4 sector model, I have for these 3 models, the aggregate supply is C plus S, C plus S plus T, C plus S plus T respectively. At the equilibrium, in the 2 sector model, I is equals to S. At the 3 sector model, I plus G is equals to S plus T. In the 4 sector model, I plus G plus X is equals to S plus T plus M. That has been concluded. Right. APC is equal to C by Y. APS is equals to S by Y. MPC is equal to delta C by delta Y, and it will be represented by V, right? MPS is equals to delta S by delta Y. APC plus APS is equals to 1. At the same time, MPC plus MPS is equals to 1. How to write the definitions also we have given. How to draw the graphs also has been explained. But we are expecting for this November exam, that is investment multiplier graphically representation. That's it, right? Let's move to the problems of each model. It will be concluded. That's it. This is the Keynesian theory, but one small hint for you, that is, in any 2 sector model or 3 sector model, they ask about injection multipliers. What are the injections? What are the injections? I, investment expenditure, government expenditure, import, right? If you get M, it will not come under 2 and 3, no? That's why I didn't took imports, right? In 2 sector model or 3 sector model, if they ask about the multiplier, what must be the formula? K is equals to 1 by 1 minus B. What is K is equals to 1 by 1 minus B. What is B? MPL, MPC. You can write otherwise 1 by MPS, your wish. Clear? Right. If any injection investment multiplier or government expenditure multiplier in the 2 sector model or 3 sector model, if they ask about this, you go for the blindly 1 by 1 minus B. From where we can get the B? C is equals to A plus BY, and this is the B. So in the consumption equation, you will be having B. So you can go with that, right? In the 4 sector model, if any multiplier has been asked, which formula we have to take, right? In the 4 sector multiplier, they may ask about foreign trade multiplier. Then you have to write the formula 1 by 1 minus B plus V. I already told you what is V. V means MPM, marginal propensity to import. Change in imports due to change in income, delta M by delta Y. Ma'am, how can we get the value of V to any equation? Right. For you, in the equation, M is equal to, they will give U plus Vy. Just like C is equal to A plus By, how they will give? They'll give M is equal to U plus Vy equation. So before Y, what will be the slope? That V should be treated as M. I will explain in the formulas. So multiplier in the 2 sector model or 3 sector model, if it is related to injection, you have to go with the formula 1 by 1 minus B. If you are going with the 4 sector model multiplier, especially foreign trade multiplier or import multiplier, they may ask for you, and the equation will be 1 by 1 minus B plus V. Okay, that's it. Let's move to the problematic part, and the first part. What they have given? They have given, first you go with a note like this. Given. What they have given? First one, APC. They have given income. Starting itself make into letter, so that while in calculation we can reduce the time, okay, 4,000 rupees. And C, they have given consumption. Consumption will be represented by C. Though it is not necessary or not necessary, you just find out the savings. What is the formula for the savings? Savings is equals to Y minus C is equals to 4,000 minus 3,000 is equals to 1,000. That's it now? Right. What we have to find? To find APC. What is the formula for the APC? C by Y. C by Y means 3,000 by 4,000. 3,000 by 4,000 is equals to 0.75. Right. APS. What is the formula for the APS? S by Y. S 1,000 by 4,000. 1,000 by 4,000 is equals to 0.25. You have to write the inference. APC plus APS is equals to 1. That's it now. That's it now. So, it's the topic related to APC and APS. Let's move to the topic of MPC and MPS. They have given income, they have given consumption. You have to find the savings level first of all. Income 8,000, 12,000. Consumption 6,000, 9,000. Though it is necessary or not necessary, go for the S. Savings Y minus C. So 8,000 minus 6,000, 2,000. 12,000 minus 9,000 is equals to 3,000. Right now you can calculate to find what we have to find. They are asking us to calculate the MPC and MPS. What is the formula for the MPC? Delta C by delta Y. What is the delta C? 3,000. What is the delta Y? 4,000. 3,000 by 4,000 becomes 0.75. You can calculate MPS. What is the MPS? Delta S by delta Y. 1,000 by 3,000. 4,000. 1,000 by 4,000 is equals to 0.25. Otherwise, you can calculate directly. MPS is equals to 1 minus MPC is equals to 1 minus 0.75 is equals to 0.25. Clear? Clear? That will be best for you. You can go with the savings. Otherwise, you can go with the MPC plus MPS is equals to 1. That's it. Right now, they are asking to find out the multiplier and they have given the information regarding to MPC. What they have given, first let us make a note. MPC, they have given 3 MPC values. So, MPC A 0.2, B 0.5, C 0.8 and they are asking us to find out the multiplier. So, you can write here K. What is the formula for the K with the MPC? 1 by 1 minus MPC. That's it now. So, if you substitute, we will get 1.25, 2.00, 5.00. That's it now. We will get the values if you substitute. But you have to write inference for this. For normal students, it's not necessary. For CA students, particularly, they will give different values means to know the inference or conclusion regarding to this problem. Very easy. Just watch it out. As MPC increases from 0.2, 0.5, 0.8, that means MPC is increasing. You just watch out. The multiplier value is also increasing. 1.25 to 5. Yes or no? Yes or no? Right. As MPC increases, investment multiplier also increases. There is no need to give any reason like that, but you have to give the inference. That's it. You have to express the relationship. That's it. So, the next problem for us, that is an increase in investment by 600 crores. Increase in investment. Investments are represented by I. As we have expressed here, delta, take it plus 600 crores. Okay, right. Resulted in an increase in national income. So, because of increase in investment, national income has been increased. National income I represented with delta Y by rupees 2,000 increase. So, you take plus 2,400 crores of rupees. Okay. and they are asking us to find MPC and MPS. Before going to that, you have to know with the delta Y and delta I, do any formula is there? Certainly we are having formula. What is the formula? Write required formula. Required formula, with these two we can find investment multiplier. K is equals to delta Y by delta I is equals to 1 by MPS is equals to 1 by 1 minus MPC. This is the formula what we have studied. Yes or no? You just make a note. Just first what they are asking us, they are not asking us to find out the multiplier, and they are just directly asking regarding to find out MPS and MPC. It's not possible. First go with the investment multiplier. That means K and delta Y. K is equals to delta Y by delta I. 2400 by 600 crores is equals to 4 times. K is equals to 4. If K is equals to 4, we can find K and MPS, because MPS is the reciprocal of K. K is equals to 1 by MPS. That's it, no? That means 4 is equals to 1 by MPS. That implies MPS is equals to 1 by 4 is equals to 0.25. If MPS is equals to 0.25, MPC is equals to 1 minus MPS, that is equals to 0.75. That's it now. First you write what they have given. With those given values, is it possible to find out anything? You just get into mind and then you will get it is an investment multiplier. In the investment multiplier, we can find MPC and also we can find MPS. Okay, that's it. It's clear? Right. Then just we are having 2 more questions regarding to this and we can conclude this chapter, right? Given consumption function C is equals to 100 plus 0.75y. 100 plus 0.75y. Okay, right. Whether it is necessary or not, you just please make a note. A is equals to 100. B is equals to, B means MPC, no? MPC is equals to 0.75. Okay. If MPC is equals to 0.75, MPS is equals to 0.25. Though it is necessary or not necessary, first keep it. You have to habituate from the starting problems itself. Then suddenly they will ask, just by giving the equation, they will ask us to find out the multiplier. So for that sake, there is no need to buy at any other problem. Right. Still more, what they have given the information. I is equals to 1500. That's it, no? And they are asking us to find out 2 values. One is equilibrium value. Calculate equilibrium level of national income. Yes, it is the 2-sector model because we are having information only regarding to C and I. So, right. What would be the consumption expenditure at the equilibrium level of national income? Right. First, when they have given 2 points without representing A and B or 1 and 2, you have to write, go with the asterisk so that we can remember. There is one more problem. Many times, many of the students used to skid it. Okay, right. First, they are asking about equilibrium. Equilibrium in which sector model? Equilibrium in 2-sector model. Actually, aggregate supply is equals to aggregate demand. I told you, aggregate supply can be represented with the letter Y. Do you remember 45 degrees line is equals to aggregate supply is equals to C plus S is equals to Y I wrote. Yes or no? So, you can represent the aggregate supply with Y. Aggregate demand is equal to 2-sector model. If equilibrium, Y is equals to C plus I. 3-sector model, Y is equal to C plus I plus G. 4-sector model equilibrium, Y is equals to C plus I plus G plus X minus M. That's it. Whenever you get, you have to write Y is equals to C plus I. Y is equals to C plus I. Substitute the values. That's it. We don't know Y. What is C? 100 plus 0.75Y. What is I? 1500. That means 0.25y, y minus 0.75y, 0.25y is equals to 1600. Y is equals to, okay, y is equals to 0.25 by 1600 means it becomes 6400. It becomes 4, right? 16 4 is 64. Y is equals to 6400. They are asking us not only equilibrium, they are asking us to find out the consumption expenditure at equilibrium level. Yes or no? Right. So, C, consumption expenditure means C only, no? C, at what is the equilibrium level of national income? Y. At Y is equals to 6400. Just substitute the equation. C is equals to, what is the equation? 100 plus 0.75y. Instead of y, substitute 6400. 3 by 4, 1648. C is equals to 4900. That's it now. C is equals to 4900. 4900 plus 1500 is equal to 6400. That's it. The last problem. Right? Basically, you have to know C is equals to A plus BY, but not C is equals to A plus BYD. Okay. You have to calculate at Y level but not YD level, because aggregate supply we are taking in terms of Y. So you have to convert YD, that is disposable income, into income or national income. So YD, wherever you get YD, you please convert it into Y. YD is equals to, how can we convert YD into Y? Y, right. Do children, taxes are receipt for a person or payments? Payments. So minus H. Y minus taxes, okay, plus any transfer payments, government pensions like that we receive, unearned income. I told you, personal income is equals to personal national income minus income received but not, minus income earned but not received, plus income received but not earned. Say taxes, income earned but not received. Say transfer payments, income received but not earned. Like that you have to do. Hope you might have got the meaning. Right. Disposable income is equals to Y minus taxes plus transfer payments. Wherever you get YD, you please convert it, the C into C is equal to A plus BY, and don't remain it as a C is equal to A plus BYD. That's it. Right. What they have given, ma? Right. C is equals to 100 plus 0.9 YD. So you have to convert into Y. Let us convert it. 100 plus 0.9 Y minus taxes plus transfer payments is equals to 100 plus 0.9. What is the taxes? 50. They have not given about transfer payments, 0. Right. 100 plus 0.9y minus 45 is C is equals to 100 minus 45, 55. 55 minus plus 0.9y. Right now the equation is in Y, not YD. This is the equation for the C. And A is equals to 55. B is equals to 0.9. B means MPC. MPS is equals to 0.1. Okay, right. What still they have given? I is equals to 100. G is equals to 120. Exports is equals to 200. Imports is equals to, what they have given, ma? 100 plus 0.15y. I told you already, right? M is equals to U plus VV. U plus VY. Yes or no? Right. And 0.15 before Y, what is V? V is equals to, V means marginal propensity to imports is equals to 0.15. You have to identify it. Here we got B is equals to 0.9. V is equals to 0.15. That's it. Let's move to the problem. What they are asking. What is the equilibrium income? First they are asking about equilibrium income. Which sector model it is? We are having C, I, G, X minus M. So we can say that equilibrium in the fourth sector model. What is the formula? Y is equals to C plus I plus G plus X minus M. So Y is equals to C means we have to take 55 plus 0.9Y. Y means 100. G means 200. X plus X means 200. Sorry, G is 120. As minus M symbol changes, no? Minus 100 minus 0.15Y. Minus means symbol changes. That's it. Y minus 0.9Y plus 0.15Y. Okay. And the value is here it is 0.25Y is equals to 375 and Y is equals to 375 by 0.25. Can you get it? So you have to convert the equation of C is equal to A plus BYD into C is equal to A plus BY, where YD is equals to Y minus taxes plus transfer payments. That's over. And we have found out the equilibrium income in the fourth sector model. Still what they are asking? They are asking us to calculate the trade balance. What is the formula for the trade balance? Trade means nothing but international trade. Here exports minus imports, nothing but net exports. That's it, no? Trade balance at Y is equals to 1500. What is the equation? X minus M. That is equals to, what is X? 200 minus 100 minus 0.15 into what is the Y? 1500. Okay. Right? It is 200 minus 100 minus 225. Right? It is minus 125. That's it, no? That's it, no? Right. Don't write trade balance as a trade balance is equals to, you can write like this. Don't keep minus 125. Otherwise, you can write if the balance is in a negative means it is in deficit only, no? So you go for the trade deficit is equals to, no need to keep right now brackets are minus, you write it just 125, right? That's it. What the third topic they are asking to us to find out value of foreign trade multiplier. I told you the foreign trade multiplier is in the fourth sector model. Third one. What is the formula for the foreign trade multiplier? 1 by 1 minus B plus V. 1 by what is B and what is V? I have shown you already. Right now we can't go for the search or research without knowing. So B is equal to 0.9, V is equal to 0.15. 0.9, 0.15. 1 by 0.25 is equals to 4. Foreign trade multiplier is equals to 4 times. That's it. This are all the different kinds of problems regarding to multiplier and MPC, MPS, APC, APS, two-sector model equilibrium. In the same way, three-sector model equilibrium, four-sector model equilibrium, multiplier in the four-sector model, trade balance, and every concept has been covered in these problems. Hope you make it regarding to this topics only. None other than this. Clear? Right. Now, successfully we had completed National Income Accounting chapter of board material. Two topics, National Income and Keynesian theory also completed. Right now, we are entering into the second unit of board material, that is Fiscal Policy. This chapter has been divided into 4 units. The first unit is Fiscal Functions. So, I am starting with the topic of Fiscal Functions. In this chapter, we are going to study only totally 4 topics. Let's know what are they. The first topic, role of government in market economy, and these theories were given by 2 persons in our material. One is Adam Smith and the next one is Richard Musgrave. Richard Musgrave explained the role of government in the market economy in 3 types. One is allocation function. So, the one answer will be regarding allocation function of government, that is resource allocation function. And the next topic is related to distribution function, which was explained by Richard Musgrave. And the last one is stabilization function. With this, we can conclude this chapter. That is fiscal functions. Okay, right. The first topic here I told you, it is regarding to the role of government in capitalist economy. First, let me tell you what is the capitalist economy in this chapter. Right. So, basically how the economic has been arised, you have to know, because of scarcity. Because of scarcity, price arises. When the price arises, to purchase those goods and services, we are participating in economic activities. Just imagine all the goods and services in the world are available at free. Do any person will work? Well, right now I will share all this subject for you. Will you listen to at this time? Not at all necessary to anyone to participate in economic activities, first of all. So, economic activities has been started because of scarcity of resources before the unlimited wants. Yes or no? Scarcity is a basic economic problem in all the countries. For the underdeveloped countries, for the developing countries, so the so-called developed countries also. Not only on this, but also we can consider based on the ownership of factors of production. Yes, right. Based on ownership of factors of production, our distribution, we are having 3 types of economies. The first one is the capitalist economy. In the capitalist economy, the resources are owned by the factors of production are owned by the private individuals. Production will be performed by the private individuals. Distribution also will be performed by the private individuals. Hence, we can call that here each and every concept of economic activity will be dealt by the private sector. Okay. Yes. How it will fixes the prices. It doesn't mean of writing cost sheet, cost of sales plus profit is equal to sales. If cost of profit is about 1 crore, let us take the profit as 10 crores. Let us make it the price as sales as, right. It doesn't mean that here the price should be acceptable by the common public. Yes or no? So, we can say that how the price will be fixed here, right. In the private sector or in the capitalist economy, how the prices will be determined? Through the market forces. What are the market forces? Demand and supply. If demand and supply, buyer and seller, consumer and producer is equilibrium point, and this is the equilibrium price, and this is the equilibrium output. So whenever you get the curves of both demand and supply, you have to consider it as market, and this mechanism is known as market mechanism. Can you understand? In the private sector, the prices are determined by the market mechanism. So we call the capitalist economy as market economy. Hope you might have understood. In the market mechanism, what we are finding out? Equilibrium price. Okay. We are finding out equilibrium price. So capitalist economy is also known as market economy. Okay. Do government interfere in fixing the prices? No. Do government interfere in economic activities here? No. So we can say that here there is no government intervention. If there is no government intervention, we have to call it as free. Free means not no price. It is no government restrictions or no government interference. So we can call the capitalist economies also as free economy or market economy. Right. Socialist. In the socialist economy, the prices are fixed by the ownership of factors of production and distribution activities also lies in the hands of the government. Okay, right, in the hands of the government. How the government fix the prices? Through its budget. What is a budget? A financial statement which records the revenue and expenditure of a government. That is public revenue, government revenue, public revenue, government expenditure, public expenditure. That's it, no? Right? A financial statement which records funds like that, non-trading concern, how you maintain different kinds of books. In the same manner, our government also maintain a non-trading concern account, that is receipts and payments account, or income and expenditure account known as budget. That budget records as usual revenue and expenditure. Expenditure on the debit side and revenue on the credit side, it will be recorded. Right. The last one is mixed economy. Here the production, ownership of factors of production, everything lies in the hands of the both government, some in government hands, some in private hands, both private and government. But in this chapter, we are going to discuss about the capitalist economy, right? We are discussing about the capitalist economy. But wherever you get the capitalist economy, nowhere in your material, that is board material or whatever it may be, you could not find the word of capitalist. They use the word of market economy, because in the capitalist economy, through market mechanism, prices will be determined. So we call that economy as market economy or free market economy. That's it. What's the first concept I told you that we are going to discuss? Role of government in which economy? Market economy, not the socialist economy or neither the mixed economy. We are discussing about the market economy. Right, the first one. Role of government in the market economy has been given by two personalities. The first one is Adam Smith, our father of microeconomics or economics. Right. The second one was given by Richard Musgrave. Let us go with the first one according to Adam Smith. According to Adam Smith, the role of government is minimum. Role of government is minimum in which economy? Capitalist economy or market economy? Don't write capitalist, it is write market economy. Right. So what will be its function? Its functions are very basic, that is traditional functions. What are the traditional functions that are performed by the basic functions that are performed by the Adam Smith, that are performed by the government in the market economy? In the words of Adam Smith, only three. What are they? The first one is national defense, security from outside different countries, to protect our country from other countries, to protect our citizens within the country, that is justice and rule of law. Right. The next one is public institutions. The last one is public projects. What are these public projects, ma'am? Can we know? Certainly, children, especially infrastructural facilities, railways, roadways, like this. Actually, for this, there will be a long gestation period. In your accounting words, we can say that a long payback period. Yes or no? But the rate of return is very less for this. So the projects, especially infrastructural projects or whatever it may be, if the gestation period is long and there are low profits, otherwise we can say that long payback period and low rate of return, many private entrepreneurs will not come forward to establish these things. So the government it itself has to accept these activities. So we can say that according to Adam Smith, right, in the capitalist economy or market economy, the role of government is very minimum and it is confined only to perform the traditional functions which are defense, law and rule, justice and rule of law. The next one, public institutions and public works which are not carried out by the private sector because of long payback period and low rate of return. Right. But after 1930s great economic depression, among the world, especially the capitalist economies or market economies, the government has been realized in those economies that the private sector cannot recover the economy. The government should come forward to recover the economy. The private sector, it itself cannot recover of its own. How can it recover the economy? It's not possible. So the government should come forward. So in addition, after 1930s great economic depression, economists found out that in the capitalist economy or market economy, the government role has to be changed. The government should perform not only the traditional functions, but also in addition to this, it has to go some economic function. Or these economic functions has to be carried by money. So we call it as financial. Whose finance? Government finance. So we call them as public finance function. So we call them as economic functions or public finance functions. Also, right, as they are performed by the government, whatever it may be, the term prefix if we are using fiscal means it will be performed by the government. So we call them as fiscal functions. Hope you can understand. After 1930s great economic depression, we came to know that in the capitalist economy, the private sector cannot recover the economy. So the government should come forward not only with the traditional functions, but also it has to add some economic functions or fiscal functions or public finance functions. That is the chapter before us. And this was explained by Richard Musgrave and it be expressed here. Right. According to Richard Musgrave, three branch taxonomy we can say, three classification. Taxonomy means classification we can say, right. According to him, what is the concept? Right. Till now the government performed traditional function. Right now this economic functions has been classified into three. The first one is resource allocation function or allocation function. The second function is distribution function or redistribution function. The last one is stabilization function. What is resource allocation function? Right. Resources are scarce. Yes or no? So these scarce resources has to be utilized efficiently so that there should be neither overproduction nor underproduction. Yes or no? So that there should be neither overproduction nor underproduction. So to bring that efficiency in the economy regarding to scarce resources, how could we use these resources for the best use? So the government came forward with the resource allocation function. Ma'am, how can it perform the resource allocation function? Yes, the government itself participates in the economic activities regarding to this. Otherwise, it will go, right, I am a government. I want to encourage this resource. This resource can be used for this particular good so that it can increase the efficiency of the economy. I feel means I'll give subsidy, government expenditure. If I feel that this resource utilizing for this purpose is extremely waste, then what I will do? I will levy taxes. Can you understand? So through budget, I will allocate the resources. If the resource is purposeful, I'll go for the subsidies. If the resource is not purposeful for that particular production, I will levy high taxes. So through budget, I want to allocate the resources. Hope you might have understood. Right. Let us take the example water, which is very scarce, especially during April and May month in India. Yes or no? Right. Summer. That water has different uses: domestic purpose, industrial purpose, agricultural purpose, commercial purpose, generation of electricity purpose. Right. During summer, we as a government, to whom we have to allot? Many people go for the agriculture. Especially in those times, there will be no crops. So no need to allot for agriculture. If we allot water, resource of water to agriculture, it will be wastage of resources. So the government comes forward to whom we have to allocate the resource like that. And while we are allocating the resources, you can assume that we are studying each purpose separately: domestic purpose, industrial purpose, agricultural purpose, commercial purpose, at the same time generation of electricity purpose. We are studying separately. When we are studying the concept separately, we call it as microeconomic function. So that's it. We can say that allocation function is a microeconomic function through which the government wants to bring efficiency in the allocation of resources. That's it now. Right. Over. Next, distribution function. The major problem in the market economy is income inequalities. Right now in the developing countries or mixed economies, the major problem is unemployment and poverty. But in the capitalist economies, the major problem is income inequalities. The government want to reduce the income inequalities. Right, what it started, the rich should not become richer and the poor should not become poorer, so that we can bring equality between these two. So the government came forward for this purpose by levying taxes on the rich so that rich cannot become richer, by giving subsidies to the poor so that the poor cannot become poorer, so we can reduce the income inequalities. The government wants to bring equality in the distribution of income and wealth, that is equity with reasonable grounds. So equity and fairness it wants to bring, and it is separate. It is studying separately rich and poor. So once again it is a microeconomic function. So we can say that distribution function or redistribution function is a microeconomic function, as we are studying rich and poor separately, right, to achieve equitable distribution of income and wealth. That means equity. It's not equity shares, equality, and fair, reasonable like that. Right. The last one is stabilization function. When there are instabilities in the economy, the government has to bring stability, not only in one aspect, in all the aspects. Yes or no? So we call it as macroeconomic function. This stabilization has to bring as price stability, growth stability, like that, economic growth, like that. What are the concepts which are applicable for the stability? We can go with them, and this can be brought by the government, and this policy is known as fiscal policy. Even along with this, the central bank has to work. So we can say that this stabilization can be brought through fiscal policy and also monetary policy. That's it. We had completed one question recording to the role of government in the capitalist economy or market economy. In the words of Adam Smith and Richard Musgrave, it is completed. And the next one is resource allocation function. The next one is distribution function. And the last one is stabilization function. The first one is allocation function. I told you what is meant by allocation. The allocation must be kept for the best use and there should be no wastage. Then only we can say that allocation will be efficient. Yes or no? Right? You can watch out the sentence. What is allocation function or resource allocation? Every economic system aims at the efficient allocation of scarce resources, that is best use to be available, and there should be no wastage. But this is possible only in the perfect competition, which does not occur in the real world. We are in the imperfect competition, right? So let it right. Who will allocate the resources? In the capitalist economy, in the socialist economy, we are having two types of economies. Yes or no? In the capitalist economies and socialist economies are mixed economy. First, let's go in the capitalist economy. In the capitalist economy, who will allocate the resources? Owners of resources are none other than private sector. So, private sector resource allocation we can say. In the socialist economy, who will fix? Ownership lies in the hands of government. So, government. So, instead of government, you have to write the state. In UK English, we represent government as a state. So, we can say that resource allocation can be performed by the two. If it is done by the private sector, we call it as private resource allocation. If it is done by the government, we call it as a state resource allocation. I already told you in the capitalist economy. In the capitalist economy, I told you market mechanism. Government through budget. That's it. Market, we will be having what are the concepts or components of market? Demand, supply, price. That's it. So, private sector resource allocation is done by the market forces, that is demand. Who will demand? Consumer. Consumer sovereignty, maximum satisfaction. And supply. Supply who will do? Producer, profit sake. Producer's profit motive. And price. That's it now. Right. The next one. State resource allocation. Government. Government, how can it allocate? Through taxes and government expenditure. So, we can say that simply as government budget. That's it, right? Do children, if efficient allocation of resources, that there is no need to stand and explain by me and to listen by you, yes or no, right? There is in the economy, what are the concepts relating to allocation of resources means we are in the imperfect competition. Nowhere we can say that the resources are fully utilized. Resources are underutilized in somewhere and overutilized in some process, underproduced in some places, overproduced in some process, or underconsumed by in some areas, overconsumed by some areas. Take the example of consumers, you can get the knowledge. Demerit goods, they will be overconsumed. Merit goods, they will be underconsumed. Yes or no? Right. Now, what is misallocation of resources? Efficient allocation means fuller utilization. Misallocation means either over or under. That's it, the definition. Yes or no? You can go to the definition. Right. If a free market, I'm asking that it is a capitalist economy. Yes or no? Right. Our topic rotates around the capitalist economy. In the capitalist economy, free market means capitalist economy. If the society fails to allocate the scarce resources, it leads to no efficient allocation. So how it will be the result? It may be either overproduction of some goods and services or underproduction of another goods and services. That's it, no? That's it, no? Right now, is market success or failure? Market becomes success only when there is fuller production, but there is no fuller production. Some products are overproduced and some products are underproduced. That's why we call this I told you allocation. Allocation means efficient allocation. That means best use, no wastage. What is misallocation? Misallocation means inefficient allocation. Inefficient allocation means fuller utilized. Yes, here underproduced or overproduced, and we call it as market success or market failure. So if you get the word of misallocation or market failure, one and the same. Hope you can understand. Misallocation or market failure, one and the same. So the question may be, what are the reasons for the market failure, or what are the reasons for the misallocation of resources? Like that, whatever they may ask, one and the same, because misallocation of scarce resources leads to market failure. That's it. What is misallocation? Either overproduction or underproduction. Right. That's it. Reasons for the market failure. Yes, we are having one chapter separately on this. There we can go with the meaning regarding to this. And totally we are having 6 reasons for the market failure. The first one is monopoly power. The second one is externalities. The third one is public goods. The fourth one is incomplete information. The fifth one is imperfect inequalities in distribution of income and wealth. The first one is factor immobility. Sixth, in this syllabus, we are not going to discuss this factor immobility, and the 5 topics will be discussed. As they are in further discussions, right now I am not going with the topic. Monopoly power, only single person, right? Less output, underproduction, over, market failure, right? Public goods, government goods, which are, do roads and infra, is everything okay? Sufficient to the growing population? No, underproduced. Externalities, pollution, I have to explain that concept in the particular topic. Imperfect information, right? Regarding to whether the exams will be conducted or not, whether to read or not, it's a dilemma. Right now you can have whether under reading or over reading, like that, right? Inequalities, inequalities leads to rich become richer, so luxury goods will be overproduced, poor becomes poorer, nobody are ready to produce the necessary goods, so necessary goods will be underproduced, luxury will be overproduced, like that. Imperfect mobility, sometimes the labor cannot move from one place to another place, so that vacancies will remain, it leads to underproduction, like that, right? And we can discuss these topics in market failure chapter. That's it, right? Now, when a market is in failure with the underproduction or overproduction, right, the government through fiscal functions come forward, that is resource allocation function. What is the aim of the resource allocation function? The first one, we have to improve the efficiency of the utilization of resources. That's it now. What is the first one? To improve the efficiency of the efficient utilization of resources, so that the economy can become efficient. For this, the government uses the tools of government expenditure and taxes together is known as budget. That's it, no? Is it okay? To improve the economic performance through expenditure and tax, that is nothing but budget. Next, it has to decide who should be taxed. Do all the people are equally taxed? No. Especially if you go to the direct taxes, we can say that simply it is a progressive, right? Who should be taxed and what type of goods and services are to be taxed? Go for the topic, ma. Do GST is one of the same on all the goods and services? We are having different slab rates up to 28% of slab rate. Yes or no? So we can say very easily that. So who should be taxed, what should be taxed and how it should be spent so that we can make resource efficiently utilized and the economic performance will be smooth. The next one is revision. Next, we have to see that while we are utilizing the resources, the economy should possess maximum combination of two topics. What are they? Public goods and merit goods. As common utilization goods should come forward. At the same time also, which goods? They should be merit goods, right? Each and everyone approaching to the exams, okay, each and every student is coming on bike. So what happens? Automatically what happens? Pollution increases. If they use a common transportation, what happens? Pollution decreases. So the government wants to encourage. So if common transportation is there, petrol utilization will decreases, pollution also decreases. If each individual goes for each vehicle, pollution increases, petrol utilization increases, one day or the other day the crude oil gets extinct. So to overcome this problem, to make efficient utilization of resources, what the government is planning? The government is planning common goods, that is public goods. Okay, the next one is those goods should be merit goods. Government has to plan accordingly. In the economy, there should be the combination of public goods and also merit goods. Clear? Right. Last one. Right now, the private sector is in failure to allocate the scarce resources efficiently. So, the government has came forward to perform this function. So, the resource allocation should be reallocated from private to public use. Right now, the ownership was laid in the hands of private. Right? It has to be shifted to the government. That's it. It's over. Right? The government has to improve. What's the aim of the allocation function? To improve the economic performance through budget. Who should be and what should be and how it should be spent has to be decided. And the third point, optimum combination of merit and public goods should be there in the economy. The last one, the resources right now has to be diverted. Ownership has to be diverted from the private to government. That's it. Ma'am, practically it is possible in the economy? Do any instruments are there? Right. We can say that there are certain instruments. So for 3 marks, it's sufficient what you have to write. So you can go with this. The first one, the government itself can directly participate in the economic activities. When the resources it finds that it is being wasted and it is not using for the best use, the government itself comes forward to produce, say electricity, right? The second one, transportation, right? AP, every state has its own RTC, yes or no? Right. Government wants to promote the public goods, I told you, no? Right. The government can participate directly as an entrepreneur, but it is not possible for the government to produce all the goods and services that are required by the people. So, it also encourages private sector through providing incentives and disincentives. If the society is using the resource in the best manner for the merit purpose, so as a government it can give incentives, that is subsidies, grants, interest-free loans, less interest loans, like that. If the government feels that the product is not utilizing efficiently and it is producing demerit goods and externalities on the third parties, means the government can levy disincentives. That means additional taxes, some restrictions, quantitative restrictions, it can go like that. So the first point, government itself can directly produce the goods and services. Otherwise, it encourages or discourages or incentives or disincentives to the private participation. Next, third part, not only that, sometimes what it can do, it has to control, yes or no? It will make some formalities, in the sense legal formalities, if they void like that. The next one, license fees. Compulsory license has to be taken for some businesses. At the same time, location of the industry to control the pollution, like that. At the same time, merging policies through Competition Act. Next time, administration frameworks. All these combinations together known as intermediate techniques. So the government directly can participate as the producer of goods and services, or otherwise it can encourage private participation by giving incentives or disincentives accordingly. Or third one, it may provide licenses, directives on the location of industry, merging policies, amalgamate through Competition Act, compulsory registration for some purposes, still more controls, we can say administration framework will be there. If any person voids all these things, they will take legal action. All this together is known as intermediate techniques. Whatever the government wants to do, it wants to maximize the social welfare through better resource allocation. Okay, that's it. What's the topic we have concluded right now? Allocation. Allocation is best use, no wastage, fuller utilization. So in a real country, in real world, it's not happening. Misallocation of resources, overproduction or underproduction leads to market failure. This is inefficient. Right. What are the reasons for the market failure? 6 are there. What are they? Monopoly power, public goods, externalities, incomplete information, inequalities in distribution of income, and the last one is imperfect mobility of labor or factor immobility. That's it. Over. The next one. What are the aims of the government regarding to this resource allocation function? Economic performance, who and what should be taxed and how it should be spent, combination of public and merit goods, reallocation of resources from private to public use. It's over. Right. How it is practically implemented? That means the government instruments to bring the allocation function or resource allocation function means it can directly participate, it can provide incentives or disincentives to the private sector, some rules and regulations, all the formalities that are known by you can write, and whatever may be the purpose, ultimately we want to maximize the social welfare of the people. That's it. A small topic, that is distribution function of government. What is the distribution function of government? Instead of distribution, we can say that it has redistribution, because the government collects the taxes from the rich and provide in the form of subsidies to the poor. That is, it is redistributing, collecting from one and providing to the others. Yes or no? This is also known as transfer payments. Right. For what purpose the government has introduced this distribution function? To reduce the income inequalities, to bring equalities in distribution of income and wealth. That means equity and fairness has to be brought in the societies. Through what kind of topic? Right, through budget. Once again, taxes on the rich and subsidies. Subsidies means government expenditure to the poor. That's it now. Once again, through budget. Allocation function through budget only. Even this distribution also through budget only. Yes or no? Right, you can have this. For whom to produce, especially we have to consider the poor people here, for whom to produce, and we want to bring equity and fairness in the society. Right. What is the function? What are the aims of the distribution function? The first one is we have to bring equality in all the aspects regarding to output distribution, okay, regarding to equal opportunities, regarding to equal income, regarding to equal wealth. First 2 points are completed. You can watch it out. To achieve equitable distribution of output, equality in income, equality in wealth, and equality in opportunities. Yes or no? We want to bring equality to the people, not only in terms of output, not only in terms of opportunities, not only in terms of income, also in terms of wealth. When do all the people will be having a same income as Jio Ambani? Not like that, ma. Yes, according to their caliber, we have to reduce the inequalities. But it doesn't mean of having a equal income to all the people, equal wealth to all the people. Not like that. Okay. According to their caliber, there should be not much difference. We want to reduce the income inequalities. That's so we have to provide equal opportunities, equal income, equal wealth, and also equal social distribution of output. That's over. And the next point is the government has to come forward regarding two more aspects. The point is there are some members, especially vulnerable sections. We used to say, who are the vulnerable sections? Right, SC, ST, BC, at the same time women. In our past economies and in many countries, even right now we can say that, okay, in USA, racism is going on. Yes or no? Right. So the people who are suffering, we call them as vulnerable sections. So to those people, especially here we can consider the poor, we have to advance their well-being. We have to improve their standard of living. The second one is the people who are in problems, we have to provide the security. Security means doesn't mean of gunman like that. A category to Y category security. It doesn't mean of securities like that. Here the security means financial security. Yes, Dwakra for the women, like that. Yes, EDP, Entrepreneurship Development Program for the women with subsidized loans like that. Right, not only to women, those who are establishing some industries in the backward areas also, for the male persons also, they will give certain subsidy, so to encourage production in those areas like that. So, here, we want to provide security in terms of financial or any other terms that are required. Okay. As a government, it wants to bring advance in the well-being of the poor people or the people who are facing different kinds of problems. At the same time, we want to give security to the vulnerable sections, or we can say that who are facing different kinds of hardships or problems. That's it. The last one, whatever we want to do, no person in the country should remain as unemployed. Each and every person should be secured with his employment so that he can have minimum standard of living. That's it, no? Every person, there should be no poor, first of all. No poor means each and every person should have a minimum standard of living. That's it. So what's the first one? Equitable distribution of output. What is the second one? Equal income, equal wealth, equal opportunities. What is the third one? Very simple. What is the third one, ma? Advance of the well-being of the people, poor people especially, and the people who are suffering from different kinds of hardships, they should be provided with security, financial security, requirement of the security. The last one, minimum standard of living to each and everyone, so that each and every person should be secured in different aspects regarding to this issue. That's it. Over. Right. Ma'am, can we have any examples? No need to bother. I told you already. The government collects the taxes from the rich and provides subsidies to the poor. What are the two types of taxes? Direct taxes and indirect taxes. Direct taxes are progressive, so rich will be taxed more. At the same time, in the indirect taxes, though they are regressive, they are differential. Necessaries, some necessaries no taxes only, but the luxuries up to 28% they are attracting the slab rate, SN or GST. Right. So we can say that the rich will consume luxuries, so high taxes on the rich consuming luxuries, and poor consume the necessaries and low tax on the, so though these are differential, in the same manner they affect the rich and poor. They are collecting taxes from the rich and providing to the poor. The first 2 points are related to progressive and also right. Ma'am, how can we reduce the problem? How we are providing to poor people? You write all the schemes that have been government introduced, ma'am. Okay. Mahatma Gandhi National Rural Employment Guarantee Scheme, 100 days work, so that minimum standard of living can be given. Otherwise, pensions, old age pensions, physically handicapped pensions, widow pensions, unemployment allowances, at the same time midday meal, free education, free health, Arogyasri card like that, free education, free health, subsidized education, subsidized health to the poor, like that. Whatever the schemes you know regarding to that, to benefit the poor, what the government is providing, right? Central government schemes rather than state government, because our valuation will be at the central level, not at the state level. So you write the central level schemes, right? Self-employment programs, all these poverty alleviation programs, you can write and you can get the marks. The first topic, if you go that, you can find out that progressive taxation and subsidy to the poor. That's it, no? Redistribution of income. We have collected taxes from the rich and provided to the poor. Next one, reservations so that equal opportunity can be obtained. Poverty alleviation programs, transfer payments by the government through unemployment allowances, subsidies, social security schemes like that. Dwakra and all comes under social security schemes. Special schemes for the backward areas, land reforms, gender sensitive budgeting. In a budget, if any separate importance has been given to any gender, say for the male or female or for the gays, whomever they may be, then the budget will be considered as gender sensitive budget. Maternity leaves to the ladies and a special income tax concession to the ladies. Once upon a time it was there, and those kind of budgets will be regarded as gender sensitive budgeting. At the same time, reservation to the gays and reservations not only in political sense, even some jobs also, right? If that type of any launch has been taken by the government, we call them as gender sensitive budgeting. Land reforms, Vinoba Bhave, you can remember, those who have surplus land, they have to give to the landless like that, rich to poor. So all these concepts you can write. Subsidized health and education, for free education and health of those who are living below the poverty line. Especially, we have to increase the health and education of the people so they can have the long-term employment, that is human capability, health and education, human capital. And the last one is, the first one, rich should not become richer, means we have to control the black money, unaccountable money, so that we can reduce to some extent the differences or inequalities in the economy to combat the black money. That is nothing but demonetization is one of the example we can see. Whether it is success or not, no need to comment in this class, right? Hope I had completed the distribution function. Allocation function is over, distribution function is also over, and the last function is stabilization function. With this, we can conclude the chapter of unit of fiscal function of the fiscal policy chapter of our board material. Right. Let us see what is the business function. If you learn this answer, in the next chapter, you can learn 8 answers, not 1 or 2. 8 answers we can write. Okay. 8 answers to do means here basic UT is required for you. The government right now wants to bring the function is stabilization function. What is stabilization? When we have to bring stabilization by the government. This is a function, fiscal function or public finance function or economic function that has to be performed by the government in the capitalist economy. When the government has to bring stabilization in the capitalist economy. When there is stability, not necessary. When there is instability. What is this instability? Business cycles are known as instabilities. Okay, ups and downs of a business is known as nothing but instability. Right, let you have the clarity. It is the initial stages. Let us take the example of mobile. It is macroeconomic, not single product. But here, for your understanding sense, I am giving the answer. Mobile, initial stages, 1 or 2 in a town. Okay, growth, minimum number of mobiles among the families. Right, boom. Each person is right now having one mobile. It became common thing. Right now we are in the boom stage of mobile. Yes or no? One day or the other day, if one fine new product has been innovated, right, it's not necessary to carry physically the mobile. As some chip, it can be introduced in the brain or in any body part so that we can activate. Just Google glasses, no need to carry. Just by keeping voice commands, it can Alexa, like that. No need to carry personally. Automatically what happens? If new innovation arises, what happens? The old product demand will decreases. So the product will enter into recession. If it is not controlled with new innovation, it leads to one day or the other day, the product will disappear. We call that as depression. And again, new product will start recovery. Okay, once again growth. Once again, new product will reach the boom. One day or another fine day, what happens? Another new innovation takes place. Recession. If it is not controlled, what happens? Leads to depression. Right. After depression, nowhere the economy will stop. Again, it will recover. Yes or no? This business cycles will continue in any economy. Whether it is a capitalist economy or socialist economy or mixed economy. If innovations are more, okay, are fast, automatically business cycles will take place very soon and soon and sooner. Okay, na? That's it. So, when the economy is in facing ups and downs, that means business cycle, certainly the government has to go with the stabilization function, right? I'll tell you, right? In these stages, initial to boom, tell me what will be happening? Employment opportunities increases. With the increase in employment opportunities, investments also increases. Right, output also increases, right, income also increases, so aggregate demand also increases. Aggregate demand increases means general price level you have to write up. Prices also increases, that means inflation we are facing. Demand increases, income increases, output increases, employment increases, right, prices increases, right, everything is in the increasing phase. Yes or no? Even the producer will be optimist. Yes or no? Producer will be in optimism, yes or no? Our income, employment, right, our aggregate demand, prices, everything is going on rising. Even our standard of living also rises. Our cost of living also rises, yes or no? Right. And this phase we call it as expansion. This phase is known as expansion. Come here. Recession. Employment opportunities decreases. Produces and investments decreases. Yes or no? Right. Output decreases. Income decreases. Right. Everything decreases. Demand, aggregate demand decreases. Right. General price level decreases. That means we have to experience here deflation. Yes or no? General price level decreases. Yes or no? Right. And this phase we call it as contractionary phase. So may I know, children, how many phases are there? May I know how many phases? 2 phases. What are they? Expansionary phase and contractionary phase. Hope you can understand. Totally 8 answers and here 1 answer. 9 answers will be completed. Please keep concentration while you are doing. Right. How many phases are there? 2 phases are there. What are they? Expansionary phase contractionary phase. Over no? Expansionary phase and contractionary phase. But while we are representing, we don't represent with the phase, we represent with the stage. In the expansionary ends at boom. So we can call the stage as boom. During the boom, what will be the level of prices? Rising. So we have to write boom or inflation. So expansionary phase will be represented by the terms either boom or inflation. Right. After boom, contraction starts from recession. Expansion ends up to boom. Contraction starts from recession. So we have to give the continuity, no? Right. We can call it as a recession or we can call it as deflation. Yes or no? Recession or deflation. That's it, no? Right. But in our syllabus, we are going to discuss with these 2 terms only. But in our material, they can ask even boom or inflation, no doubt in that. They can ask even recession or deflation, whatever they ask. But in our syllabus, our discussion will go with inflation and recession. We don't use the word of boom. At the same time, nowhere we come across the word of deflation. We use the terms of inflation and recession. Do okay? Right. This is the phase. This is the stage. Right. Now, money availability with the people or money supply or money in circulation, how it will be? During the boom or expansion, how will be the money supply? More. Yes or no? Next, how will be the contractionary phase? As unemployment is more, income level is decreasing, less. Right now, we as a government has to come with the fiscal policy. We have to use certain tools or instruments, and those instruments are known as fiscal instruments. Fiscal instruments. Let us give what are the fiscal instruments. Taxes, government expenditure, okay, government expenditure, taxes together is known as budget. Excess of expenditure over revenue leads to debt, public debt. So next chapter we are going to deal with these 4 topics. That's when we can conclude the next chapter also. The basis we are providing here itself. Right. Now, fiscal instruments we are having 4. The first one is taxes, government expenditure, budget and public debt. That's it, no? Right. Children, if we don't control the money supply or money availability with the people, what happens? Still more money increases. Still inflation increases. Inflation becomes uncontrollable and reaches to Venezuela countries 3 lakhs% of inflation. Yes or no? To control this inflation, what we have to do? We have to reduce the money supply with the people. Yes or no? What we have to do? We have to reduce the money supply with the people. To reduce the money supply, what we have to do? We have to, right, as a government, what we can do? At this topic, you have to think. You are the government or you are the consumer. Any topic that has been given, you take one role. Then you can understand the chapter very easily, right? While you are watching the match, right now IPL is going on, yes or no? Right? You have to think about batting, or you have to be from the batting side or from the bowling side, yes or no? Yes or no? Right. You think from one team, not from the both teams. Okay, one team, you can get the perfect answer. Right. Now, think you right now as a government and you tell me, children, and inflation is there and all the people are having surplus money, so they are increasing their demand. Still prices are going on increasing. The inflation is getting uncontrollable. So as a government, to control this inflation or expansion, what we have to do? We have to reduce the money supply with the people. To reduce the money supply, what we have to do? We have to increase the taxes. Yes or no? Right. We have to decrease the government expenditure, because we, the government, our expenditure, because we are providing pensions to the people. For us, it is an expenditure, but for the common people, it is an income. So we have to reduce our expenditure so that people income will decrease. So the availability with the money of the people also decreases. Yes or no? So as a government, we have to increase our revenue and we have to decrease our expenditure. Right now, if you compare these two situations, you can get that X of revenue over expenditure. Yes or no? Taxes are more. It's a revenue to the government, more revenue. Government expenditure is decreasing. Yes, expenditure is falling. So the government can experience surplus budget. Yes or no? Individually we can go, otherwise with the combination we can go. The government may use only one instrument, that is taxes. It can raise the taxes, okay. Otherwise it can go for the fall in government expenditure. If it adopts the both, that means rise in taxes and the fall in government expenditure, the government has to experience a surplus budget, right. Now there is more money with the people. I need one answer, right. As a government, let us repay the old debts to the people or borrow from the people. If we repay the old debts to the people, still money availability with the people increases, still inflation increases. So right now in this situation, please don't repay to the public. You just borrow from the public. How the government can borrow? We are having in the next chapter. That's it now. Can you understand these topics? Sir? Right. Yes, during the inflation, as more money is available with the people, I could not get sleep also. Right, what I have to do? I have to increase the taxes, or otherwise I have to go for the decrease in government expenditure. If I adopt the both, means I have to go for the budget, so I can experience the surplus budget. At the same time, I should not repay as a government to the public, because it increases the money availability with the people and still inflation increases, it becomes uncontrollable. So I have to borrow from the public. By doing all these activities, let me say what will be the effect on economy, right? Money supply with the people decreases. Yes or no? If money supply with the people decreases, economic activities slow down. Aggregate demand decreases. Yes or no? Output decreases. Overproduction decreases in your sense. Okay? Can you get this? It affects on economic activities, production, consumption, employment, income, everything you can go. But you specifically mentioned the aggregate demand. Because of rise in demand, only prices are increasing. So we have to reduce the demand. So you have to mention the aggregate demand. All these activities has been slowed down. Right now, we brought expansion in the economy or contraction in the economy. During expansionary phase, as there is more money with the people, by using different fiscal instruments like taxes, government expenditure and budget and public debt, we reduce the speed of economic activities. We are reducing means we are reducing the economic activities. That means, are we contracting or still we are expanding? We are contracting. So we call this as contractionary fiscal policy. So in the expansionary phase, the government has to bring the contractionary fiscal policy. Okay, right. Economy is in recession, deflation. People are facing different kinds of problems. Okay, right. It is a contractionary phase. Yes or no? In the contractionary phase, people are having less money. Yes. Right now, what we have to do? We have to increase their money availability. To increase their money availability means it increases the demand. If demand increases, what happens? Automatically supply increases, producer becomes optimist, prices increases, everything we can bring the stability. Yes or no? Right. Ma'am, you told we have to reduce the economic activities. No, prices have to be reduced, you told. To what extent we have to reduce the prices? To what extent we face the inflation? To the same extent we have to bring down the inflation. Right now 100 rupees is the base price, let us. Right. The price has been increased to 120. Right now, by taking these activities, we have to reduce the inflation from 120 rupees to back to pavilion, that is 100 rupees. To what extent there is a price instability? To the same extent we have to reduce the, okay, to what extent there is a price instability, to the same extent we have to reduce and we have to bring the price stability. That's it, right? People are not having money, so they could not pay the taxes. So as a government, let us reduce the taxes. So more money with them, right? Let us increase the government expenditure. If we adopt the both, excess of government expenditure over government revenue, it leads to deficit budget. Okay, right now as a government, would you like to repay or would you like to borrow? The people, they themselves are not having. Is it possible for us to borrow? No, and not at all. So what we have to do? We have to repay the old debts to the people so that their money availability will increases. Because of doing these things, the money availability with the people increases, their economic activity increases, demand increases, output increases, right? Prices also get increases. And right now we are reviving the economy and we are expanding the economy. So this policy is known as expansionary fiscal policy. That means in the expansionary phase, the government has to adopt contractionary fiscal policy. Right? Ultimately, right? During contractionary phase, we have to bring expansionary fiscal policy. That's it. The same answer has been provided for you here. Business cycle, inflation, recession, availability of money with the people. So with the fiscal instruments, what we have to do? Taxes, government expenditure, public debt, budget, effect on fiscal policy on aggregate demand, output and employment. What type of discretionary fiscal policy we have followed? In the expansionary phase, we followed the contractionary fiscal cycle. In the contraction phase, we followed the expansionary fiscal policy. That's it, no? That's it. Why the instability occurs? Because of business cycles, right? Basis for the stabilization function of government means because of instabilities. How these instabilities have been caused means business cycles are natural phenomena. In every country there will be ups and downs. So it is the responsibility of the private sector, it alone, neither prevent the business cycle nor recover from the business cycle. So the government has to come from forward in the form of business stabilization function. But you have to think one thing, if the government does not interfere, what happens? If government does not interfere, what happens? This phase becomes severe and proceed for a long period of time. First one, instabilities may be prolonged for a long period of time. The next one is stagflation. What is the next one? Stagflation. Right. If government does not interfere during instabilities, what happens? It doesn't take up the function of stabilization function. What happens? The first one, instability prolongs. It takes a long period of time and the problem becomes severe. The next one is stagflation. Many people used to ask this topic. Stagflation is a combination of stagnation plus inflation. Inflation from here, stag from here, get together becomes stagflation, right? Every economy starting, they faces the inflation, then only they enter into the recession. Yes or no? In this process, what happens? Let me say. First one, inflation, we are unable to control. Okay, right. At the same time, after reaching inflation peak point, boom point, after maximum we can't reach maximum. Certainly there will be a downfall. Okay, certainly there will be a downfall. First of all, economy will face stagnation. Stagnation means no change in the economy. The growth rate decreases. Growth rate becomes stagnant first of all. High prices, inflation as usual. As growth becomes stagnant, further we cannot accommodate more employment. So which problem arises? Unemployment arises. And this inflation continues. Right. After demonetization, India is facing, initially the recession started after the demonetization, and basically many other reasons, and this affected a lot, we can say, no doubt in that, because it prolonged a month of 6.5 months we experienced the scarcity of money availability in the economy because of demonetization. Right. Recession has been started. Right now we are in recession only. After this COVID-19 pandemic situation also, we can say that this recession became stronger, and we have to decide whether we are in depression or in recession, because our economic growth rate has been reached minus 25%, yes or no, approximately. Right. So we can say, right, this is the situation. We are in recession, India, yes or no. At the same time, our present inflation rate is 5.6%. You can watch it out. We are facing recession, at the same time inflation. Two phases at a single time. If we try to control the recession, inflation increases. If we try to control the inflation, the recession will increases. This becomes more critical, and it is highly impossible to solve it. First of all, to be open and frank, the best economists, whomever they may come, this situation to be out of this means it becomes a drastic for anyone. But clear? The problems becomes more critical. That means stagflation. Two features, expansion features will be there, contractionary features will be there. Both are there. If we control the expansion, contraction features become severe. If we control the contraction, expansion features will become severe. So we cannot bring the stability in the economy. Like that it happens. Okay, right. We call that as stagflation. Stagflation means stagnation plus inflation, unemployment plus inflation, like that. Whatever may be the topic, growth rate you can take, aggregate demand, everything you can take. Right. Right, the last one, contagion effect. This is the last topic of this chapter. Right, what is the contagion effect? Coronavirus started in Wuhan city of China, yes or no? And right now it has been spread to entire world. This is also known as contagion effect. Right, China is telling that it's not the source of China. WHO, you want means you have to make some commission on this, because it has been started in different countries, but it has been increased in our country, and it came to be known that it has started in our country. China is arguing from its side, and USA political side, they are telling that totally blaming China, and we don't know what is correct and what is wrong. Better leave it. Right now I am telling you, if recession of one country spreads to other countries, right, we call it as contagion effect. If the inflation or better boom position of one country passes to another country because of interdependency of international trade, we call it as contagion effect. If it spreads from one country to the entire world, we call it as, not only the trend, some part of the world also we can say, we call it as contagion effect. That's it. If the instability is not controlled by the government through stabilization function, the country has to experience, what it has to experience, longer period of particular stage, and it becomes more critical, leading to stagflation. That means two phases combination they have to face, that is stagnation and inflation, that is unemployment and inflation, and the last one, and it's not only stopped to that particular country, it will spread to entire world, and we call that as a contagion effect. That's it. We had concluded the fiscal function chapter. You can get the topic regarding to this, and in this topic I told you, first of all, what we are going to discuss. I told you in this chapter, role of government in market economy, in the words of Adam Smith, traditional function, Richard Musgrave, fiscal function. What are the three fiscal functions? Resource allocation function, we experienced misallocation, the government aimed at efficient allocation, and government instruments to rectify, to bring the resource allocation. Distribution function, what are the aims of distribution function? The progressive taxation and subsidies to the poor. You can do in your own words regarding to distribution function. That means to reduce the income inequalities. The last one is a stabilization function. Right now we told when there are business cycles or instability in the economy, the private sector cannot prevent or cannot resolve this problem. So the government has to come with the stabilization function through fiscal instruments. So what are the four fiscal instruments? Taxes, government expenditure, budget, and public data. And two types of fiscal policy we studied here: discretionary, contractionary fiscal policy during expansionary phase, and expansionary fiscal policy during contractionary phase. That's it. We have concluded the topic of fiscal function. The next chapter in this is the fiscal policy chapter has been divided into 4 units. We have concluded the first unit. Over. The fiscal policy chapter has been divided into 4 units. We have concluded the first unit. Over. The second unit is fiscal policy. What is the fiscal policy? It wants to bring stability. How to bring the stability? Fiscal policy uses, how it can bring stability? By using fiscal instruments. What are the fiscal instruments? By using fiscal instruments. What are the fiscal instruments? Taxes, government expenditure, budget, public debt. To influence which activities? Economic activities, okay, output, aggregate demand and employment. Yes or no? What is fiscal policy? Fiscal policy uses the fiscal instruments to influence economic activities. What are the main economic activities? Output, employment and aggregate demand. That's it now. Right. We have to study one separate. In this chapter, we are going to study about only 3 concepts. Three concepts. What are they? The first one is objectives of fiscal policy. The second one is instruments of fiscal policy. What are the instruments of fiscal policy? Taxes, government expenditure, public debt and budget. We have to read separately. 4 instruments of fiscal policy. Next, types of fiscal policy. Right. If government involves, we call it as discretionary fiscal policy. If government takes action when there is instability, in previous stabilization function we discussed, no, we call it as discretionary fiscal policy. If instabilities arises and government will not interfere, though we can achieve the stability, we call it as a non-discretionary fiscal stability. Government will interfere and will make changes. Here government will not interfere, but stability will be arised. We can discuss here. Non-discretionary fiscal policy. Here the stability without government intervention arises. So we call that as automatic stabilization. And the process is automatic stabilization and they are known as automatic stabilizers. That's it. This chapter includes only 3. Objectives of fiscal policy, instruments of fiscal policy and types of fiscal policy. The types of fiscal policy are 2 types. Government interferes and brings stability, means we call it as discretionary fiscal policy. Right now I told you, during contractionary phase or recession or deflation, the government brings expansionary fiscal policy. During inflation or expansionary phase or boom, the government brings contractionary fiscal policy. So we are going to study about 3 fiscal policies. Actually types are 2 and again their classification is there in the discretionary. So totally 3. With this the chapter will be over. Okay, let we go with the answers. The first one is, what are the objectives of fiscal policy? Right. Fiscal policy uses the fiscal instruments to influence the economic activity, aggregate demand and output and employment. Right. The next one, objectives. What are for every policy there will be objectives. Objectives of monetary policy, objectives of trade policy, objectives of fiscal policy. For everything, for objectives will be there. They will be in positive sense. What is the first one? It wants to achieve and maintain full employment. It wants to bring price stability. Right. It's a common thing, positive sense. Full employment of resources, price stability in the economy, economic development, especially we have to write accelerator of economic development, and the last one is equitable distribution of income and wealth. Different countries have different aspirations and things, and different countries have different objectives. But here we have taken some common objectives of fiscal policy. In comparison to all the developing, developed and underdeveloped countries, at the same time capitalist, socialist, mixed economies, keeping in view of all different kinds of economies, we took common fiscal objectives, right? What are the 4 fiscal common objectives in the world? The first one is full employment, right? Price stability, economic development, and the last one is right, equitable distribution of income and wealth. That's it, no? Right. But you have to remember one thing. No 2 objectives can be achieved simultaneously. One thing I will tell you, economic growth and price stability. If we want to achieve economic growth, certainly we have to increase the output and we will be involving in export something. In this process, demand for labor increases. If demand for labor increases, price of labor increases. If price of labor increases, cost of production increases. If cost of production increases, prices increases. If you want to achieve the economic growth, price stability will not be achieved. If you sustain for the price stability, it's not possible to achieve the economic growth. You can take any example of two objectives and you just go ahead. It's not possible for you because each objective is in conflict with another objectives. Okay. So while selecting, we have to select only one, but 2 objectives cannot be achieved simultaneously. This is the basic problem. It's over. The next one is we are having instruments of fiscal policy. How many instruments we are having? 4. Yes or no? Government expenditure, taxes, and public debt, and the last one is budget. That's it now, right? First one, government expenditure, right? Just how you write in your accounts regarding to revenue expenditure, capital expenditure. Even government, our government will also have revenue expenditure and capital expenditure, but we call the revenue expenditure of a government as current expenditure or consumption expenditure. Current or consumption expenditure. Right now, if I am a government employee, government will provide the salary on monthly basis. It's a revenue expenditure to the government. Okay, right. Whatever the government purchases like that, all will be considered as revenue expenditure, and that revenue expenditure will be treated as current or consumption expenditure of a government. Right. The next one, capital expenditure. Just like infrastructure, capital expenditure, you know it very well. So based on that infrastructure, road construction, capital equipment purchases, tunnel construction, bridge, dams, whatever it may be, infrastructure of an economy, rural electrification, all comes under capital expenditure. Right. One more expenditure is there here. It's not deferred revenue expenditure. We can say it as a transfer payments. I told you in the distribution function, the government collects taxes from the rich and provides subsidies to the poor. Right now, the government is collecting taxes from the rich and giving me old age pension. Just imagine, it is a income that is transferred from rich people to the poor people. It's not government money, yes or no? It's an income that is transferred from rich people to the poor people. As government is paying, it writes that as transfer payment. It does not add to national income. Why, ma'am? Right, because the old age pension that has been given by the government for me, just imagine, is it a production activity? It is an unproductive activity. If it is unproductive, it will not add to the national income. So we just call them that we are transferring the income from one person to another person, or rich to poor, but basically we are not, it's not a income that has been generated or production that has been, it is non-economic activity, to be open and frank, but involves money, but doesn't include production. Okay, right. What are the 3 types of expenditure the government has to face? 3. What are they? Revenue expenditure, that means consumption expenditure or current expenditure, capital expenditure, and transfer payments. You just write the example of unemployment allowances, pensions, like that. You can get easily the answer. You can frame the sentence. Right. Right now, this fiscal instruments should control the instabilities. Yes or no? First, when there is, right children, when there is inflation in the economy, what the government expenditure? Inflation means more money with the people. Yes or no? More money with the people. Automatically what happens? The more money with the availability with the people, the government what has to do? It has to reduce government expenditure. That's it, no? You can write its consequences. The government reduces its expenditure, automatically the income with the people decreases, the disposable income decreases, their aggregate demand decreases. To what extent there is an inflation in the economy, it decreases. You can write in your own words. Ultimately, the topic is we have to reduce the government expenditure when there is inflation in the economy. Right. When there is recession in the economy, there will be less money available with the people. We have to increase the money supply with the people. Yes or no? So what we have to do? The government expenditure has to be increased. In what way we can increase? We can increase capital expenditure so that in the long run it may be benefited. Yes or no? Right now we cannot create employment opportunities and all during recession, no? So we can go for the construction of any infrastructure, roads, bridges, dams, tunnels, national highways, like that we can construct. Otherwise we can go for the rural electrification. New works the government has to take the capital projects now, so that in the long term it will be benefited. Present recession also can be overcome to certain effect. The next one. Okay, inflation, recession. Ma'am, recession is over now, only two. But in this government expenditure, to highlight the transfer payments, we are having one more concept, that is during depression. During depression also, what kind of money? Less money is available with the people. The government has to increase its expenditure. Here, capital expenditure it will increase. But here, the government has to go with the transfer payments. When you get the word of depression and when you get the word of government expenditure, basically these points, there may be chance to be asked, ma. Go for the two topics, that is compensatory spending and pump priming. That's it. Compensatory spending and pump priming. You just go with the answer. What is compensatory spending? I am a farmer. I am a private sector. My land, my ownership. I am producing the output. I am distributing my output. I am a farmer, right? Because of recession, my sector or my farm sector has went into deficit. I am in losses. Private deficit. Yes or no? I am facing the private deficit. I am in losses, right? To what extent I face the loss? If government comes forward and pay me the amount, compensation to the loss. The government compensated the amount that is equal to my loss. Okay, because of rains, whatever it may be, floods or whatever it may be. Government compensates the amount of loss. We call it as compensatory spending. Hope you can understand. Okay. At the same time, pump priming. Yes, here also private sector is in deficient. Yes, my farmland is not working. Right, because the economy is facing recession, I am in deficit. Right, but what is pump priming? The government will not give loss compensation, but what it can provide? It can provide new loans for me, though I have not repaid the old loans, or it can provide loans at a less rate of interest, or it can provide the grants for me to pick up my farming sector or to pick up my industry or whatever may be the sector, right? To revive the economy, to revive the economy, to revive the industry, to revive the private sector, okay, through incentives. We call it as pump priming. We call it as pump priming, right? You can take the automobile industry in the month of August or September, I could not remember. August or September of 2019, our economy gave 60,000 crores of package to the automobile industry. Because of recession, automobile industry was in losses. To overcome that, so many benefits have been provided to the automobile industry to revive and to bring back into the running position of this automobile industry. Our economy, our Indian, at the time our finance minister is same Nirmala Sitharaman. She announced a 60,000 crores of package to the automobile industry. Yes or no? To revive the economy, to run into the condition, if government provides any grants, interestless loans, interest-free loans, or subsidized rate of interest loans, or without paying, repaying old credit loans, Government may provide new loans like that. Any offer it can give to revive the economy, to bring back into running condition. We call it that as pump priming. Otherwise, if the government provides only the amount of compensation towards the loss, we call it as compensation to employees. It is compensatory spending. Right? You can get it. When private sector become deficient, right, certain volumes of public spending will help to revive the economy, to bring back the economy into running condition, right. It is termed as pump priming. Compensatory spending, it is carried out with the intention to compensate for the loss. Deficiency means loss of the private investment is called compensatory spending. That's it. Okay. Especially for the farmers, we will be giving debt waivers or loss to the compensation like that. It's termed as compensatory spending. If we give any new loans for them to revive to levy new crops like that, means automatically we call it as pump priming, right? During depression, the government expenditure can be expressed either in terms of pump priming or in terms of compensatory spending. That's it, over. The next one is taxes. What we have to do for the taxes? Taxes. Inflation. People are having more money. If it is not controlled, what happens? Still inflation increases. What we have to do? We have to levy high taxes. We have to raise the existing tax rates, or we have to levy new taxes. So after when service tax was introduced, only few services are included in the service tax. Later many of the services have been included, yes or no? Like that. If we want to increase the tax, every time it's increased means next time we can't get the seat. So what we have to do? We have to rise minimally the existing tax rates, or we can go for the levying new taxes. But one thing, you should be cautious while increasing the taxes, because if high taxes means it gives also disincentives and losses. Okay. The next one, during recession, people are having less money, so we can't levy more taxes, yes or no? So what we have to do? We have to reduce the taxes. That's it, no? We have to reduce the taxes. That's it. Is it over? Right. So if you reduce the taxes, more disposable income will be available with the people. If more disposable income is available with the people, more demand increases. Demand increases means prices increases. The producer becomes optimist and production increases. Economy revives. Yes or no? That's it, no? It's clear, right? And you write first consequences. If you know this basic, you can write consequences in your own words. It's over. Taxes is over. Government expenditure is over. And now we are having the next one is public debt. Sorry, government budget. How many forms of budgets are there? 3 forms. Surplus budget, deficit budget, and right. We are having 3 types of budget, yes or no? Right. The first budget is balanced budget, surplus budget, and deficit budget. What is the surplus budget? Revenue is equal to expenditure. Public revenue is equal to public expenditure. Surplus budget, public revenue is greater than public expenditure. Deficit budget, public revenue is greater than public expenditure. Right? Now, their leakages and injections, what you have to know. If you know, you can do it. That's it. What is leakage? Outflow of income. I already told you, aggregate demand decreases in the previous chapter. Yes or no? Taxes we have to pay. Outflow of income. To what extent the income has been paid towards the taxes, to the same amount aggregate demand in the economy decreases. Yes or no? So it's a leakage. Right. Injection. IGX I told you. Do you remember? Injection, IGX, investment expenditure, government expenditure, imports. Here I am taking government expenditure. Government expenditure is an inflow of income to the common public. Yes or no? Don't treat from the government point of view, from the people point of view. Right now this discussion is from the people point of view. Aggregate demand increases. Yes, sir. If any scheme, take old age pension has been increased to from 2,500 to 25,000. To 25,000 amount increases means the demand also increases to the same amount. Yes or no? People will consume goods and services with that amount. right? S. Balanced budget. Okay, what you have to do, you have to write public revenue is equals to public expenditure, right? Public revenue means taxes. Taxes is equals to government expenditure. That is, leakages is equals to government expenditure. Because of leakage, aggregate demand decreases. Because of government expenditure, aggregate demand increases. To what extent aggregate demand has been increased? To the same extent aggregate demand has been increased. Yes or no? So we can say that demand to what extent? Say 10 units of demand has been decreased. The same amount of 10 units of demand has been increased. So we can say that no effect on aggregate demand. That's it, no? Yes. Next, we can go with the surplus budget. In the surplus budget, public revenue is greater than public expenditure. Yes or no? Public revenue means taxes. Taxes greater than government expenditure. Taxes means leakages. Leakages are greater than government expenditure. What is meant by leakage? Fall in aggregate demand. Fall in aggregate demand is greater than rise in government expenditure means injection. Because of injection, aggregate demand increases. So we can say that negative fall in demand is more. So we can say that negative effect on aggregate demand. Right. Deficit budget. Public revenue is greater than, public expenditure is greater than public revenue. So government expenditure is greater than taxes. That means injections are greater than leakages. Injections means rise in aggregate demand is greater than fall in aggregate demand. So ultimately rise in demand is more. So we can say that positive effect on demand. Tell me, right. When the taxes is more and revenue should be less, taxes should be more and expenditure should be less means during inflation, right? When the expenditure should be more and taxes should be less, no doubt it is in deficit or recession. So during recession, the government will bring deficit budget. During inflation, the government will build surplus budget. You remember, D square is I means inflation, S means surplus budget. That means during inflation, we bring surplus budget. Deflation or recession is one and the same, no? During deflation, we bring deficit budget. Okay, that's it. You have to know. So if the government is preparing surplus budget means we are in the instability, that is inflation. If the government is preparing deficit budget means we are in recession or depression. Yes or no? So which budget we require without instabilities means balanced budget. Many of the people used to tell that we need surplus budget. It's not surplus budget. We need balanced budget, right? But if we are preparing surplus budget means the economy is facing inflation, right? The last one. Public data, right? Public data. So it will be borrowing during the deficit budget, total past deficits, and it will be repaying while it is in surplus budget, total past surpluses. Still any amount is in pending, we call it as public data. So what is our definition for the public data? It is the difference, minus means difference only, no? It is the difference between total past borrowings during deficit budget and total past repayments during surplus budget. Right, and the remaining amount still the government has to pay is known as public debt. That's it. Right. How many types of public debts are there? 4 types based on place. If government borrows within the country, we call it as internal debt. If the government borrows outside of the country, say from the international economic agencies, World Bank, IMF, Asian Development Bank, or other countries' governments, or other countries' central bank, like that, if we borrow means we call it as external data. Over. And based on form of borrowing, there are 2 forms of borrowing which is very essential for you to remember. There are 2 types. Okay. One is from the central bank. One is from the common people. You have to think right from the people means you have to think separately. From the central bank means separately. From the central bank, it will borrow. It doesn't affect the common public. Okay. From the central bank, the government can borrow in the short-term loans or long-term loans. Short-term loans can be issued through treasury bills, dated securities, like that. Long-term loans the government can arise through issuing long-term capital bonds, LTCG. Long term, short term capital gains, right? Long term capital bonds. The central government, right? The central government, I am not telling about the state government. The central government can borrow from central bank in the form of either a short term loans or long term loans. Short term loans can be issued through treasury bills, dated securities and all. And this topics we can study in the money market chapter, right? Next, for long term loans, it will issue long term capital bonds. And whereas from the public point of view, this becomes the instrument for you, you have to remember, right? Madam, how the government, how the Modi and Jagan can come and borrow from the people? They don't come directly, children. Yes. What they will issue? They will, our government, central government will issue National Savings Certificate, right? National Developmental Certificate, Sukanya Samruddhi Yojana, Kisan Vikas Patra, just like how the bonds will be having face value, like that interest bearing assets, all these are. Each, as you take the example of National Savings Certificate, you will be getting in the income tax deduction, TDS also, right? Right. National Savings Certificate value is 100 rupees. National Development Certificate value is 500 rupees. Sukanya Samruddhi Yojana is 250 rupees. Like that, 111 will be denominated at different prices, right? The people who are capable to invest just 10,000, they will purchase thousands of national certificate, 1,000 of national certificate, like that. They are having only 1,000 and they can go for the 4 right? Sukanya Samruddhi Yojana, each is face value is 250 rupees, like that, no? Like that means the government can borrow from the public through small savings. That means through post office. These are available in the post office and these are not negotiable. That means it cannot be endorsed to other person. Until the date of maturity, we have to hold them. That's it. Please, you can go with the answer, right? You can go for the market loans and small savings, which is important for you. Market loans for financing the capital projects, long-term capital bonds, and for short-term government expenditure, treasury bills and dated securities are issued to the central bank. You have to mind over there, central bank. The next one, for small savings, from the common public in India, National Savings Certificates, National Development Certificates, Kisan Vikas Patra, Sukanya Samruddhi Yojana, some schemes are there, children, bonds. The government issue these bonds and it's all small savings. Their denomination face value is very less, children. They can purchase to what their extent. In this way, the government borrows from the public. Right now, you have to say, right, the government, during inflation, what it will do? It will repay the money to the people or it will borrow from the people. During inflation, as more money with the people, the government will borrow from the people by issuing more and more number of bonds through post office, right? The last one, right? During recession, the people doesn't have much more money and they are facing critical problems and all. So as a government, what it will do? It will go for the right repayment of old debts. So it will be better for them. Clear? So we have concluded 4 instruments of fiscal policy. It's over. And right now the last topic is types of fiscal policy. In this types of fiscal policy, we can conclude that there are 2 types already I told you. Non-discretionary fiscal policy, also known as non-automatic stabilizers, the government will not involve. In the discretionary fiscal policy, we are having 2, I already told you, expansionary fiscal policy and contractionary fiscal policy, right? If you discuss with this, the topic will be ended. That's it. First, let me say, so our financial year right now is 2021. Still, we have not entered into the March 21, no? Right. Our financial year right now is 2020-21. That's it, no? Right. Now, and the budget, what the government will announce will come effect on 1st April. That is, no? 1st April 2020, our Finance Minister Nirmala Sitharaman announced, right, I am taking some fiscal instruments, right. What are the fiscal instruments? Right, personal income taxes or personal taxes. Personal taxes, 5%, right, 20%, 30%. The maximum slab rate is 30%. So, slab rate, if you calculate the time it will take, that's why I am taking the flat rate, right. Okay, it's not flat rate, it's a slab rate only 5, 20 and 30 based on slabs, okay, right. Corporate taxes. On the domestic firms it is 25, and on turnover basis we have again changes, and again MNCs means 40%. So I am taking on corporate taxes of domestic companies, that is 25%. It's a flat rate. Okay, right. Nirmala Sitharaman, with effect from 1st, 4th, 2020, 1st April 2020, in our country, the personal taxes will be 30%, the corporate taxes will be 25%, and these two are taxes. No, we have to write 1 point from the expenditure point of view. I am going from 1 point from expenditure point of view. Rather than government salaries and all, let's go for the transfer payments. Government expenditure can be revenue expenditure, capital expenditure, transfer payments. I am taking the transfer payments. I am taking unemployment allowance here. Unemployment allowance, I am taking one example, right? Unemployment allowance, I am taking 2,000 rupees. It's not there right now, okay? 2,000 rupees per each unemployed per month. Actually, at the end of February or in the first week of March, we will be getting this budget. Yes or no? Right, we got this information. Government already fixed, and it has to be followed by all from 1st 2020 to 2021 March. Yes or no? Right. Already it has been fixed. So we call them as, this is fixed by the government. Fiscal mechanisms. Already fixed now? Right. So we call them as inbuilt or built-in fiscal mechanisms. We call them what the government has announced, okay? We call them as built-in fiscal mechanisms, okay? What are the fiscal mechanisms for us? Personal income taxes, corporate taxes, unemployment allowances, pensions, whatever it takes, you can write. Okay, and government had already announced, so we call them as built-in fiscal mechanism, right? 1st April 2020, we have to use this, right? Government had announced, okay, right? Everything is okay, right? Corona has started. Yes, all of a sudden everything became up and down, and no economic activity except for the medicine and groceries are day-to-day business, and everything are in a negative impact only, right? So economy entered into recession. Okay, right now we are in recession. We have to recover from the recession. Do government has came forward and reduced the personal taxes now? Do Nirmala Sitharaman or Modi or any from the central government, have they reduced any taxes? 25% or something else? You will be getting amendments, no? Right. Do any personal income taxes have been reduced? No. Do unemployment allowance of 2,000 has been changed? No. That means no interference of government. Okay. After announcing these taxes, that means personal income taxes, corporate taxes and unemployment allowances, our economy experienced recession. Take children. Right. Now, the government is not interfering. Right now, actually it has not interfered. Right. Now, let us take what happens to income level of the people. Yes, many of the people you will be knowing. Right now, during recession, do your parents are getting increments or decrements? Do income level is increasing or decreasing? No doubt, income level of the people will be going on decreasing. Yes or no? Right. Unemployment is increasing or decreasing? Many people are losing their jobs. Right. Now, government came forward. Nirmala Sitharaman or Modi, both didn't come forward, didn't make any changes. Just imagine, is there any possibility to get rectification? Actually, during recession or deflation, which budget the government has to come and prepare? The government has to prepare which budget? Deficit budget. The government has to, during recession, children, right? Actually, what the government has to do? It has to reduce the taxes and it has to increase the government expenditure and it has to build the deficit budget. Government actually come forward and it has to announce the changes in these taxes and also government expenditure, and it has to bring new budget. Actually, it has not been made any changes. Yes or no? Right now, imagine whether our country is able to recover of its own or not without government intervention, non-discretionary fiscal policy. I will show you. Right. Income is going on decreasing. With the fall in income, what happens? Number of taxpayers decreases. At the same time, automatically we can say that the amount of tax also decreases. So the government tax revenue decreases. Yes or no? The government has not changed the rates. You just watch it out. Government has not changed any rates. No, I'll go first. Another example. I told you personal income tax as 30%. It's a slab rate, but I'm taking, right, corporate tax as 25%. Unemployment allowance 2,000 per each unemployed per month. Okay, right. This is inbuilt, already fixed before recession, built-in fiscal mechanisms. Right. Starting of the academic financial year, it has been taken. Okay, it's over. Right. After fixing, the government experienced recession. Government came forward. How the government can come forward? Personal income taxes. What it is going to do? During recession, we have to reduce the taxes. The government can reduce the taxes from 30% to, right, say 20% or 25%. They change the tax rates. Yes or no? Right. New budget will come. At the same time, corporate taxes, they will reduce from 20%, 25% to 20%. Unemployment allowance, they have to increase. Yes or no? How much they have to increase? 2,000 per each unemployed per month to, they have to increase 2,500. Here, government interfered by changing inbuilt fiscal mechanism numbers. Yes or no? And we call this as discretionary fiscal policy. Can you get this? Because government is interfering. Okay, right? So, let's scroll back here. But in this aspect, the government has not came forward, ma. Nirmala Sitharaman also not came because maybe they are fear of corona. Okay, whatever it may be, right? The government doesn't came forward. 30% remained like that. But because of recession, many of the people's income has been decreased. So the government got less taxes. Yes or no? Right. Unemployment has been increased. So it became government necessary to pay more number of 2,000s. More number of employment. So it has to pay more number of 2,000s to unemployed people. So what happens? Government expenditure increases. Ultimately what happened here? Government doesn't came forward, doesn't made any changes regarding to the numbers of fiscal mechanism. Then also automatically which budget came? Deficit budget. Economy will get rectified. Yes or no? Government expenditure is increasing. More number of people are drawing unemployment allowance. Yes or no? Tax is decreasing. Ultimately the government will rectify. Yes or no? Economy will be get rectified. Yes or no? This is the automatic stabilizers. Right. Madam, you told in the recession, no? Right. Let's go with the inflation. Madam, after announcing the fiscal mechanisms, after announcing the budget, if economy experience inflation, the economy can be set off its own. There are chances, but not ultimately. Okay. Right. Let me go with an example. Right. During inflation, how will be the level of income? Right. In the expansionary phase, no? Automatically our income will be increasing. As our income increases, as we are in the slab rate, we have to pay more taxes. So the government revenue will increases. Government doesn't came forward. It doesn't make 30% to 80% like that. It doesn't made any change. But government is receiving more taxes during inflation without government intervention. Right? Now, during the expansionary phase or inflation, what happens? Unemployment decreases. Yes or no? More number of employment opportunities will be created. Because of this, what happens? If unemployment decreases, the government has to pay 2,000 only, no change in amount. The government has to pay 2,000 to less people because unemployment is less. Automatically what happens? Government expenditure decreases. So which budget will come? Excess of revenue over expenditure. We will get inflation surplus budget. Deflation deficit budget, inflation surplus budget. Hope without government intervention, there is a possibility to bring surplus budget during inflation and deficit budget during recession or deflation. That's it now, right? Without government intervention, so we call this as automatic stabilization, and these personal income taxes and corporate taxes and unemployment allowances are known as automatic stabilizers. And this process, as government has not been interfered after the problem has been arrayed, we call this as non-discretionary fiscal policy. That's it. One topic has been concluded. Let's go with the discussion regarding to that. Non-discretionary. These are built-in fiscal mechanism, that means corporate taxes, personal income taxes, unemployment allowance. Already before that situation, that is before the instability, they have announced, okay, right, operate automatically without government intervention to reduce the expansion and to reduce the contraction of the business cycle in the economy. Yes or no? Right. What are the automatic stabilizers? Personal income taxes, corporate income taxes and transfer payments are the automatic stabilizers. Any government program, corporate taxes are all government programs only, no? Government programs without government intervention that automatically reduce the fluctuations, reduce the GDP, reduce whatever it may be, is known as reduce the fluctuations in GDP, reduce the fluctuations in aggregate demand, reduce the fluctuations in prices. We call it as automatic stabilizers. Okay, Nama? Right. What are the important we have given? Right. Role of, right, during inflation, right, economy expands, employment also increases, income rises, so higher tax payments the government will receive, government expenditure will be reduced because less number of unemployed people, so rise in revenue and fall in expenditure leads to surplus budget. So during inflation, without making any changes by the government could experience a surplus budget, right. Role of automatic stabilizers during recession, they are asking, right. During recession, income will be low, so the tax payments will be low, so government tax revenue will be low. At the same time, unemployment will be high. As unemployment is high, automatically what happens means, so more number of 2000 rupees has to pay to more number of people. So automatically the government expenditure increases, leads to deficit budget. That's what they are telling. So we can bring stability in the economy automatically without the government intervention. The last one is the role of fiscal policy to bring to eliminate recessionary gap, and role of contractionary fiscal policy to bring to eliminate recession. Right? You can do in your own words regarding to this. Yes, our economy is facing recession, ma. Recession means underproduction. Production will be low. Yes or no? Unemployment will be there. Aggregate demand is less. This is the situation. Yes or no? Right. We are discussing about the capitalist economy. Right now, what the government has to do? Right now, what the government has to do? Recession is there. So, the government has to increase its... Let us take one example. The government will increase its expenditure. If government increases its expenditure, people income increases. If people income increases, aggregate demand increases. If aggregate demand increases, aggregate supply also increases. That's it, no? You can take one element. You can write all. It's your wish. But our Keynesian gave the example with government expenditure, so I explained with government expenditure. You can go with the taxes. As taxes decreases, more disposable income with the people. As more disposable income with the people, their demand increases. As demand increases, to meet the demand, the supply also increases, production increases. Okay, right. First you have to know what is meant by full employment. Full employment is possible. Full employment means fuller production. Fuller production means supply curve only, no? Supply curve remains constant. It is fuller. It doesn't change with the prices. We call it as long run aggregate supply. In the long run only it is possible to have the fuller production of supply. In the short run there may be fluctuations. Okay? Because recession will be, there will be end for recession. There will be end for inflation. These problems have to be considered as short-run problems but not the long-run problems. Long run we will go with the equilibrium. So in the long run, as we are in the equilibrium, supply remains constant. Fuller production of resources. There is no possible to increase or there is no possible to decrease. So that is the long run aggregate supply curve. Now we are in recession. It is a short run. Yes or no? Because there is a solution to recession. One day or the other day, fine day, we will experience the next stage. Yes or no? Right. As we are in the capitalist economy, this is the demand curve during recession. Short aggregate demand during recession. Okay. This is the supply curve during recession. Short run aggregate supply. Short run demand, that will not be there. Okay. Right. This is the output produced during recession. This is the QR output produced during recession, and we call this as real, you remember, real GDP, right. Okay, right. And I told you, during recession, what is the production? During recession, what is the production? Underproduction. To show that QR is underproduction, we have to write the fuller production at which point? To right or to left? To right. This is the QF, that is natural GDP, where there are no fluctuations, fuller employment, okay, natural GDP. This is the long run aggregate supply, right. You can observe right now as natural GDP is to be QF, but we are producing only QR. It is underproduced, yes or no? Right. Now, government, by reducing the expenditure, by reducing its expenditure, what happens? Aggregate demand increases. Increase in aggregate demand leads to increase in supply. Right now, we have to make a rightward shift in aggregate demand and leftward shift in aggregate demand. But we don't know how much we have to increase. Yes or no? We have to increase the demand. But how much of demand we have to increase? We have to increase the supply, aggregate supply. How much of supply we have to increase? We don't know. So, our ultimate goal is to bring stability, fuller employment. So, watch out point 1, watch out point 2. Right? At point 2, long run, LAS, ignore that, we want to reach there. Yes or no? Right. Now, by taking government measures, we have to increase. Right. What is there? Short run aggregate supply is there. So, by reducing government expenditure, so short run aggregate supply curve has to meet new aggregate demand curve. R, right? At point 1, we are having aggregate demand. Yes or no? So, that aggregate demand has to meet a new aggregate supply. That's it. Supply curve has to meet the demand curve, new demand curve. Old, under recession supply curve has to meet the new demand curve. Recession demand curve has to meet the new supply curve. That's it. Here what you are having? Supply curve. So, the demand curve slopes downwards. You write it as AD1. New demand curve AD1 has intersected short run aggregate supply at the full employment level. Right. At point 1, what you are having? Because we have to reach the full employment, yes or no? At point 1, we are having aggregate demand. So, that demand has to be met by the new supply. SAS1. That's it. It has been completed. Okay. So, the government can reduce its expenditure or increase its taxes. Right. Sorry, decision no. The government can reduce its expenditure, increase its expenditure and reduce its taxes, right, to fill the gap. The gap between QR and QF is the recessionary gap. That's it. Same, inflation is there in the economy. During inflation, it is a short-run problem, right? What will be the level of production? Overproduction. Yes or no? Right. Let us draw the graph. This is the inflation demand curve and this is the inflation supply curve. I means inflation. Okay. Right. Now, this is the equilibrium output during inflation. This inflation output is overproduction. No? To show that this as a overproduction, what we have to do? We have to draw the Fuller production curve. If we draw the Fuller production curve, left to the compared to the Fuller production, right now QI, that means inflation production is more. Overproduction we can say. Yes, this gap is known as inflationary gap. Okay, this gap is known as inflationary gap. Where we have to reach? We have to reach to the QF. For this, what the government can do? More money with the people. So the government can raise taxes. So aggregate demand decreases. Government expenditure will decreases. It also leads to fall in aggregate demand. Yes or no? If aggregate demand decreases, certainly what happens? Aggregate supply also decreases. So we have to take the leftward shift in demand curve and leftward shift in supply curve. Yes or no? So we have to reach point 1, point 2. At point 2, which curve is there? Inflation demand curve. Inflation demand curve has to meet with the new supply curve. Leftward shift. Leftward shift means automatically decrease in supply. Right. At point 1, we are experiencing short-run supply curve. Inflation supply. Inflation supply has to meet the new demand curve. Demand curve slopes downwards. That's it. You can do other topics in your own senses. That means increasing taxes or reducing government expenditure like that. Whatever may be the possible aspect you can do, but the graphs are necessary. Right. Here we are having 2 more concepts regarding to this. Successfully we had completed the topic of objectives of fiscal policy. Objectives are 4: price stability, full employment, economic development and equitable distribution of income and wealth over 4 instruments of fiscal policy we have discussed. And the types of fiscal policy we discussed about a non-discretionary fiscal policy are automatic stabilizers. And the next we got about the discretionary, that is expansionary and contractionary. Both expansionary has been asked for the previous exam and contractionary also asked for the previous exam. So I gave less importance in teaching for this. And the next one we are having is limitations. Limitations also has been explained for you. Especially right now our economy is in recession or depression. You just search in Google, you can't get the answer. Nobody can give the answer because we can say that recognition lag. First of all, we are unable to identify at which stage we are. Okay. And after recognition, we have to take certain decisions, right? Which policy is applicable, whether we go with the taxes or we go with the government expenditure, or we can adopt both, or otherwise we can go through the public data. Nobody knows correct answer. And this discussion will take a lot of time. After taking decision 1 and implementation becomes somewhat difficult, for that we need finance and all. After implementing, it's to see its impact, already new problem will arise. So all these lags, recognition lag, decision lag, implementation lag and impact lags are there. Also we are studying only demand side fiscal policy, short run, but there is long run fiscal policy is there, that is supply side fiscal policy is there. Right now we are increasing government expenditure, we are giving this scheme, that scheme to many of the people. People become habituated and they don't start saving and they go for the bulk expenditures, aggregate demand increases. During recession, inflation becomes severe. Yes or no? Why the prices are going on increasing in the economy? Government is giving free schemes to many people, hence no production, so prices are increasing because of scarcity. At the same time, government transfer payments are increasing aggregate demand. If it is not controlled, it leads to government insolvency. New topic will arise in economics. Yes or no? Right. That's what we are saying. Government has to be very cautious while increasing its government expenditure in the form of transfer payments first of all. In the long run, it shows many negative impacts or adverse impacts. People may not be willing to work first of all. People become habituated to enjoy free money and they don't start work and they don't participate in production activities. No production, scarcity. We have to import just like where Singapore, each and every vegetable it imports. Future we have to see that phase. Yes or no? Right. Let it be. Now, one more topic. If we raise high taxes, what happens? The corporate sector, especially the income taxpayers, personal income taxpayers, all these people will hesitate to work for more hours. They want to restrict their working hours and they just want to draw without paying off taxes. Ultimately, what happens? It leads to many problems. So, this is known as supply side fiscal policy. But all of a sudden, to discredit the government expenditure, we cannot stop any project in the middle. Yes or no? We cannot stop any project in the middle. Yes. So, all of a sudden, if you want to increase the funds, means the government should require the funds. So, according to the fluctuations, we cannot change some government expenditure like that. It's all theoretical, but practically it is very difficult to be implemented. This is the conclusion according to this. And we are having crowding effect. The last concept of this chapter is during expansionary phase. I am taking one example and I will expansionary phase. In our country is a mixed economy. Let's take an example with this. I'm a banker. With the banker, two sectors came. Public sector also came for loans and also private sectors also came for loans. So, demand for loans increases. Yes or no? As both of came at the same time, we call this as crowding. Both sectors approached me to the bank, okay? Because of this, demand for loans increases. Being innocent Vasudha, what she will do? She will raise the tax, interest rate. As demand for loans increases, as a banker, I'll go for the rise in interest rates. Yes or no? I will rise. Banker will increase the interest rates. If banker increase the interest rate, what happens then? Interest rate means nothing but cost of capital for you. Cost of capital increases. If cost of capital increases, at high cost of capital, many of the private firms are reluctant to borrow. So, private firms will not borrow. So, private firms quit from the crowd. And we call this as crowding out effect. Can you get it? If both comes at the same time for the loans, I call it as crowding. Okay. Because of crowding, I raise the interest rates. With the rise in interest rate, cost of capital increased. As the cost of capital increased, private sector quit from this market. So, we can say that crowding out of private sector. Which sector quits? You write crowding out of private sector. That's it. This is the topic. Crowding will be more in expansionary phase. At the same time, crowding out also takes place in the expansionary phase only. Crowding will be very less in the recessionary phase because producers will be in the pessimism. So, more people will not come for this process. So, crowding will be less during recession, right? At the same time, every aspect has its own negative impacts. That's it. The topic of fiscal policy is also completed. Welcome back. The next topic is market failure and government intervention to correct the market failure. In our board material, these are two separate units. At the head of fiscal policy only, but these are two separate units. But for our convenience sake, we have clubbed here and it will be easy for us to understand the topics first of all. In this topic or in this chapter, that is market failure and government intervention to correct the market failure, we are having only four concepts. We are going to deal and study only with the four concepts. That is, the first one is monopoly power, the second one is externalities, the third one is public goods, and the last one is incomplete information. That's it. These 4 points can give us a good conclusion, right? Do monopoly power is a market failure. What is market failure? Either misallocation of resources, that is either overproduction or underproduction of certain goods and services is the market failure. Do monopoly power leads to overproduction or underproduction? We have to first justify it. We have to identify it. We have to know it. Later you have to go with what is the government intervention to control the monopoly power or market power. That's it. So I am going with the first one, monopoly power. The second one is, we are not only going to read with the reasons for the market failure, even we are studying in the same topic the role of government to minimize this problems. That's it. The first one is market power. We have to know what is meant by market power. That is, market power or monopoly power. Either market, that means demand and supply, private sector or monopoly, whomever they may be, they are producers for the welfare motive or profit motive. Certainly they work for the profit motive. If they work for the profit motive, what kind of price they charge? They will charge higher prices. How much higher they will charge, we have to know. Yes or no? That we will show. Right. Higher prices. To seek higher profits, they go for the higher prices. Higher prices means what is the P means price per unit. They will charge a price greater than marginal cost. Marginal cost means cost per unit, additional cost per each unit. They will charge higher prices, that is price greater than the marginal cost or price exceeds the marginal cost. In monopoly, how many producers will be there? Only one will be there. Yes or no? Only one producer will be there. Yes or no? Right. So when compared to the perfect competition where there are large number of sellers, compared to this, here only one producer is there. So we can say that compared to oligopoly, compared to monopolistic competition, compared to duopoly, compared to perfect competition, we can say that the output will be less when compared to other markets. Yes or no? So we can say that lower output. Lower output means lower production when compared to the perfect competition. Yes or no? So we can say here a simple topic, monopoly is a reason for market failure because they are producing less output, that is lower output is under production. Right. They are charging higher prices. If they charge higher prices, what happens? At higher prices, many of the consumers are not affordable to purchase those goods and services. Automatically, it may lead to underconsumption. So it leads to underproduction and underconsumption. Yes or no? It is a market failure. That's it, no? It is a market failure. Right. Hence, this is the market failure. Monopoly is the reason for the market failure, that is higher prices, underconsumption due to higher prices, underproduction because of single producer. Right. Market failure. Right now, the government has to interfere. Government intervention to correct or to minimize monopoly power or market power. Right. How can the government control? Through two acts, through two policies. One is through legislature, one is price regulated. So, right now our government is going to solve the problem of monopoly power or market power in two aspects. One is through legislature and the next one is through price regulated measures. Let's go with the first one, that is through legislature. Through legislature, India has introduced Competition Act. In India, it differs from one country to another country. I am expressing about India. In whatever may be the country, the topic is one and the same. In India, we follow the Competition Act. Okay. It was introduced in 2002. Before the Competition Act 2002 in India, we used to have MRTP Act 1969. That is Monopolies and Restrictive Trade Practices 1969. Right. And later we introduced, in 2002, we introduced Competition Act. In 2007, amendments are there. So we brought Competition Commission of India and Competition Appellate Tribunal regarding to this aspects. Right. Right. What is the purpose of this act, ma'am? Can we reduce the monopoly? Right. In all the aspects, it is not necessary to control the monopoly. In all the aspects, it is not necessary to liberal the monopoly. In some aspects, we have to encourage and in some aspects, we have to discourage. Our legislature through Competition Act will encourage the monopoly wherever it feels it is necessary and discourage the monopoly when there is anti-competition activities occurring in the market. So we can say that our Competition Act can discourage the monopoly, discourage the market power or can encourage the market power. Ma'am, how can it encourage or how can it discourage? Very simple. Right. Competition Act. If any firm enter into the industry, it has to be registered under the Competition Act first of all. If any existing firm wants to exit from the industry, right, it has to take permission from the Competition Act. At the same time, if any firms wants to take over another company or amalgamate with another company or to merge with another company or to become a holding company or subsidiary company, whatever may be the company it wants to become, it wants to change, they should take permission from the Competition Act. So we call this as merging policies also many times. So to merge, to amalgamate, to take over, to become subsidiary, whatever it may be, to enter into the market or to exit from the market, whatever it may be, they have to take the permission from the Competition Act. So in this manner, what the Competition Act is going to do, right? Right now I am a government. Right now I want to discourage this monopoly power. Then what can I do? Okay, right? I will prohibit. I can discourage through prohibition of collusions. Two or more companies may collude, may amalgamate, may merge. If they amalgamate, they merge means they become monopoly. Yes or no? Monopoly means again higher prices, lower output. I don't want this. If they are following any unfair trade practices also, I can't do this. So they are making anti-competition. Then I can suppress them. Yes or no? For in those aspects, what I can do? I will prohibit the collusion. Okay. Next, I can go for the prohibition of giving contracts. By giving contracts, okay, it can lessen its work burden, okay, and it can increase the profits and it can be forever monopoly. Yes, I want to discourage the monopoly. I will dismiss or I will cancel. I will prohibit offering of contracts to others. Right. Even I can prohibit the collusion, I can prohibit the contracts, and I can even prohibit the combinations. Political parties, educational institutions, hospitals, many times what happens, they used to collude or they used to contract or they used to have the combinations. If government feels that it is an anti-competition act or they are following unfair trade practices in this aspect, the government can prohibit this aspects. In simpler words, what you can feel means the government through legislature under Competition Act can discourage through prohibition of C cube. What is C cube? One is collusion, one is combination, one is contract. If they follow the Anti-Competition Act, that's it. Government may encourage some monopolies which give benefit to us. How can it encourage? They want to become monopoly means no other firm should enter. No other firm should enter means the government gives certain property rights for them. What will be the property rights for them? Say by providing exclusive rights. By providing exclusive rights like patent rights, copyrights, trademarks like that, they'll give exclusive right. So hope you can understand. The government can encourage or discourage monopoly as per the requirement. If it wants to discourage, it will go through prohibition of C cube, that is a collusion, combination and contracts. If it wants to encourage, it will give exclusive rights through provision of patent rights, copyrights, trademarks according to their requirement. Yes or no? Right. It will be done under the Competition Act through legislature. That's it. Right. The last one is price related measures. Ma'am, with the price related measures, is it possible to control monopoly? Certainly, children. Right. What are the prices here? Higher prices. What are the prices here? Higher prices. Right. As a government, still if the prices rises means the government has to take the action. Yes or no? What kind of action the government has to fix? The government has to fix either minimum price or maximum price. If the prices are higher, if there is a fear of still rising in prices, what kind of prices do the government can fix? The government can go for the maximum price. What is the maximum price? If the government sets the maximum price as 100 for each quantity, the seller should not sell more than 100 rupees. That means there is no chance to rise further. Yes or no? So automatically the government, to protect the consumer from higher prices, the government can fix maximum price. Maximum price means the seller should not sell above the maximum price, so that there is no chance for the prices for further. Yes or no? So to protect the consumer, what the government can do? The government can do can fix the maximum price. Even to protect the consumer, the government can fix either maximum price or rate of return price. Right. You used to write in the cost sheet, cost of sales plus profit is equals to sales. Right. That profit you will be writing as percentage of profit on cost price or percentage of profit on selling price. We can solve it. Yes or no? That's what we know. Right. If the price of a product, so cost of sales is 10 crores. Right. We as an entrepreneur, if add 50%, like 5 crores as profit, what is the percentage of profit on cost price? It is 50%. Yes or no? Right. If we levy profit percentage as 50%, 60%, 100% also, then the sales price increases. Yes or no? Then the selling price also increases. So sometimes what the government can do? The government can entirely fix the selling price, maximum price of a product, or it can fix the percentage of profit. That is rate of return pricing. What we will call it as rate of return. Percentage profit it will fix. You should not levy this percentage. The profit percentage for your product should be lie between 20 to 25 or 10 to 15 or less than 10. It should not increase further. It will fix the maximum limit of profit percentage. Maximum limit of profit percentage is known as rate of return pricing. That's it. The last one, right? At the same time, sometimes it becomes necessary for the government to protect the producer also. We have to protect the producer. If we don't protect the producer, what happens? The producer will leave the market. If the producer will leave the market, until that, when there was a producer, we experienced at least underproduction. If the producer leaves the market, miss the market, what happens? There will be zero production. Yes or no? There will be zero production. So we even to have to encourage the monopoly in sometimes. Sometimes the government will fix the maximum price from the producer point of view, but while fixing the maximum price, we call it as price cap. Cap means maximum only, but why we call it as price cap, I will show you. Right. When as a government I want to fix the maximum price of a product of monopoly, I will consider what is the variable cost for him. Okay, right, because fixed cost is inescapable cost, so they have to bear it. I will consider the variable cost, right? Possible inflation in the economy, inflation in different aspects. At the same time, the replacement cost. With the innovation of new innovations and all, they have to replace the machinery according to the situation. I will consider their replacement cost. Otherwise, I will consider their productivity. If they don't replace the goods, new machinery, what happens now? Their productivity from the previous year decreases. So the cost per unit may increase. Yes or no? So based on their variable cost, based on the economic inflation, and based on the replacement cost, and based on the productivity levels of a firm, I will consider all the aspects. Then only I will fix the maximum price, so that the producer should not also get the losses. Yes or no? Yes or no? We have to protect the consumers. At the same time, we have to protect even monopoly. If we don't protect monopoly, what happens? Monopoly also leave from the market. If monopoly leaves from the market, what happens, children? One day or the other day, we were facing till now only underproduction. In the future, we have to face zero production. Yes or no? It is still for further problem. So what we have to do? We have to encourage and we have to discourage based on the conditions. Right. We are having totally, what is monopoly? What is monopoly? Higher prices, lower output. What is meant by higher prices? Price greater than marginal cost. That's it. It's a market failure. Overproduction and underproduction and underconsumption. Is how the government can control it. The government can come through legislature or price regulated measures. How it can come through legislature? Through Competition Act 2002 in India. It can encourage by providing exclusive rights through intellectual property rights. Otherwise, it can prohibit it can discourage through prohibition of CQ, contracts, collusion and contracts, right, combinations. Price related measures 3 are there. From the consumer point of view, we can fix the maximum price. There is no need to write from the producer or consumer point of view. You can just write setting maximum prices. Maximum prices means from consumer point of view. Cost of rate of return pricing is profit percentage. That too from consumer point of view. From the producer point of view, price caps you have to write. Price cap also maximum price. But we are considering the well-being of the producer here. Where in the maximum prices, we are considering only the consumer. Right? That's it. The topic is over regarding to monopoly power or market power. This is the market power. Market power or monopoly power is the ability of the firm to profitably raise the price of a market price of a good or service over its marginal cost. I told you price greater than marginal cost. That's it. It's an efficient. Extreme case, higher prices, lower output. If we control them, they will miss and they will quit from the market and it leads to missing markets. Right. Government intervention to minimize the market power. We are having through competition based regulations, price based regulations. Competition based regulations in India through Competition Act 2002. Monopoly power can be discouraged by prohibiting contracts, combinations and collusion among the producers or traders who are participating in anti-competitive actions. The next one. We can encourage even monopoly in required areas by ensuring patent rights, copyrights, trademarks and exclusive rights for them in different aspects regarding to this. That's it. Price-based regulations are there, setting maximum prices, rate of return regulations. So that is nothing but profit percentage. The last one is setting price caps based on firm's variable cost, past prices, possible inflation and productivity growth. Clear? Right. Natural monopoly railways like that. Electricity. That's it. This is the topic. That's it. This is the topic regarding to market power or monopoly power. Right now, the next topic before us, externalities. This is somewhat a big topic, and with this, if it is completed, means just we are having small topics, public goods and incomplete information. Let's go with the next topic, that is externalities. Right. Externalities means external party. First of all, you have to know what is internal and what is external. What is internal and what is external? This is the basic question what you have to know. Right. In a market, buyer and seller. I am taking one example. Aluminium factory. Okay. It is producing aluminium utensils. Okay. So, consumers of okay. So, what is the market here? Producer, consumer. Together is known as market. So, aluminium factory is a producer, right? Aluminium, that product distributor is a producer, wholesaler is a producer, retailer is a producer, consignor is a producer, consignee is a producer. Who participate to reach that product to the ultimate consumer, all will be considered as the producers. They are internal to the market. Yes or no? Right? Consumer. Who consumes that aluminium products? Yes or no? These two are internal to the topic. Yes. Right now, I am explaining the class and you are listening to the class. I am the producer, you are the consumer. This is the market. We both are internal to this market. Yes or no? In this market, we are internal. I am explaining the class for you and you are listening to the class. Yes. The people who does not involve in the aspect of this education, they become external. Yes or no? At the same time, the people who does not consume aluminum products, they are not the consumer. The people who does not participate in dealership or trading or reselling, whatever it may be of aluminum products, are not the producers. Right. Right now, I am the producer of this class and you are the consumer of this class, and we two are internal to this market. Yes or no? Right. Let's have, I am teaching the class here. Right. One old person is sitting outside and he is listening to the class. Right. Is he an internal to our class or external to class? He is not at all a producer or consumer to our class. Yes or no? Automatically he becomes external. He becomes third party. We two becomes first two internal parties. That party becomes third party or external party. That's it, no? Right. Because of listening to my class continuously, his ear was started bleeding. Okay. His ear started bleeding, huh? Right. Bleeded overall. Right. He rushed to the doctor. Right. Doctor gave certain treatment and gave the bill of 50,000. Next, the third party asked the doctor, doctor, when I should come back? Daily you have to come. Until how many days I have to come? Until you be alive, you must come to the checkup daily, the doctor told. Daily he is going to incur, third party is going to incur 50,000 because of our class. Yes or no? Because of our class, the third party has to bear 50,000 as a daily expense for his ear treatment. Yes or no? The third party. Right now, you as a consumer are going to pay 50,000 for him daily. As a producer, do I pay any 50,000 for him? No, neither you nor me. If we pay also, right, it will not be included in my salary nor included in your fees. Yes or no? If you pay, do college reduces the fee? No. If I pay, do college is going to provide additional salary for me? No. That means market price will not include these externalities. Nobody are ready to compensate them. Yes or no? Nobody are ready to compensate them. So, third party. Third party is external to the market. External to market, not compensated, nobody will give that compensation. External to the market, not compensated, okay. That means not included in market price. For the third party, he is external to the market, not included in the market price, and no compensation will be provided for him. That's it. This is the reason. Right. Is it a negative effect on the third party or positive effect on the third party? Because of my class, his ear was bleeding. Yes or no? Right. Is it a positive effect or negative effect? Negative effect on third party. The negative effect on third party is known as external cost. Negative effect on third party is known as external cost. Just imagine one temple is there near to my class, right? One lady brought an old age person where all his parts became dumb. He could not even stand, sit or shake his any of his body parts, right? She brought him in the wheelchair to the temple and she is making some rounds around the temple or some, right, she is offering some prayers to the God in the sense by bringing him to the bringing him to the temple. Right now my class is audible up to the temple, right? He is listening to my class. First his hands are shaken, next his legs are shaken, later he is able to stand, he is able to run, he is able to speak, talk, everything he can do. Just imagine that uncle is also a third party person. Yes or no? He is not the part of our class. Yes or no? Third party. but because of listening to my class, he got some positive effects. His ill health was recovered. Yes or no? So we can say that the positive effect on third party is known as external benefit. Right. Will that person will come and offer me crores of rupees? I got recovered. No need of this. You take this money. If he tells me, will I reduce my salary? No, it will not be included in the market price. Yes or no? Right. Like this, we can say that it will not be compensated, or if we take also, it will not be recorded in the books of accounts, and it will not be included in the price of a good. So we can say that simply third party effect may be positive or negative. If it is positive, you have to write it as external benefit. If it is negative, you have to write it as external cost. Clear? Positive means external benefit. The negative means external cost. Why, madam, you are taking external? Because it is on third party, not on internal. Yes or no? Because of my class, if any harmful for you, it becomes internal. Okay. If any, because of my class, if any positive thing happens for you, it is internal. It will be included in the market price. Certainly, it will be included. But it is a third party. For the third party, we have to write it as external. Negative aspects, you write it as cost, and positive aspects, you write it as benefit. That's it, over. Right. Externalities may be unidirectional or reciprocal. Right? Mine is a car garage. Right. First, I'll take one example. Right? I'm running a music class. Okay. And you, the people, see, you started a new CA audit firm just opposite to my music class, and for my music class you are not internal. You, the CAs, are not at all internal. Okay, you are not coming to my classes and not internal. For my music class, I don't have any audit work with you, so I'm not internal for you. We both are external to each other. You are an audit firm. Mine is a music class. Okay, we both are external to each other. Okay. When you are doing some work in your audit firm, verifying the papers, inspecting the papers, signing on the papers, whatever it may be, your work is going on, right? Because your work, do any disturbance for me? No, no problem from your audit firm. Because of my music classes, right? If I sing, right? No, don't bother, right? Yes, if I sing, just imagine, right? It will be a disturbance for you. Positive disturbance, feel it, okay? If negative means I can't bear, okay? Right, positive, right. By listening to my music, you have gone somewhere else. I'm going on signing on all the papers without inspecting any properly. Right. Yes. It's a positive effect on you. Yes. If my music really, if I sing means what happens? Right. Just imagine. It is totally abrupt sound, to be open and frank. You can't, it is unaudible. Think like that, ma. Right. You can't even concentrate on the work. You can't do even work also. Yes or no? You have been disturbed by my music. Yes or no? Or my singing. Yes or no? Right. You have been. We both are external to each other. For my music class, you are totally external. Because of my music, your work is totally disturbed. I call it as external cost on you, which is unidirectional. But because of you, I could not affect anything. It is unidirectional. Hope you might have got it right. Right now, yours is a bakery. Mine is a car garage. Right. And your bakery is external to my car garage. And my car garage is external to your bakery. We both are external to each other. Right. Because of my car garage, continuously sounds will be there. It will disturb you. Yes or no? Externalities is there. At the same time, you, the people bakery, you will be adding different kinds of chemicals for fluffiness and several things. Because of things, different kinds of fumes will be discharged. Because of the fumes, my workers in my car garage are getting continuous cough without any break. Right. Just imagine right? Because your chemicals, my workers have been disturbed. Because of my inaudible sounds from the garage, yes, your workers have been disturbed. So we can say that here with the best example that both are disturbed, yes or no? Both parties are external to each other, but both are disturbed, and we call this as a reciprocal. What we call them as reciprocal. If only one party is disturbed among the two externalities, we call them as unidirectional. If both parties are disturbed, we call it as reciprocal. Not only disturbed, we can express in positive sense or in negative sense, right? So over, we can say that third party effect is known as externalities, and they are external to the product and it will not be included in the market price. Negative effect on third party is known as external cost. Positive effect on third party is known as external benefit. And the last one is the externalities may be unidirectional or reciprocal, right? And the last point in this we have to consider, right? I told one example of aluminum factory. Aluminum factory is a producer. Aluminum factory is a producer, right? While in the process of production, some wastage will be there. That wastage has been channelized to the nearby river. Hence, river got polluted. Okay, river got polluted. If any wastage has been channelized to the rivers, if it will get purified or polluted, certainly pollution. This pollution, the river doesn't belongs to aluminum company. It's a third party. Yes or no? Right. What is the sequence of this getting a river pollution? Let's have a look on that. There are some households or consumers. Let us take the households who use that water for domestic purposes. Okay. And there are also some fishermen. Households are the consumers of river water, not consumers of aluminum products. They are the consumers of river water. Consumers of river water. Fisherman became a producer by using river water. Producers by using river water. Nowhere relation to the aluminum factory. These households who are using river water for their domestic purposes are nowhere relation with the aluminum factory. The fisherman who came to fish caught and to resell them at a higher prices and all, whatever it may be, they are the producers, and they don't have any relation with the aluminum factory. So we can say that right now the persons whom we are discussing are totally external to the aluminum factory. Who are they? Households who use river water for their domestic purpose, and fishermen who caught the fish and resell them, right? Just go about with the topic, ma, right? The households who use the water for domestic purposes, by consuming that polluted water, do their health becomes better or become drastic? Different health issues arises, health problems arises. Right. Fishermen, because of river pollution, fish breed will decrease. So fish caught will decrease. As fish caught will decrease, his income will decrease. So he has to face the losses. Actually, we should not say the loss. His income will decrease. Yes or no? This is the effect produced by aluminum factory. Who is the aluminum factory? Producer. Which effect he has given? Negative effect. Negative effect on which party? Third party. Negative production externality on which party he has gave? On households or consumers. He gave negative production externality on other consumers. At the same time, negative production externality on another producer. Yes or no? He is not the producer of aluminum factory, fisherman. Yes or no? Okay. Who starts the externality should be titled in the center, right? If it is a positive impact means write positive, negative impact means write negative. Okay, right. That's it. Ma'am, madam, you told negative production externality because the Negative externality has been initiated by the producer. So you told negative production externality. As these are received by consumers and producers, you called it as negative production externality on consumer or negative production externality on producer. Madam, do negative consumption externalities are there? Certainly, children. Right. Just take the example of cigar smoker. Okay. For the cigarette market, take example. Ravi is, if anybody is Ravi means don't misunderstand. Okay. Here it is Ravi. Right. Ravi is consuming cigar. He is a consumer. Yes or no? And who sold cigar to him will be the producer. So Ravi is a consumer to the cigar market. I am neither a consumer nor a producer of cigar. Clear? I am neither a consumer nor a producer of cigar. I am external to the cigarette market. Ravi smoking in the public place and no traffic police, nothing else, nobody stop him, is going on smoking the cigar. I am passing on that way. Just imagine, right? By inhaling that smoke, I too may be affected with cancer or whatever may be the consequence of disease. Yes or no? Any chronic disease I may be attacked because of inhaling that smoke. I am neither a consumer or producer of cigar market. I am the third party. As Ravi consumed the cigarette, I got externality. Yes or no? Negative consumption externality on others. If I am a producer, negative consumption externality on another producer. If I am a consumer, not to that product, in general, okay, right, negative consumption externality on another consumer we have to say. Ma'am, you are telling only negative, do positive are there? Yes, certainly children. Let us take the example of positive externalities. Right. I am a consumer. I have been attacked with TB. Right. Hey, not really. Yes. Now, I took medicine. I took TB medicine. I am a consumer for TB medicine. Yes or no? I am a consumer for TB medicine. Clear? Right. The person who sold me or who manufactured those TB medicines will be the producers. Yes, those are the producers. I am the consumer and we are internal to this market. Right. You, the students, are neither consumers or nor producers for the TB medicines. Yes or no? Right. Well and good. You are external. I came to the live class. Not this audio, not this online classes or whatever it may be. Right. Network class. Right. I came to the live class. Right. Because of intaking medicine by me, I could stop you, the third parties to the, you are all third parties to the TB medicine market. I could stop you from affecting the diseases. Yes or no? I could stop you from affecting the diseases. Right. So this is a positive effect on third party. So this is known as positive externality. Yes or no? Started by, I am a consumer. Positive consumption externality, right? You are the students of the class. In the class, you are a consumers. Positive consumption externality on students, right? I could stop from spreading the diseases, especially on students. I can even stop that disease to spread on the principal of the campus. Positive consumption externality on students, positive consumption externality on principal. Neither you, the students, nor the principal are the internal to the TB market because nobody have the disease. You are not at all internal to the market. Yes or no? Right. I can write this as positive consumption externality. Students are consumers. Yes or no? In that particular market, I call it as positive consumption externality on consumers. I'll call it as positive consumption externality on producer because principal is not a consumer, he is a producer. That's it, no? Right. So ultimately we can say that how many types of externalities are there? How many types of externalities are there? Two types. Negative externalities, positive externalities. Negative externalities can be created either by the production or by the consumption. So, negative production externalities, negative consumption externalities. Positive externalities may be created by the consumers or producers. Positive consumption externalities, positive production externalities. Hope you can understand. So, totally basically there are only two, positive and negative. If it is positive externalities have been created by the producer, we call it as positive production externality. If it has been created by the consumer, we call it as positive consumption externality. If negative externalities has been initiated or created by the producer, we call it as negative production externality. Or on the consumer, we call it as negative consumption externality. That's it. Let's go to the topic regarding to this. Right? So, externalities may be positive or negative. If they are negative, we call it as cost. If they are positive, we call it as positive. That's it. Benefit. That's it. No? The cost or benefit that are not reflected or included in the market price are called externalities because they are external to the market. Also known as spillover cost, excess cost, third party cost, third party effect, neighborhood effect, or side effects. That's it. No? Why we call it as neighborhood means, okay, if I tell the class, the neighbors will get that type of problem. Yes or no? Not to the universe or not to the aliens who are living in any other planet. Yes or no? Right. It's a neighborhood. Okay. If aluminum factory pollute the river water, that particular river gets polluted. Not the entire international water bodies. Yes or no? So we have to call it as a neighborhood effect and side effect. Like that we can say. Features of externalities occurs only outside of the market, not inside the market. Right. Market mechanism or price. Market demand and supply together fixes the price. So you can write market mechanism or price mechanism. They are not included in the price. The cost or externality is not paid by the parties. It is not compensated. Maybe unidirectional or reciprocal. Maybe positive or negative. Yes or no? Types of externalities. Negative production externalities. Negative production externalities are created or initiated by producers, right? Which imposes. They are telling negative externalities, no? Negative externalities means external cost. So, initiated by the producer which imposes external cost on others. Definitions you can remember very easily. We are having four, no? Negative production externalities, negative consumption externalities, positive production externalities, and positive consumption externalities. Many them will be having doubt how to read this. It's very simple. Created or initiated by. Okay. Which imposes. Right. A common sentence to all. Okay. Right. Negative production externalities created by production. Yes or no? If you write in the verb form, production. If you write in the person form, producer. If you start with the verb form, end the sentence with the verb form. If you start with the sentence with the noun form, you end the sentence with the noun form. That's it. Right. Created by the producer which imposes negative externalities. Negative externalities means external cost, no? May be received by another in the third party, may be a consumer or producer. As we started with production, you have to write consumption or production. Aluminum factory is the polluter. Producer started the externalities. The received parties are households and also fishermen. Households is a consumer consumption activity, and fisherman is a business activity, so production. Right. Negative consumption externality created by as consumption. As it is negative externality, you have to write external cost on others may be received by another consumer or producer. Yes or no? Positive production externalities created by production. Positive externalities, no, you have to write external benefit. External benefit on others may be received by on third party, you have to write. Okay, right. Positive consumption externality created or initiated by consumer. Positive externality, you have to write external benefit on others may be received by another consumer or in producer. Right. You have to write one basic thing. Who initiated this? And the effect will be common on everywhere. Producer and consumer is the common effect. Right. You have to know if it is positive externality, write external benefit. Negative externality means external cost. That's it. You can frame the definitions very easily. You can go with the definition. I'll read one. Initiated in production, negative production externalities, negative externalities. So we have to write which imposes external cost on others may be received by another in production or in consumption. Same sentences you have to write. Initiated in positive production, no? Initiated in production which imposes external benefit on others may be received by another in production or consumption. Example, beekeeper, hive bees, is right. Initiated in consumption which imposes external cost, negative consumption externalities. Same process. Positive consumption externalities. Initiated in consumption which imposes external benefit, positive, no? Right. Immunization or vaccination against contagious diseases like this. Right? Yes. The cost borne by the aluminium factory is known as, what you write, the cost sheet or whatever it may be, we call that cost as private cost. The cost that is incurred by a private factory in a capitalist economy is known as, by a particular firm is known as private cost. That's it, no? Because of that aluminium factory, there was a cost incurred for the households and producers. Yes or no? So, that is known as third party cost, which is not included in the private cost. Do in any your cost sheet or balance sheet or whatever it may be in any of your accounts, have you written anywhere else, children? Compensation not paid to the employees, compensation paid to the third parties. Anywhere you got it? Compensation to the third parties, you never get it. Yes or no? That means it will not be included in the market price. Yes. One individual firm cost will be treated as private cost, and because of that individual firm, third parties get affected negatively. The cost incurred by the third parties is known as external cost. Together is known as one individual firm, and because of him the affected parties, together is known as still individual or society. One individual person, and I took the medicine, right? I could stop the prevention of, I could stop the spreading of diseases to you and all. Yes, no? You and me right now is not an individual. It is a society. Studying about the society is known as social cost. So, what is the formula? Private cost plus external cost is equals to social cost. Private cost incurred by the aluminium firm, external cost incurred by the third parties is equals to societal cost or social cost, we can say. Clear? What is the social cost? Private cost plus external cost is equals to social cost. But we have to know, not all the firm's cost. It is a particular private firm. It is a particular aluminium factory. If we want to discuss that one additional or one particular, you have to write marginal as a prefix. Marginal private cost because of that particular firm, particular households, particular fishermen. Not all the fishermen of the world or not all the consumers of the world. Yes or no? Right. That particular external cost, marginal external cost is equals to that particular society. We call it as marginal social cost. Can you get the formula? What is the formula? Marginal private cost plus marginal external cost is equals to marginal social cost. Hope you might have got the formula. Marginal private cost plus marginal external cost is equals to marginal social cost. That's it. Right? If marginal external cost is 0 because of private firm, there are no external cost only. Then what happens? Marginal private cost is equals to marginal external cost. If there exists a marginal external cost, marginal private cost will be greater than marginal social cost. That's it, no? Right. Same aspect, ma. Because of intake of TB vaccine by me, okay, I'm a consumer. I have to write benefit, not the cost. Yes or no? Because of taking vaccine as a consumer by me, I will incur benefit to myself. So it is a private benefit. Yes or no? Because of intaking of medicine by me, I could spread the disease spreading for you. Yes or no? It is a third party benefit. Yes or no? Right. I write it as external benefit. I and you together is known as society. I called it as social benefit. Yes or no? Clear? Yes, sir. Now we have to know, right? Madam, right. I am discussing about my particular medicine on behalf of me, not all the people. So if we are discussing about that particular person, you write marginal. Marginal private benefit. Because of me, I could spread disease spreading for you, not all the universe. Yes or no? That particular external party, marginal external benefit is equals to that particular society, marginal social benefit. Hope you can understand. That is, marginal private cost plus marginal external cost is equals to marginal social cost. Marginal private benefit plus marginal external benefit is equals to marginal social benefit, right? While drawing any curve, okay, how to draw? You have to keep in mind, that is producer, supply. In a market, who will be there? We are discussing about the market failure, yes or no? We have to discuss about the demand and supply point of view. Producer, supply. Consumer, demand. Right? Producer, supply, consumer, demand. Cost incurs to the supply. While producing goods and services, cost will be incurred. So, you have to apply that. Cost curves are supply curves. What are the cost topics we have discussed right now? MPC, MEC, MSD. That's it, no? Marginal private cost, that is a bond supply, producer. Marginal external cost, marginal social cost. But marginal external cost will not be compensated. So it is not, because it is not included in the price, so it cannot be drawn in the graph. Okay, right. Demand means satisfaction. The consumer expects satisfaction. Satisfaction means we have to take benefit. Benefit means satisfaction only, no? Right. MPB, MEB, MSB. Third party satisfaction also will not be recorded in the books of accounts. So whenever you want to write demand curves blindly, blindly you make a note, MPB and MSB are the demand curves. Whenever you go with the supply curves, you have to write blindly. Supply means cost of production, right? Nothing but MPC and MSC. These are the curves we have to draw. Hope you can understand. Why we are ignoring MEC and MEB? We are not ignoring. It is not possible to show in the graph because y-axis represents price. But marginal external benefit and marginal external cost will not be included in the price. Without y-axis concepts, we can't plot the values. So it is not possible. Right? So we are taking MPB and MSB as demand curves and MPC and MSC as the supply curves. Right. The first topic before us is pollution. Aluminum factory produced pollution, no? Right. Pollution by producer. Pollution by producer, isn't it? Right. Take this. Pollution is a positive or a negative? Negative. Started by producer. Negative production externality. That means certainly what will incur? Economic cost will incur. Yes or no? It is a negative production externality, so economic cost will be there. Do any external benefit they have discussed, ma? They are discussing that negative externalities. Have they expressed about any positive externalities? No positive externalities. No positive externalities means external benefit is equals to 0. Right? As soon as the topic is given, first you have to analyze what's the topic they have given. Pollution done by the producer. So you have to initiate in your mind that is, it is a negative production externality. Negative production externality means external cost will certainly arise third party because it is negative. So external cost will arise. It is a negative externality. So external benefit will be 0. There will be external cost but there will be no external benefit. That's it, no? Right. I'll draw the graph very easily. What are the demand curves? I already told you in the previous topic. What are the demand curves in your mind? MPB, MSB. What are the supply curves? MPC, MSC, which is 0. External benefit is 0. MPB plus MEB is equals to MSP. As MEB is equals to 0, MPB is equals to MSP. First, what they have given? Negative production externality they given. So consider there is an external cost. And next consequence is external benefit is 0. If external benefit is 0, MPB is equals to MSB, sorry. You have to get into mind the demand curve. MPB is equals to MSB. The next one, supply curves, MPC, MEC. As there is some external cost, they can't become equal. Now we have to draw the graph. Before drawing the graph, first you have to know the basic condition. First, because of aluminium factory pollution we got, because of households we got the pollution, because of aluminium factory. The cost of aluminium factory, the demand for the aluminium products, first you have to draw, then we can go for the third parties. Clear? First you have to draw demand curve. Demand curve of a aluminium factory. Marginal private benefit. Supply curve of a aluminium factory. Marginal private cost. So first you have to write about the private. Then only we can go for the society. Because of private individual only third party is getting, and totally we are studying about the societal effect. Yes or no? Right. And this is the output produced by the private sector. That's it now. What is QP? MPC is equals to MPB. That's it now. That's it now. What is QP? MPC is equals to MPB. Right. Next one. We got demand curve MPC is equals to MSP. Right. I wrote. Now, there are some external costs. I need the answer. Right. There are certain external costs. So, MPC is not equals to social cost. Tell me, do cost increases or decreases? Because of the societal cost increase. Because of pollution, that ear bleeding person has to face 50,000 per day. Fisherman is incurring losses. Debit all the expenses and losses. So, it's a kind of expense for him. Yes or no? Because of this, do social cost increases or decreases? Comparable to private cost, because of existence of negative externalities, social cost increases. Yes or no? Because MPC plus MEC is equals to MSC. That's it, no? Say 10. Take any values. It becomes 11. So, we can say that social MSC or social cost is greater than private cost. So, you just draw above the MPC. Okay? You just draw above the MPC. Right? But not parallelly. Because as output increases, production increases, even the pollution goes on spreading. So, write in a divergence mode. And we got new equilibrium. This is the E in 1, EP. Equilibrium of the private sector, and this is the equilibrium of, let us know, which two curves are equal here? MSC, MSP. So, we can write at QS, MSC is equals to MSB. That's it, no? MSC, social cost is equals to social benefit. That is the required by the society. Yes or no? Which output is required to the society? QS, but not QP. Yes or no? Which output is required to the society? QS, but not QP. Yes or no? Right. QS is the equilibrium output of the equilibrium societal output. What you have to write? Equilibrium societal output. We need ES. Yes or no? But we are at QP. Comparable to QS, QP is overproduction or underproduction? Comparable to QP and QS, QP is the private sector. Yes or no? QS is the society requirement. Compared to the society, QP is overproduced. Yes or no? So, on comparison between QP and QS, we can say that QP is, private sector is producing overproduction. Overproduction is a market success or market failure. Either overproduction or underproduction is a market failure. Yes or no? That's it. So, externality is a market failure. Negative production externality is a market failure. Okay. Ma'am, how can you say, ma'am? Let's go. We are at QP actually. Yes or no? At QP, I will reveal. Okay. At QP. Extend the graph if possible. If no extension, not necessary. Extend the graph. Okay. This is MSC. Here we are having MSC curve. And here we are having MPC curve. Or MPB curve. Or MSP curve. Yes or no? Right. Just at QP, what is the position? Social cost is greater than private cost. We can write like that now? Right. Social cost is greater than private benefit. We can write now? Social cost is greater than social benefit. You can write, you can observe. Third point, you can watch it out. Because at the equilibrium point, MPB, MSP, MPC, all are equal. 3 values are there. So I wrote those 3. Right now you can do it. At QP level of output or the output produced by the private sector, we can say that MSC is greater than MPC. Social cost is greater than private cost. That external cost who nobody will bear. So the third party is bearing. It's a negative, yes or no? The next one, social cost is greater than private benefit. It can't be explained. Social cost is greater than social benefit. Anywhere we need more benefit but not more cost. But here we are experiencing cost is greater than benefit for the society. So it's a loss. So we call this area as a dead weight loss. We call this area as a dead weight loss. Clear? Clear? Yes. First what we have to write? I am discussing about the pollution. Isn't it? Pollution is a negative production externality created by the producer. So certainly external cost will arise. There will be no external cost, 0. So first you have to draw the private cost. Private demand curve, that is MPB. Private supply curve, that is MPC. This is the output produced by the private sector. As external benefit is 0, MPB is equals to MSP. As there are external costs, the social cost will be greater than private cost. So you have to draw the social MSC curve above the MPC but not parallelly, divergently. And here the output QS, EP, ES. At QP we can say that MPC is equals to MPB is equals to MSB. No need to write MSB. Right. QS, MPB is equals to, at QS, MSC is equals to MSB. Isn't it? Right. Right. Right now we have to discuss about the private sector. Private sector is overproduced when compared to the societal output. Yes or no? So right now we have to know that overproduction is dead weight loss. To show the area of dead weight loss, we have to know that extend the QP curve. At this point, we can say that MSC is greater than at QP. MSC is greater than social cost is greater than private cost, or social cost is greater than social benefit. Cost is more and benefit is less. So we call this area as a dead weight loss. Sometimes they may give the values also. If they give the values, means go with the area of the shape is triangle. Area of a triangle, half into B into height, base into height. That's it. No, you can do it. Clear? Right? Yes. This is the externality, negative production externality I told you. But government has to interfere, no? Government has to interfere, no? Right. Government introduced some taxes on this, and this was introduced by the ACPGO. So we call them as Pigovian taxes. What we call them? Pigovian taxes. As these Pigovian taxes are levied on the pollution. Yes. So we call them as pollution taxes. All are polluting, but nobody are compensating, and the third party is bearing the cost. Yes or no? Why the third party has to bear? Directly they cannot provide the compensation. The government has to provide ultimately for different reasons. So the government started taxing the pollution based on the right recommendation of ACPGO. Right? We call them as pollution taxes. These pollution taxes, pollution can be made on soil, air, water, nothing but atmosphere or environment. So we also call them as environmental taxes. Right. I'm an aluminium factory. Right now, I'm an aluminium factory. Right. Right now, government came to me or somebody came to me and they charge me Pigovian tax. Right. They're asking me compensation. How can I give the compensation? How to give? By hand? But no. Basically, they should prove me. They should prove because of my firm's wastage only the river got polluted. They have to prove yes or no. After proving, they have to say not only myself are discharging everything waste into the river. Nearby many wastage will be there. I will ask them to prove my percentage of wastage that has been involved in this. It takes several years. After proving, I will tell them, yes, you came with certain disease, maybe inborn disease for you, maybe resistance is less for you. I can claim like that, yes or no? Several loopholes are there in the legislations, yes or no? Judiciary, yes or no? So, nobody can say how much pollution can be done by a particular producer, who polluted, how much polluted, cannot be traced out. So we can't say that this much of tax has to be levied on a particular producer. So the ACPGO introduced a constant amount of tax. So he introduced constant amount of tax. Who introduced? ACPGO. Who has to pay the tax? Society has to pay the tax? No. Who polluted? Private firm. Yes or no? So the private firm has to pay the tax. Yes or no? So the private firm cost is MPC. So we have to add MPC plus Pigovian or pollution taxes. Yes or no? We have to add Pigovian taxes or pollution taxes or environmental taxes of constant amount to the MPC. As we are adding the firm, the curve, new curve, that is MPC plus Pigovian taxes lies above the MPC curve, yes or no, by a constant amount. So MPC plus Pigovian taxes curve will be above and parallel to the MPC. Why it is parallel? Because Pigovian taxes are constant, yes or no? As Pigovian taxes are constant, MPC plus Pigovian taxes just lie above the MPC curve. Okay, right? We have to draw the graph, and we don't know how much of taxes will be ideal. What is the ideal output for us? Among QP and QS, which is the ideal output? QS is the ideal output. At QS level, equilibrium is there, ES. So, okay, we have to say that at that ideal, we will assign a tax or we will levy a tax in such a manner at ideal output we have recovered the whole pollution taxes. So just above to MPC, draw a curve parallel to MPC, above to it MPC plus PIGOV. Parallel, but it should be just above the, it has to connect ES. MPC plus PIGOVN taxes. Right. A, B, C, C dash. Right. What is the total amount of pollution done by the private sector? C dash A. But our economy would collect only C dash C. Still, how much of pollution our government has unable to recover? AC. Why it is unable to recover AC amount of taxes? Because nobody can trace how much of pollution done by the polluter. However, once upon a time, the producer used to quit, are not willing to pay any compensation to the third parties because of its effect. But right now, it has been included in his cost sheet or in his final accounts, wherever it may be. Right now, it will be included in the market price. Yes or no? Right now, he used to escape. He used to skip from paying the compensation to the third parties. Yes or no? Right now, based on pollution taxes has financial charges. Yes or no? So, it has to be included in the financial accounts. So, certainly, it will affect the selling price. So, it will be included in the price. So, we call this approach as a market-based approach. This is the government intervention, and there are several forms of intervention. We can go with the topic according to the material. Right. I am discussing with the externalities topic, isn't it? Right. Presence of externalities cause a divergence between private cost and social cost. If external cost is 0, private cost is equals to social cost. If there are externalities, MPC plus MEC is equals to MSC. At the same time, MSB is equal to MPB plus MEB. Right. Just now I drawn for you pollution, negative production externality. This is the private benefit. This is the private cost. Because of external cost, we got the social cost like this. And this is the area. SEI. E is the dead weight loss. At Q1 means private sector output. At private sector output, marginal social cost is greater than marginal private cost, or marginal social cost is greater than marginal social benefit. That's it, no? This area is the dead weight loss. No externalities from consumption. MPB is equals to MSB. At Q1, that is private sector, MSC is greater than. This socially inefficient and it is overproduction. Society requires Q2, but the private sector is producing Q1. It is overproduction. Right. To correct these externalities, what the government has introduced, two types, Amma. One is direct control and the next one is market-based policies. What is meant by market-based policies? Until right now, many of the externalities were not borne by the producer or consumer, whomever they may be responsible for externality. Right now, it will be included in the price. How it will be included? It will be included on two types. One is in the market-based policies. One is first approach. The second is second approach of market-based policy. The first approach already we discussed. Pigovian taxes are environmental taxes or pollution taxes. The same curve you will have to draw. In addition, one curve has to be drawn. That is MPC plus Pigovian taxes parallelly above to MPC, connecting the equilibrium point of social. That's it, no? This equilibrium point, and you have to draw MPC plus Pigovian taxes. We have recovered A dash, B through taxes from government, but our government is unable to recover A dash, B, C because we don't know how much of pollution is done by the producer. Right? Yes. We can go for the first time. What is the direct control? Right. What is the direct control? Very simple. Government itself can take certain action. The government can prohibit some activities which create negative externalities. Yes or no? The government can prohibit some activities which create negative externalities. The first point is prohibit. This smoking is completely banned in the public places. If they smoke also, right, 500 rupees penalty will be levied on them. So it has been prohibited. Yes or no? Like that. So which create negative externalities, maybe production externalities or consumption externalities. If it is a negative externality, it will be as prohibited or banned by the government. The first one is prohibition. The second one, right, the government will make some laws regarding to this. The first one is prohibition. The second one is law. What is laws? Laws and that to alleviate negative externalities. Madam, do any laws are there? Certainly children, Environment Protection Act, like that there are several acts. One example has been given for you, PL. The third one is, the next one is standards and rules. Okay, how you follow the accounting standards, in the same manner here also we will follow some environmental standards and rules, so that you should emit this much of pollutants only. Beyond that, certain action will be taken, like that they will fix certain limits and standards, that is known as environmental and standards of rules to protect the environment from producers and also different kinds of consumers. Fixing, madam, can we know, right, maximum emission limit. Beyond that you should not emit the pollution, like that. Right. If they exceed the pollution limit, means they have to pay certain penalty, like that. Charging emission fees or penalties, whatever it may be. The next one, PLS, not V, PLSV not. It is a PLSB. B means boards. The government may appoint special boards or special bodies for this purpose, especially pollution control board in the central from the central area, and state pollution control board from the state government point of view, right. You just underline prohibitor, you can get the idea what we have to provide negative externalities that create. The second one, laws has to be made to alleviate the negative externalities. Next, third one, standards and rules regarding to environment has to be fixed. The fourth one, PSLB, special bodies or special boards have to be pollution control board, state pollution control board, like that. Ministry of Environment, a department is there. We discussed about the market based policy, first one, that is Pigovian taxes, right. Second approach of market based policy, and we call this as caps and trade system. That's it. If we study this, almost negative production externalities is over, and we are having only one topic, that is positive externalities. That's it. Externalities topic will be concluded, right? Now, this was introduced by a SPAT scheme. What is SPAT scheme? Perform, achieve and trade. I am discussing with the second approach of market based policy, that is caps and trade system. Caps means, I told you in the previous topic, monopoly power. Price caps means maximum price. Here also cap means maximum only, but what is maximum, what is trade, we have to know. That's it, right. Caps and trade system. Right. So let me take two companies here. Tata and Jio, both are in telecommunication, right. Now, two firms are there, right. Yes, I am the pollution control board. As a pollution control board, just as the firms registered, they have to submit a memorandum of understanding, memorandum of association, articles of association to the registrar. Then their company will be registered. After the registration process is completed, the registrar will issue the certificate of incorporation. Based on the certificate of incorporation, these companies can commence the business. Yes or no? This is the process. While establishing the business, they also have to approach the pollution control board. Through, if it is at the state level or state or central means central, they have to approach and they have to take permits from the pollution control board. Those are known as emission permits. Without pollution, it's not possible to produce. So, I will give emission permits. It is just an example. Don't go with comparison or whatever it may be. In normal language, for your understanding, I am explaining. Right. I am a pollution control board. To Tata and Jio, I gave 5 each. 1 minute. one emission permit can pollute up to 2000 microns of carbon, whatever it may be, the pollutants list will be there like that, right? One emission permit can pollute up to 2000 microns of carbon, right? Now, I will give a maximum of 5 permits. I don't give addition permits. If you, that means Tata can pollute up to 5000 microns, 2000 microns each permit. So 5 is 10. 10,000 microns of pollution can be done by the Tata. Even Jio also can do 10,000 microns of pollution. Yes or no? If either Tata or Jio exceeds the pollution limit, say 11,000 or 20,000 microns of pollution if they have done, what I can do? I can levy penalty. Penalty not on profits, penalties on turnover. It becomes a large penalty for them to bear. Okay, right. But I don't give extra permit and they have to pay penalty. Otherwise, I'll give an option for them. What is the option? I will tell you. Right. What is the option means? These permits can be exchanged between Tata and Jio. Whatever may be the companies, I took only 2 companies. Okay. These permits are tradable. These permits are tradable, right? Tata polluted only up to 4,000 microns. Actual pollution done by the permitted. Tata is permitted to pollute up to 10,000 microns. Even Jio is also permitted to pollute up to 10,000 microns. But actual pollution done by the Tata is just 4,000 microns. But whereas Jio polluted up to 16,000 of microns. Right now, who polluted more? Jio polluted more than the limit. What is the maximum limit to pollute? 10,000 microns. But they polluted 16,000. Right now, Jio company has to face penalty. Otherwise, they can they can purchase from Tata. Right now, Tata is having surplus of 3 permits. Yes or no? Surplus of how many permits? 3 permits. Whereas Jio is having a deficit of how many permits? These permits I told tradable, bought and sold in the market. Just now you can see, right now Jio will approach to Tata and ask 3 permits to sell. Yes, if Tata accepts this proposal and sell permits to Jio, right, who will receive the money? Tata will receive additional. For free, Tata will not give. It will charge a certain price. Till now, all the producers are escaping to pay the external cost because of pollution. Yes or no? Right now, the pollution tax, it is not a tax, but a price has been established for the pollution. Yes or no? They are buying the permits because of making more pollution. Jio, yes or no? Right now, the price is established for a pollution. Yes or no? Right. Say 1 crore. 3 permits, the Tata will sell for 1 crore to Jio. For Jio, it is an additional burden and additional price. Yes or no? Whereas Tata, the 1 crore is a revenue. Yes or no? Because of this, total cost of production for the Tata decreases and the total cost of production for the Jio company increases. Both are in the same market, right? Now Tata can offer at lower prices because its cost of production is less and becomes more competitive in the market. Whereas Jio, with high cost of production, it cannot lower the price, so the competition becomes lesser. Yes or no? Right. Now both the companies will realize. Jio realizes that unnecessary I paid 1 crore to Tata and I made it more competitive than me because of purchasing this. It is better to reduce the pollution rather than paying some amount to Tata. Jio realizes the same. Even the Tata realizes by selling 3 permits, I received 1 crore. If I still reduce permission, if I make it to 1 permit, if I make pollution of only 2000 microns, If I am able to sell one more permit, I can receive additional income. The Tata will also feel the same. So both indirectly feels that better to reduce the pollution. Yes or no? The government is making many efforts to reduce the pollution, but when the price has been established, they struggle, tug of war runs between each of them to reduce the pollution. Once upon a time when there was no price for the pollution and no need to pay the compensation, nobody cared for that. Right now, each and every firm will struggle with this situation by fixing caps. Maximum number of permits, how many I have given? 5. Yes or no? That's why I told caps. And these permits can be traded. So we call this as caps and trade system. What are these permits? Emission permits. These can be traded. So we call them as tradable emission permits. We call them as tradable emission permits. Okay, right. While explaining the answer, I use the Tata Geo so that you can easily understand. Right? Establishes the price not directly. I didn't establish any price as a pollution control board. Yes or no? Because of scarcity of permits, Geo established a price. Yes or no? Right. Indirectly through which permits? Emission permits. What that emission permits can be done? Traded. Yes or no? Tata is selling and Geo is purchasing. That means tradable emission permits. These are marketable licenses. We can call them as permit or license. Pollution license or pollution permit. To emit unlimited quantity of emission? No. Limit, I told just 2000. It's not at all there. I just an example. Clear. Emit limited quantities of pollutants and can be bought and sold in by the polluters. Yes or no? These are traded among the polluters, not between producer and consumer. Yes or no? It is under PAT scheme. Under this method, each firm, Tata and Geo, each have fewer permits specifying, only 5 permits I have given, specifying number of units of emission. I told 10,000s of microns of pollution can be done each of them. Right. These permits are transferable. Right. I told that you can purchase and sell between yourself, but I am not going to ready to give new permits to anyone. Right. If a firm generates emission above the limit, Geo limited above the, emitted above the limit, yes or no? It has to penalize in a large amount. Allocation of fewer permits. I gave only 5 permits. I am not giving unlimited permits. Yes or no? Fewer permits creates a shortage of permits. Yes or no? So, price for permits establishes. So, price for pollution has been started. High polluters. Geo buy more permits from Tata. So, cost of Geo rises. So, Geo becomes less competitive and Geo becomes less profitable. Right. Low polluters means Tata. Tata receive revenue by selling the surplus permits. Tata becomes more competitive and more profitable. Therefore, firms will realize that they want to reduce the pollution to become more and more and more and more competitive. Yes or no? Tata still it wants to sell one more permit, it wants to increase the revenue. Geo, it wants to reduce the additional cost, so it wants to reduce the pollution. For every system, there will be arguments, favor. You can do in the consequences. There is a flexibility in this system. And who will be less polluted, who pollutes less, they will receive certain reward. And who pollutes more, they will have to pay. And more pollute, more taxes, like that it is there. It's not a complete remedy. It is an argument. We have to bear additional cost, like that. Some arguments are there, some benefits are there. Just by watching the sentences, you can do of your own. Advantages, consequence, impacts and disadvantages, all these we have to do on our own in the professional courses. You can do it. Innovations will start to reduce the pollution. It's supposed to impact, yes or no? All these aspects you can do. Right? Subsidy has been asked in the previous exam. Right now it will be wasted for you if I discuss the topic. The last exam only we got subsidy. Right? That's it. Right, I'm going with the explanation. What's the topic we have discussed? Externalities. What are the chances for we asking these questions? In the externalities, what is the definition? Along with other names. spillover effect, third party effect, neighborhood effect, side effect. The next one, features of externalities. What are the features of economics? Exist outside of the price mechanism, not included in the price, not compensated. Next, maybe positive or negative, maybe unidirectional or reciprocal. That's it. 4 are the features. For 2 marks, there is a chance to be asked. Next, how many types of externalities are there? 4 types of externalities are there. What are they? Negative production externality, negative consumption externality, positive production externality, and positive consumption externality. Yes. Over. The last. And we discussed only on negative production externality topic. We discussed only on negative production externality topic, that is pollution. We discussed about the graph and deadweight laws regarding to this. After that, government intervention to correct negative production externalities. It can be done through direct control. Direct control, I asked you to remember PSLV. What is P? Prohibition. Right. S. Standards and rules. L. Laws. PLS we know. Right. B. Boards. Special bodies are boards. Pollution Control Board. Law means act. Standards, emission limits, like that. Right. Market-based policies. Market-based approach. In this market-based approach, we are having 2, I told you right now. The first one is Pigovian taxes. I told you the graph. That Pigovian taxes, also known as first market-based approach or first approach of market-based policy, also known as environmental taxes, also known as pollution taxes. That's it, no? Right. It's a graphical representation and you have to write its consequences accordingly. Right. The last one, second one is second approach of market-based policy. In this, we are having caps and trade system. Okay, limited emission permits will be provided so that not only that they can be bought and sold by the polluters, so we call them as tradable emission permits, right? Because of scarcity of permits, there will be a price for the pollution, right? Who pollute more or who less pollute? Less polluters will be rewarded, more polluters will be, it's a disadvantage for them. This is the topic what we had discussed, and we are having only 2 topics in this, right children? Don't get confused. In your board material, how it will be means, part A, market failure. In the chapter of market failure, you will be having monopoly power or market power. In the next chapter of government intervention to correct the market failure, in that topic we will get market failure, how the government can control. So the same topic is provided at 2 different parts in the material. I am clubbing right now for the convenience sake. Okay. So we completed totally regarding to the monopoly power or market power, causes, and also how the government will take the action in 2 units. Okay. At the same time, externalities and the government intervention to correct the externalities also we had explained. And right now before us we are having only 2 concepts in pending. That is, one is public goods and the last one is incomplete information. With this we can conclude the chapter. Those 2 are basics for us, right? Right? First, I am going with the classification based, public goods classification based on rivalrous and non-rivalrous, excludability and non-excludability. Then only we can do all the things very easily, right? I am going with this topic, right? First, let me say rivalrous and non-rivalrous. Consumption by one person reduces the consumption of another person is known as rivalrous. Okay, right? You are all listening to the class by sitting in a chair, right? You are consuming that chair. If another person comes and occupies the same chair along with you, will your place increases or decreases or remains constant? Decreases. So we can say that it is a rivalrous. Yes or no? Consumption by one person reduces the consumption of another person. Yes or no? It means rivalrous. Consumption by one person does not affect or does not reduce the consumption of another person. We call it as non-rivalrous. Let me take the examples. You, the students, will be sitting in a bench in a class. Yes or no? The accommodation of each bench are 4 students. If a 5th student comes, means the 4 students' place will decreases. Yes or no? 6th student, for 5 students still the place will decreases. 7th student still the place decreases. That means we can say that consumption of one more person reduces the consumption of another person. Yes or no? This is rivalrous, right? We can do one thing. In the lunch break, okay boys, right, in the lunch break, we can do one thing. We can all go out, okay, in the summer, in the month of April, May, we can do one thing, right? Just you all the boys at a time, okay, at a time, watch out the sun. Watching sunlight by one son reduces the sunlight effect on another student. Watching by one boy, okay, watching the sunlight, all the students at a time, by one boy, sunlight, does it reduces the effect of sunlight to others? No. It becomes non-rivalrous. What we have to say? Non-rivalrous. Consumption by one person does not reduces the consumption of another person. Hope you might have got the meaning regarding to the rivalrous and non-rivalrous. That's it now? Right. Next one. Excludable and non-excludable. It can be expressed in many ways, but as it is a last minute batch, it takes a lot of time to be expressed. I am going with a simple way. The product which has price will be excludable. The product which has no price is non-excludable, right? I went to one jewelry shop, right? I purchased this ring, okay? I purchased this ring. I went to jewelry shop, right? Is this ring has a price or free good? Price, right? I selected it. I asked him to pack. He gave the bill, okay? He gave the bill, right? If I don't pay the price, will I be included in the market as a consumer? If I don't pay the price of this ring, will I be included as a market in the consumer? No and never. I cannot become a part of a market. Excluded from the market, yes or no? The good which possess a price or the service which possess a price, if they don't pay the price, any consumer will not pay the price. What happens? They are excluded from the market, yes or no? So, the product which has price will be excludable, right? Non-excludable, right? You take the example, I am walking on the road, not on national highway. On national highway, if I go by walk also, no need to pay anything, toll gate, right? Now, I am going by walk, ma. Do any person will object to pay money for the, you should not walk on the road, you have to pay certain money for it. The road has no price, and don't go for the exceptionals, that is a toll gate like that. On the normal roads, I am walking, okay, right? Do anybody can stop me by using that commodity? No, it has no price. Nobody can object me and nobody can make excludable. Yes or no? It is non-excludable. Children, very simple. If price is there, it will become excludable. If no price is there, it becomes non-excludable. That's it. Right? I am going to take with 2 examples so that you can understand very easily. Right? And this is the ring. I told you right now in the example. I am going with the ring, children. So right now I took the example of road. Hey, it's not a ring road. Separate ring and road. Okay. Now, the first one. Is this a private property or this ring belongs to all of the country? Roads belongs to all of the country. But this ring belongs to me and my family members, but not the others. Yes or no? It has individual property right. It has individual property right, isn't it? It is a collective good. It is an individual good which is having individual property right. It is a collective good. No person having complete right on that. So, it is subject to externalities. Nobody will care for that. Okay, right. And this good, right, rivalrous or non-rivalrous? Consumption by me reduces. Do another person can also can use at the same time this ring? No. Yes or no? So it is rivalrous or non-rivalrous? Consumption by Vasudha of this ring reduces the consumption of my family members of this ring. Yes or no? Right. It is rivalrous. Road. Rivalrous or non-rivalrous? Consumption by one person does not reduce the consumption of another person for the road. And don't take the example of traffic congestion. Normal times you have to feel. Right. Normal times you have to feel. Don't go for the exceptional cases. Right. Now, do this has a price, children? Yes, it has a price. If it is a price, if I don't pay the price, I will be excludable. Yes or no? So it becomes excludable. Has a price. Price means there will be demand, there will be supply. Yes or no? Demand and supply together is known as market settings. Okay, to have the same ring like this, additional resource cost is required. Along with me, my family members also wants to keep the ring. Along with me, my family members also wants to keep the same type of ring. So we require additional resource cost. Yes or no? Additional resource is required. Okay, all of us we all can't keep. Yes or no? Right. So we require additional resource cost. Right, just imagine, children, if there is a price, certainly the good becomes excludable. If there is a price, certainly there will be a market settings. If there is a price, certainly there will be additional resource cost. That means additional resource cost is positive, better to write positive additional resource cost. Okay, and the last point in that, additional resource cost is positive. The last point, free rider problem. What is free rider problem? Let others pay. I went to the shop, right? Everything billing is over. I asked them, let others pay the bill. Do anybody will accept? I went to the hotel, consumed very good, right? I will ask others to pay. Do any others will pay? No, it is not possible. Yes or no? There is no chance of free rider problem. That means no free rider problem. Just imagine when there is a price, certainly there will be a excludability, certainly there will be a market settings, certainly there will be a demand curve, certainly there will be a supply curve, there will be an additional resource cost, but there will be no free rider problem. Let others do. We can't do this. Yes or no? Right. Now, road has no price. Road has no price. Yes or no? Right. Nobody can object from using that without paying. Yes or no? Without paying, right, daily we are using. Yes or no? Right. It is non-excludable. We are included. We are not excluded from the market. We can use that. When there is no price, it cannot show demand curve or supply curve. Demand and supply together is known as price. So we can say that no market settings, no demand curve, no market settings. Right. I and my family, we want to move at the same time on the road. Separate roads are required. One after one. If I move, later the government will levy new road. Later my husband, later my family members, everyone. No. All we can use simultaneously, no. That means additional resource cost will not be applicable for the public goods. Right. Additional resource cost is 0. No. If the same ring we want to use all of it once means we have to purchase another ring. If all we family members wants to use the public good means there is no need to have separate. We can use commonly. So there is no additional resource cost. Yes or no? Right. Additional resource cost is 0. Okay. Free rider problem. If a road is laying, I'll go to the contractor. Please accept this crores of rupees. You go and levy the roads. No, we don't give. We feel that let government pay. Let the rich people pay in the form of taxes. We skid. Yes or no? We skid or we escape. That escapism is known as free rider problem, right? Certainly there will be free rider problem. All will feel that let the government pay, let the rich people through taxation can pay, why do we feel bother and all? So there will be free rider problem exist. Okay, just imagine excludable thought if you get into mind. These points have to write in common sense. That is, price exists, demand exists, supply exists. That means we can say that market settings also exist. Additional resource cost will be there, but there will be no free rider problem. If there is no price, right, it is non-excludable. Okay, no market setting, no demand curve, and no additional resource cost, but there will be a free rider problem. Let others pay, let others do at the cost of others, right? That escapism is known as free rider problem. That process is known as free riding. That person is known as free rider. Clear? Okay, right. So, hence, we are having 4 types of public goods. Hence, we are having 4 types of public goods based on rivalrous, non-rivalrous, excludable and non-excludable. They are category A, category B, category C, category D. What is category A? Rivalrous and excludable. That means consumption by one person reduces the consumption of another person, ring. Right, excludable, price is there, ring. So we call this as pure private good. That's it, no? We call this as pure private good. Right, category D, non-rivalrous, non-excludable, road. All we can use are non-rivalrous, non-excludable, and we call them as pure public goods. Until there is no congestion, they become pure public goods, right? And we are having only BC, okay? BC over before LPG, after LPG over before, right, before economic policy, after, right now, before, right now, in the next not next generations, in our generations only, by the next editions of all materials, we are going to say before Corona, after Corona, yes sir, no? Right, it's not before Corona, it is B, C, category B and category C. And what is category B? Let's go have a look on this. Right, category B. Category B means, you remember B and R. B means category B, R means rivalrous. In another feature is non-excludable. That is non-excludable and rivalrous. Okay, right. Ma'am, that type of goods are there, non-rivalrous are there, sorry, non-excludable, no price, but they are rivalrous. How, madam? Right. You can take the example of atmosphere. Atmosphere example, atmosphere can be used by all the people in common. So, we call them as common resources or common access resources. Common access resources, I am taking the example, right. Let's go for the shipping, fishing, right. Let's go for the fishing on Sunday after the college reopens, right. Do one thing, if more number of students, there is no need to pay any price to the river, or fish mother, or fish father, fish sister, there is no need to pay, no? Right. Okay, up to that point, it is non-excludable, right. Okay. If more number of students goes for the fish caught, what happens? Fish caught per each person do increases, remains constant or decreases? Certainly decreases. We call it as rivalrous. Yes or no? Even for the forest, for the wood's sake, if we go, what happens? Certainly consumption of wood per each person will decreases. Yes or no? There is no need to pay any price for the tree, or who planted the tree, who watered to the tree. Not necessary. Can you get this? Atmosphere is the best example for that. Category D. Category C, just opposite to B. The possibility is one, probability is only one here. That is, here non-excludable means it gets excludable, price is there, but non-rivalrous. Madam, it is not at all imaginable. How it is possible? Price is there, but non-rivalrous. Yes, you take the example of cable connection. Price is there, no? But non-rivalrous. If more number of connections has been taken, no sound disturbance or no audio or video disturbance to anyone. Yes or no? Yes or no? Right. Right. Example is known as club goods. Club means not that kind of any entertainment providing goods will be considered as club goods. Swimming pools. Right. Cinema theaters. Ma'am, you have to see when the cinema first day release like that, there will be non-rivalrous. We have to stand and watch. Children, we have to know one thing. No cinema theater or no music concert or no any private travel buses or swimming pools or cable connections. They should not provide even one additional connection or one additional ticket or one additional person to allow rather than the limit. Beyond the limit, if they take, the government will take action. Madam, never we saw that type of action. I can do nothing. Okay. But it is the condition there. No cinema theater should issue one extra ticket also. It is entertainment. Yes or no? So, no additional ticket will be provided. So, no rivalrous will be there. Non-rivalrous only, no? But entrance fees is there. So, ticket is there. Price is there. Excludable only, no? Excludable and non-rivalrous. Even for the swimming pool also, this persons for 4 feet, for 6 feet water, right? Trainers, how many should be there? As helpers, how many should be there? How many at a time the swimmers we can allot? Like that, some conditions will be there. Beyond the limit, madam, how could we know? Yes, there will be a chart regarding to this. You can know all these things. So, we can call this club goods. Ultimately, we came to know that there are 4 categories of goods. Yes or no? A, B, C, D. That's it, no? A. What is A, children? Right. Pure public goods. What is pure public goods? Non-rivalrous, non-excludable. When there is non-excludable, what you have to write? No price, no demand curve, no market settings, additional resource cost is 0. Sorry. It is category D, pure public good. Yes or no? Right. Sorry. Right. Additional resource cost is 0. Free rider problem exists. For 2 marks more than enough. Right. Category B. Category B I told BNR. Common access resources. Environment is the example. Let us take. N means non-excludable, non-rivalrous. R means rivalrous. N means non-excludable. Non-excludable means no price, no demand curve, no market settings, additional resource cost is 0. Free rider problem exists. Because of free rider problem exists, one big problem is there here, tragedy of commons. What is this, madam? As environment is non-excludable, there is no need to pay price for this. As price mechanism is absent, our price is 0, market setting is 0 for these goods, especially common access resources are category B. What happens? Many of the people are overusing these goods. If we go for the fish cart, I told you no need to pay any price. Yes or no? We caught more and more and more. If you want, we will use, otherwise we will throw wastely. So, fish breed one day or the other day it gets reduced. Yes or no? Right. In many times we are using extraordinarily more timber or wood from the forest because there is no need to pay any price for that. Yes or no? So, we are using more and more and more and more of the nature. We are making those resources to get exhaustible. Yes or no? One day or the other day or fine morning, we have to face global warming. Already we are facing, still it may become more severe. Global warming, ozone layer depletion, as greenhouse effect. All this we are facing because of overutilization of resources. Each and every common person is facing. That is tragedy of commons. Though we know that this is a main responsibility of each and every citizen, each and every government of the world, of all the countries of the world, then also let others do. Let others pay. Free rider problem exists. I told you, no? Our country feels that, let other countries follow. Other countries feel that, let other countries follow. In this manner, everybody are escaping from protecting the environment. This is the category B. The third one is category C. I told you, It is rivalrous means it becomes non-rivalrous. It is excludable means it becomes, non-excludable means it becomes excludable, right? You can write the features. Excludable means price exists. Certainly market demand curve will be there. Market settings will be there. Additional resource cost will be there. Additional resource cost is positive. Certainly there is no free rider problem. If price is there, we can't go and eat and say, let others pay, right? No free rider problem. Club goods. You can write entertainment point of view, whatever the examples you know, you can write it, okay? Right. The last one is category A I have to write because initially I wrote D. Category A is pure private goods. Pure private goods. In this pure private goods, we can say that excludable and rivalrous, right? As excludable, price exists, market demand curve exists, market setting exists, additional resource cost is positive, no free rider problem, and these goods are pure private goods. In addition to these goods, in our syllabus we are having two more goods. Let me complete, that is quasi-public goods. This question has been asked and no chance to be asked once again. Quasi-public goods and also global public goods. These two goods are there. What else called? We are having quasi-contract. Though it is not a contract, it appears to be a contract. We call it as quasi-contract. Yes or no? Right. In the same way, it is a quasi-public good. Though it is not a public good, it appears to be a public good. Ma'am, do any goods are like that? Yes, certainly children. The basic two quasi-public goods in any economy of the world are only two. They are health and education. May we know the specialities of this? Certainly. How can they become the quasi-public goods? You know the reason. You should know the reason. Yes or no? Right. Because they are having the features of private goods. That means excludable, rivalrous, everything. They are having the features of private goods. But benefits of public good. Benefits of public good. What is meant by public good? What is meant by private sector? What is the aim of the private sector? Social welfare. Yes or no? Social welfare. Though there is a price, though there is a rivalrous, but we are following the concept of social welfare. How can you make it appropriate, madam? Very simple. Right. Our college, any hospital, it's not a government hospital. You take the example of any private college or any private hospital. First, take the example of our private college itself. Right. We do accept fees from the children. That means there is a price. Excludable. Yes or no? Right. More students comes means it becomes rivalrous. Yes. Yes, we are having features. But as a faculty or as a management or as a host of right now online classes or non-teaching staff, whomever they may be, we want the welfare of our students. Yes or no? The students should get good marks, pass marks, they should get the ranks and they should well settled in their economy, well settled in their career, life, everything we feel. Do we ever feel that they should fail, they should not be right, we want to abuse them, we want to dominate them? Do any faculty or any person in the college premises, nobody will behave. We want welfare of our students, yes or no? Though we accept money, though it is rivalrous, whatever may be the features of private sector, but we want the welfare of our students, yes or no? We want the utmost, that means the most better, the most highest place, zenith place we want to see our students, yes or no? Right. So we can say that though it is a private sector good education, private sector colleges, private sector schools, corporate schools, whatever it may be, yes, we want to promote the welfare of the students, yes or no? The second point, hospitals. Many human beings claim the hospitals regarding unnecessary test, but sometimes it becomes necessary. Not all the times we should claim the doctors. Sometimes it is necessary because prevention is better than cure. At most stage, if we go also, doctors can't give treatment. Yes or no? Whatever it may be. They take money. Yes. Additional expense. Yes, they will charge everything we can accept. But one thing you have to remember, children, no doctor wants the patient to die. He wants every patient to recover and go with happiest moments, but not with the worst, with the dead bodies. Yes or no? Our hospital need my patients to get recovered as soon as possible with my treatment. Yes or no? No hospital will feel that patients should die, must die like that. No hospital, private hospital will feel so, because I am discussing right now about the private hospitals. Yes or no? Right. Though educational institutions and hospitals of private sector both they are uttermost private only, profit motive only, but we also follow the welfare of the students in the colleges, welfare of the patients in the hospitals. Yes or no? So we call them as a quasi public good. They have so those benefits we can't express, virtual infinite benefits. Just imagine no pains in your body, no pains, no throat pain or back pain, stomach pain, headache, whatever it may be. Yes, you don't know the what is the loss, because of that you can't feel pain. Yes or no? That you'll be very happy. That is the virtual benefit. We call them as virtual benefit. Yes or no? Because of education and knowledge, we will be earning, we will be having a good position in the society. Yes or no? That's also the benefit we can't express, but we can feel so. Yes or no? That's known as virtual benefits. These are virtual benefits, but one thing, this has to be provided by both public and government. So we are having in all so-called developed countries to undermost underdeveloped countries, each and countries are having government schools and hospitals, private schools and hospitals. Why, ma'am? Both are necessary. Only the government cannot provide to the whole population. It becomes underproduced, market failure. Only the private sector also can't produce. If they produce also at higher prices, it will produce. So many of the people cannot consume. It becomes under-consumed. So to avoid the market failure in this aspect, our people request, not only our people, the citizens of many countries request, don't let these goods only to the private sector. Don't let these goods only to the private sector. If it left only to the private, it becomes market failure. Only if it left to the public sector, it becomes market failure. That's what they are saying regarding to the quasi-public goods. And the last one is global public goods. The goods which are used globally and public goods. That means no price, non-rivalrous and non-excludable nature only we will see. But these goods are explained by two persons. One is WHO and the next one is World Bank. With this we can conclude the topic of public goods. Right, we can discuss the material itself. Right, here we have provided certain key terms for you children. Right, what is, if you want to rivalrous, you can present even what is the meaning of rivalrous, non-rivalrous, excludable, non-excludable, additional resource cost. These are the goods which we are going to discuss here. Goods in category A, individual property rights, rivalrous in consumption, excludable. Excludable means I wrote price exists, market demand curve exists, market setting exists, additional resource cost is positive, no free rider problem, like that. So category B, I told you the tragedy of commons. Yes or no? Right. Category C are club goods, cable connection, cinema, swimming pool, non-rivalrous, excludable. Category D.
Hello students, so far you have watched sample RRB videos. If you want to watch further parts of the RRB videos, you have to install Masterminds online classes app. Now let me show you the procedure of installing Masterminds online classes app. The procedure is very simple. You just click on the Play Store. Once you click on the Play Store, now you type here Masterminds online classes. If you are an iOS user, you have to download Class Plus app and you have to install our organization code MJetGun. Now you click on install here. Now the app gets installed into your device. Now once the app gets installed into your device, you just click on open. Yes, I am just now clicking on open. Once you click on open, the Masterminds online classes app opens here. Now you enter your mobile number here. So once you enter your mobile number, you will be sent an OTP. Enter your OTP. And click on verify OTP. Now the process is over. Now the Masterminds online classes app gets opened. Now you click on the three lines in the above top corner and you select the study material section. In the study material section, you can find videos. You click on the videos and now here you find all the free resources that are there. Now here in this part you can see the remaining parts of the RRB videos. All the best. Thank you.